Testing. Are we live? Wait for it. There it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel if you ever miss anything. But, ladies and gentlemen, it is Jerome Powell day. We got Jerome Powell at 2:30 for the press conference, 2 p.m. for the release. You also have a lot of other economic data. We'll be getting some real estate stuff, but literally Powell is going to be the most important. However, we still got big earnings. You got Facebook after hours. You had Google and Microsoft actually end up doing positive based on their guidance. So a lot of big after hour moves. Spotify did good in the morning. Even Boeing ended up doing good. So right now hasn't been too many shockers. Shopify ended up doing bad. So we'll see how that plays in. But like we said, the earnings after hour will be key. Then you got Powell, and then you even got I think tomorrow, Biden's meeting with China. So we will see. We will see. But Chatadonia, you've seen these days. You know what's going to happen. Powell's going to bring the volatility. So I hope you're ready. And good morning. Oh, yes. Good morning, Chatadonia. What's up, Sandkit? What's up, Evan? Mr. Orman, Mr. Mosby, Luke Collins, Amari, Mr. Fulbright, Usha, what's up, baby? How you living? Richard Knapp, Laurie, good morning. Good morning, Jamar, Mr. Malone. Oh, good morning, baby. How you living, Dean? You living good, Marlo? What's up, JM? Oh, you know, Carissa got the berries. You got to bring the positive berries. They don't know about that life. Amen. Amen. Sean, good morning. Leon, El Chapado, good morning. Oh, what's up, Twitch? What's up, Joe Back Horseman? My man, CEO Azim, Oscar, Khaki Boat. Oh, Don Gabriel, 99 Nerds, Charlie in the tree. Oh, good. Where is it at? Where is it? I need it. I need it in the morning. Good. You guys woke up. Oh, that's how you wake up in the morning, you know? Nothing like a to get you. Oh, just it hits. So how many of you? I hope you got your little spark today. Oh, yeah. I didn't forget. Yeah, I didn't forget Chatadonia. So I hope you guys are locked and loaded. I hope you're ready. Let's make it a good one, and let's get to the news. The Fed, they look set to hike rates by 75 basis points again today, and any surprise may roil markets. The question is, what's next? With no dot plot, investors will parse this statement, and Jerome Powell's comments, charity clarity may be lacking, reflected in the near record relative cost of hedging volatility in 2-year rates, the most sensitive to policy changes for now. Traders see about 100 basis points more this year, not today, just 75. Futures were boosted by earnings cheer, but Meta may sour the mood after the bell with the slowdown in ad spend. Qualcomm will give investors a view in the smartphone market that's losing steam. For now, the focus is on Alphabet, Microsoft, and TI, which delivered double-digit revenue growth and optimistic outlooks, sending up shares pre-market. Benchmark treasuries rose and the dollar weakened in the countdown to the Fed's widely flagged policy decision. European stocks with banks outperforming. Oil advanced as API data signaled a drop in U.S. inventory. And I didn't see it anywhere today when I read, but apparently Gazprom cut off gas to Europe through Nord Stream. So that is floating around there today. Credit Suisse traders posted their worst first half in more than 2 decades, setting the stage for an overhaul by new CEO over at Corner. Revenues in fixed income and equity sales fell, and trading were both down about a third. Deutsche Bank scrapped an efficacy target and lowered guidance, but reported a trading rally and strong performance at the corporate bank. Boeing beat on free cash flow and said it expects that metric to stay positive. It's working with the FAA on final actions to resume 787 deliveries. Spotify will cut hiring growth and took a $31 million hit from the decision to stop making an in-car hardware device, but it did keep growing With MAUs coming in above estimates, shares rose. Shopify slumped after results that missed. It also said the outlook is getting worse. Bristol Myers, they beat on profit and revenue and reaffirmed its earnings guidance. Kraft raised its outlook and said higher prices are making up for fall in demand. Away from earnings, Spirit shareholders vote today on the Frontier deal. Cathie Wood's fund dumped Coinbase stock for the first time this year. Twitter shareholders will be asked to vote on Elon's offer at a special meeting on September 13th, amid questions about whether the deal will go ahead. Chip sales are slowing more than expected and will fall in 2023, Gartner said, bringing an abrupt end to a boom cycle. Global semiconductor revenue will rise just 7.4% this year. The firm said about half of what it predicted 3 months ago. It pointed to slowing PC shipments and smartphone sales. Blue chip companies that need to borrow in the U.S. are increasingly relying on commercial paper. The total amount of these IOUs outstanding has mushroomed to almost $1.2 trillion this year. Wheat and war. The global crop market is turning to North Dakota for a first look at the U.S. spring haul. Early signs from the first day of Wheat Quality Council tour are mostly positive, with the estimate for yields up almost 20 bushels an acre year on year. Abroad, UK grains may export. The exports may resume within a week, Turkey said. Details on how Ukrainian farms and companies will need to rebuild under fire if the country is to end its fight on its own terms. Joe Biden will speak with Xi Jinping tomorrow. People familiar said it comes at a difficult time for U.S.-China ties, as Nancy Pelosi and the White House aren't ruling out plans to visit Taiwan next month. To add to regional tension, North Korea warned of a second Korean War on the anniversary of the armistice that ended fighting 69 years ago, blaming the U.S. and South Korea for belligerence. Global green bonds may post their first month of positive returns in a year, beating broader debt. Today, 10 a.m., U.S. June pending home sales, 10:30, U.S. EIA inventories, 11:30, $30 billion of 119-day bills, 1 p.m., $24 billion of 2-year FNRs, 2 p.m. Fed rate decision, and 2:30, Jerome Powell, baby. Earnings include Meta, Qualcomm, Equinor, ServiceNow, Equinix, Ford, O'Reilly, Lending Club, and EQT. The DOJ is using a grand jury in Washington to investigate efforts by Donald Trump and his inner circle to create a false electors and pressure on Mike Pence to overturn the election. Chuck Schumer told a group of donors he doesn't believe there are enough votes in Senate to pass antitrust legislation intended to sap the power of large tech companies. Sentiment is softening across Europe and Germany. The GfK consumer confidence gauge for August was worse than expected at negative 30.6 versus a revised negative 27.7. It's the same story in Italy and France, where consumer confidence dropped in July to 94.8 and 80 respectively. The euro area is probably already contracting, Goldman said, and the downturn will probably last until the end of the year. A national rail strike kicked off today across Britain, adding to travel chaos. The walkout comes before UK-wide industrial action by the RMT and 2 other unions in coming weeks. Chinese banks are lending to each other record amounts even as returns shrink, pointing to their reluctance to extend credit and the limits of monetary stimulus. Beijing is welcoming back direct inbound passenger flights from overseas for the first time in more than 2 years as China eases part of what is still the toughest pandemic border regime in the world. Still, a district on the outskirts of Wuhan has been locked down. The first time the Chinese city saw that, the world's first COVID lockdown was imposed as a measure since 2020. Aramco may hike crude prices to Asia to a record for September, even as traders see the scope for a weaker spot in the market following this month. It's expected to set Arab light OSP at a premium of $10.80 a barrel based on the national benchmark, up from $9.30 in August. European natural gas futures extended a scorching rally as supplies through Nord Stream fell to just 20% of capacity. Gazprom can't guarantee volumes if imported equipment can't be serviced because of sanctions. Russia said copper rose for a 4th day, while aluminum retreated and precious metals advanced. Crop futures rose. The CD&R is planned sale of Motor Fuel Group for €5 billion is stalling as bidders falter over the asking price. PE firm Serbia's plans to sell its Spanish debt service company Haya Real Estate. Atos secured $1.5 billion of financing to fund its breakup plan. Alibaba may attract at least $16 billion of Chinese money by shifting primary listing to Hong Kong. Ukraine's Naftogaz to offer new deal to bondholders urgently. Taiwan logistics firm Morrison said to weigh $1 billion sale. And Blackfin is said to mull sale of claims manager CED Group. PayPal surged pre-market as a report of Elliott built a stake and a push to accelerate cost reductions. Visa's quarterly spending on the network jumped 8%, buoyed by overseas travel. Company will also give annual raises to junior employees earlier to help with inflation. T-Mobile beat on postpaid net customers and raised merger synergies guidance. Hynix fell after warned of warning memory growth and rising inventories. Rogers beat and extended the deadline for its proposed Shaw deal to December. Sherwin-Williams slumped as inflation pressure hit profit. Citadel is adding extra office space in Hong Kong to expand or to accommodate expanding means. Alphabet, Microsoft spur hope that big tech could handle slow economy. Blackfin said to most sale of claims manager. U.S. futures jump with Microsoft and Alphabet after hours gain. Zuckerberg said Meta is in a very deep and philosophical competition. McDonald's cut to hold at Deutsche Bank, price target 259. Walmart price target cut to 142 from 166 at Deutsche Bank. 3M price target cut or raised to 140 from 130 at Mizuho. Idea and Amgen packed on Matra clinical trial. McDonald's cut the hold at Deutsche Bank on inflation pressures, and Visa price target cut to 262 from 278 at RBC. A white Teflon coated jacket worn by Buzz Aldrin during the Apollo 11 mission in 1969 sold for $2.7 million at the Sotheby's, the New York Times reported. Aldrin, now 92, wore the jacket as he became the second man to walk on the moon. In all, 68 of 69 lots of his belongings were sold for a combined $8 million. It's pretty dope. A Chinese rocket is set to make an uncontrolled re-entry around July 31st. Debris from Long March 5B rocket China launched Sunday is set to crash into Earth, and wreckage may hit a wide swath of the globe, including much of the U.S. Aerospace said China's take. The U.S. is trying to smear its space program. Craft beer is going gluten-free, and some is actually delicious thanks to advances in brewing. The global market will expand more than $9 billion over the next 4 years. Gluten-free beer. Look at that. A rare find, a 170-carat pink diamond found in Angola is so big that it may be the largest recovery for 3 centuries. Miner Lucapa Diamond said the stone is from Lulu Aluvia. Miner will be sold through a tender. Fancy colored diamonds, which are rarer than colorless ones, have fetched record prices recently. The De Beers Cullinan Blue Diamond was auctioned for about $57.5 in April. The party is over for the pandemic housing boom. Buyers are getting priced out and mortgage rates have almost doubled since January. Sales of new homes fell for the 5th time this year, and brokers and mortgage firms are starting to lay off employees by the hundreds. No doubt a prolonged sales slump in the $4 trillion industry would ripple through the economy. That's it. That's all they said on that one. Okay. On this day in history. Oh, I like this one. What's up, Doc? Bugs Bunny entered our lives in 1940 in the debut of A Wild Hare, a Warner Brothers cartoon directed by Tex Avery. It lasts a little over 8 minutes and starts with Elmer Fudd tiptoeing around a rabbit hole. The line, "What's up, Doc?" went against audience expectations of how a rabbit might react to a hunter and cause pandemonium in the audience, bringing down the house in every theater. A Wild Hare was loosely adapted for the radio as a sketch, loosely being the operative word, we guess. Bugs, what's up, Doc? What's up, pal? Wow, ladies and gentlemen, I hope you're ready. So that's the news of the day. Again, a lot of earnings across the board doing good. A little bit of energy there in the Europe stuff. And then ultimately what we're going to get from Powell and any other data or policy that comes up in the next few days. We got a couple of movers here right now in the morning. Boston Scientific, they jumped 5%. The company's second quarter beat. Bristol Myers shares slide 2% after they lowered revenue guidance. Carvana, they were upgraded to market perform at Raymond James. Shares are up 5%. Chipotle, they are up 8% after the restaurant chain posted better than expected earnings. Crypto stocks are doing a lot better right now as Coinbase shares gained 3.5%. Enphase surged 11% as analysts hiked their price targets and the company beat on top and bottom line. F45 FXLV drops 58% as the fitness studio operator, CEO, and founder stepped down and company lowered guidance. Helix Energy, HLX, rises 7% after forecasting revenue and adjusted EBITDA for the full year that beat estimates. Logitech, Logi, is downgraded to hold from buy at Loop Capital. Shares are down 3.5%. Observe, OBSV, dropped 74% pre-market trading as the biopharm company said its plan to initiate a corporate restructuring given the commercial landscape and potential additional capital is needed budget for the completion of their clinical development program. Spotify gains 8% pre-market after forecasting monthly active users for the third quarter that beat the average estimate. Its second quarter users and revenue also beat expectations. So Spotify did good. They actually did good. Fake sell-off. We will see when Powell gets here. But ladies and gentlemen, those are the plays. I got a couple that I'm looking at. I'm going to be watching Visa, Microsoft, Google, Meta, Amazon, Chipotle, Texas Instruments, JP Morgan, and financials because of Powell. The other names are all earnings. Then Spotify, and then even Visa or even PayPal. That was it. And I think that's pretty much going to be it. There will be a couple ones. I still like XLV2, but I think a lot of it's going to be post-earnings. Like I said on the watch list, I think we have a lot of good earnings today, a lot from yesterday. I wouldn't be surprised to get a couple of moves, and then maybe we chill a little coming into Powell. So we will see what happens. I hope you're ready. Oh, yes. I hope they're ready, Chad. I hope they're ready. Oh, man. Close. Hold on, I gotta get this. I know it's time. I know it's time, baby. I hope you're ready. I hope you're feeling patriotic. I hope you're feeling blessed. I hope you're feeling the Powell in your bones. You know what I mean? I hope you could feel it. It's Powell time, baby. Oh, but before we do anything, before we listen to a nice press conference, we must pay homage to the people who have sacrificed more than most of us ever have and ever will, and that is the veterans of the United States of America, ladies and gentlemen. So on behalf of the cult, the people here, the people not here, we want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country. God bless you and thank you for your service. And shout out to the police officers, the firefighters, the doctors, the nurses, the teachers, all the other public servants out there as well too, baby. God bless you and thank you for doing what you have done. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of the Jets! Oh, it's game time, baby. Oh, no. Let's go. Let's go. Wake up. It's Powell Day. Oh, bro, I just, screamed that sending the Jets. I don't know if you caught. Dude, I just, screamed that one. Like I was in a, I was in a fight, or that was like a war call, sending the Jets. I don't know. Oh, man. It's going to be a good Powell Day. It's going to be a good Powell Day, Catadonia. That's what I feel. That's what I feel. That is what I feel. So, get ready. Schedule for the day. Pretty much 10 a.m. You're going to get the data, real estate, and then oil numbers, and then pretty much a couple bond auctions right before the Fed. But then 2 p.m. and 2:30, that's where all the excitement's going to happen. And then 4 p.m. with Meta earnings, and that will pretty much give the follow-through. Again, if you haven't noticed, most of the moves in the last week, the last 2 days, all of the moves have occurred after hours. So remember, we were pretty much neutral on Monday. After hours brought us down with Walmart yesterday. We did our thing, but then after we ended up down. But after hours, Google, Microsoft, everything else came back up. So keep all that in mind. Chatadonia, like the video. I love you. But now, what other ideas we got in the morning, huh? I like this. We get a little bit of time. Tell me, what's your first play? The first play you're going to buy. Number one, who are you looking for? You got to let me know. You got to let me know. Data at 10 a.m. is going to be real estate pending home sales, and then the EIA gas inventories. Spotify, that's a good one. They ended up beating Labu, Palantir, Amazon, Tesla, Coinbase puts, Meta puts, Texas Instruments, Boeing. Boeing did good. NVIDIA, Qualcomm is today after hours. Meta puts again. CMG, that's a good one. JP Morgan, USO, Abivi. Oh, I like the Abivi play. I do. We got 30 seconds, Chatadonia, FXLV. All right, let's go. Let's go again. You got TXN. You got Chipotle, Visa, even PayPal, too, as a sympathy. So get ready. Call out any place. It looks like you guys have an idea of where you're looking. So that's always good to have. And let's get it. Let's get it. Was it Spotify? PayPal up 8. PayPal's doing very good. Round 1. Fight. So Meta's up 2.5. Again, don't forget about Google. I don't know if our Google Play even came up. Spotify option chain is not loading. CMG right off the open. I don't see any loading either. Let's see. Spotify. Let's go to Visa. Oh, are they starting to fill some of these? Spotify's chain is opening up. So watch, you might start to get the first move. Roblox up 3, Redfin up 1, Apple up 1. Let's see. Apple pop and lock. Abivai dumped. Did they? Again, that came up yesterday. That'd be unfortunate. Meta's going up here. There's PayPal. Where's Visa? How is Visa down right now, actually? That's wild. PayPal's up and Visa's down. There's CMG moving up. Snap under 10. Airbnb up 3.5. Again, Visa looked very, very good for travel. And then Boeing killed it on earnings. Boeing is actually still moving up here. I actually think Boeing might be able to do pretty good. They're up. Actually, Boeing option chain has it loaded. Boeing options haven't started going through yet. Pins, Visa got downgraded. Oh, yeah, I think we read that. They had a price target drop too. And then XLVs are going crazy. The TAN plays came up a little bit, but that's because of end phase. Yeah, they're up 2.5. XLV still doing good. But yeah, option chain is just not loading up. But we're coming down here a little bit. Everything still has a gain. NASDAQ is up 1.4. So you got a lot of cushion on the board. What did I just do? PGY, yeah, that's been the last like 2 days. First Solar, XLV coming down. T-Mobile, again, they had good earnings there compared to a lot of the communication stocks. They're still going up. Boeing option chain has now loaded. So they're kind of dropping a little bit there, but if they bounce, but now people could actually trade those. No, some of these expensive BA chain, scam, UNG, flip and rip. Bowen's starting to go. I like the T-Mobile. I like all of them. Literally the Spotifys, the Visas, but all the premiums have literally launched right now. And then a couple of them are already selling off. Netflix is up but coming down. Microsoft's still green. They might be able to come up. Again, Microsoft had good guidance. Google coming down but still up 3. Tesla. Microsoft might be able to go. Boeing with a red candle. NVIDIA also, I believe, on the low right now. Dollar is down today. Yeah, NVIDIA's up but hitting the low. All the chip makers actually did pretty decent. And then TLT going up. That's somewhat bullish. SPY still at open. There's Microsoft moving. T-Mobile topping out. Let's see. UNH pop. What was the healthcare? There's one healthcare company in the morning. Shopify on the high. They were actually down there earlier too. Zoom scaler on the low. Amazon starting to rip up 2.5 right now. It was Humana. That's who it was. So they didn't do too good. I'm surprised XLV still holding up pretty good. Eura CCJ got the follow through. TXN still on the high. That's 4%. They're moving. I'm surprised. I think Visa could have been the downgrade, but I am pretty surprised to see them clapped. And then Microsofts are still pretty expensive. So Microsoft calls. I mean, a lot are cheaper if they're further out the money. So be careful. Shop 4.5. KHC clapped. American Express better. T-Mobile still holding up. We have TXN up there already. PayPal trying to bounce a little bit. So is Visa. Spotify kind of coming alive. Spotify's options are crazy. Yeah, Spotify are up 20%. How Google's worth less than yesterday. It just depends on how close they are to the money or not. It was looking like I thought our plays would come back to life. Once we get above 110, those plays will come back, but they have to do it sooner rather than later. Google is coming back up here. That's like the same price. Google scamming. How you doing? I'm good. I'm excited for Powell. There's going to be a lot on the table. SPY coming up here now. First, high of the day after moving. A lot of earnings continuations are still going. I haven't made any plays on any of them yet, though. I've been approaching it a little more cautious today. Yeah, CMG just launched now. 2 big candles. There's Microsoft. I don't know if Microsoft premiums are up. I'm assuming those are going to be down. Yeah, we're down 50% on the ones from earnings. So I'm going to wait before I try to go in on them. On the ones for this more. I think I already missed my shot on that. Arch earnings tomorrow. 3M down 1.25. VIX leading to J-Powell. Maybe go for the dollar. VIX could move. But again, this Powell will be a little bit more interesting. In a weird way, it's not as if the data, I think data sets following Powell might move it more, but it's going to be difficult, I think, in the sense that, like I said, I'm more or less expecting something neutral than not. Yeah, there's Google going up. The plays just went up 30% on the dailies. I had those up and I was looking at Microsoft too, but a lot of them are still back to break even. So here's Google options. They just bounced a lot from the bottom, but they're getting back to the same price as yesterday. So it's interesting. Visa bouncing that one. If that one could go green and really, really run. Some of the Visas are cheap actually. Apple, huge green. Come on, why no load? They stopped loading for me. All right, grab one. I grabbed a Visa. These ones were the biggest discount out of any of the post earnings, and because they were doing the worst. So we need Visa to go green for this play. Airbnb jumping back, jumped out the goggles. Googly woogly. Enphase still going up. Amazon. Yeah, Google's climbing back up there. TAN is starting to move too. So that play's working a little bit. But don't trade this. Not a recommendation. You will lose money. I grabbed a Visa next week for call. I only grabbed one for $55. Walmart's coming up. Walmart's dropping. Oh, no, that's JPM. Excuse me. JPM is selling off. So watch financials. It looks like those might be the first to move right now. Again, Solar, Enphase, they're looking good. XLV needs to go positive. Amazon, 3%. They're killing it. Jim Cramer op-ed says hold cash because market's not overselling. I think the market is inversing. Well, I think, honestly, in this environment, until you have more certainty with what policy or Powell is going to do, and even somehow these companies are going to report, a little bit of cash is great. Again, 10, 20% cash, and if the market keeps dropping, that could actually turn into 30, 40% of your portfolio at the right time. So I think having a little cash is always good. You don't need to go too crazy. I think 50% cash is kind of a lot. But again, everybody has a different plan and strategy with it. But a little bit of cash is not looked down upon right now. Powell is 2:30 Eastern, baby. We recover. Where is Tesla? Microsoft's coming up there. So the Visa is moving up there. 0.5% now green. So what we wanted to see. Tesla is coming up a little bit. Amazon's on the high as well, too. Yeah, Visa looks nice. I hope if Visa could continue. Again, they were up like 4 or 5% early monthly deposit instead of using them. Well, last month I was gonna buy Airbnb at $80, and then the rally started. So I was like, all right, I'll just wait till earnings, and now I have another deposit. So after Monday, I will have 2 deposits saved up. Apple is ripping. MasterCard. There's Google. Let's see where the googly wooglies are going. Oh, no, these prints probably got slashed. Oh, the Googles are down $50. So maybe those calls we got might come back to life, believe it or not. I'll take it. I don't think we should be rallying before the meeting. Well, I mean, this is kind of expected. Get ready for a couple moves here early on because there's a lot of earnings everyone's reacting to. I can name you 10, 15 earnings that were all good in the last 48 hours. So, and even this morning, Boeing, Texas Instruments, Google, Microsoft. And again, cautious to the word good, but more or less positive reaction. But some of them like Chipotle and again, Texas Instruments, they raise guidance. Even Boeing, free cash flow, beating on certain things. So there's a lot of earnings reactions in the meantime. And then you'll even see there's earnings after Powell as well too. So Microsoft and Google, they are continuing a lot. I'd watch out for financials. They're at the bottom. XLV starting to react a little bit. Utilities are doing great. Let's see. Where's SPY? So only 3 industries are in the red. Healthcare, staples, and materials. Mainly defensives. Financials have a little bit of cushion. And then communications are leading 3% with tech up 2.3%. Again, I think you could blame T-Mobile for some of that too. And dollar's pretty down. Not really moving too much. AMD push. Again, Qualcomm is after hours today. Enphase is going up again. That's bringing up TAN. Dollar moving back. Tessie drop. Sava on the high. A couple big candles out of Sava coming up through the top. Apple is ripping still. Big dollar pop. See if we get a reaction, but dollar's still negative. Apple keeps going. Visa's up near the high. Microsoft and Google kind of chilling out here. Yeah, you have Meta after hours as well, too. We have a comparison chart for the prior Fed meetings. The strike through comparison. Yeah, we will have that. We need the new report, though, but I'll get that within like a minute or two after the release. Boeing missed earnings, but the stock is still rising. Free cash flow. I think that's that, and then good guidance on the max return and all that. Meta's going up again. There's Visa one more time. So the Visa play, that one went up almost 100%. Again, that one was the one with the deepest discount from yesterday, and they're still not even back up to here. So I think we just caught 1% off the negative to positive. And they saw Texas rises. Uncertain about Meta. I still think Meta is uncertain. Again, Google chilled some things out, but I'm still worried about Meta more or less. SPY coming up here. Did not react to the dollar. There's Google one more time. I think if we get one more pop on Google, those plays should start to come back. Airbnb candle. Google. Oh, Airbnb. Very proud of you, Habibi. Again, Visa, everything Visa and the credit card companies, they've been saying travel has been helping their earnings. So I hope that means good for travel itself. And bro, I logged into my I logged into my Airbnb yesterday because I needed to check something. Like usually I just let the lady like manage it, bro. Oh my gosh. I like looked through a message and this lady was like beefing with with customers, with people who wanted to like book the house, bro. She was getting hella in their business, and then like somebody like said she was like, "You're dishonest." And I actually have the funniest screenshot between my Airbnb lady and a potential guest. It was like, I was like, "That's funny." Like, bro, no, she was beefing, like straight beefing in the Airbnb chat, and I was like, "Damn, that's wild." Visa again, end phase. So everything's still ripping again. A lot of this stuff from the morning. I mean, it's only been 15 minutes, so we're getting a lot of continuation in that sense. Conoco is up, or where's energy? ANET on the high. Conoco's still up, even though they're coming down. Let's see. Microsoft and Visa's still going. TAN might get another pop. What's the other one? CMG and then Texas. Those are the bigger earnings. UNG about to go green. I mean, they did cut off Europe gas today, but it did. I mean, gas, you go look at like the /NG future, big drop from yesterday on the top. But yeah, UNG is running. Microsoft still near the highs. Qualcomm's coming up. Again, chipmakers even doing good. Volume on TAN. NVIDIA, AMD on the highs. Plug Power on the high. AMD again. Facebook on the high. Bro, we're covering 3.5. Visa's going. Yeah, the Visa's nice. I really hope that could continue. Tesla. There it is. Tesla, big pop. 2 candles back to the high of the day now. SPY is breaking out on the day, but we're at 395. So literally you're back to Tuesday's close where we closed the day before yesterday. And it wasn't too bad, but that was coming off of the low. So we have a lot of cushion. You have a lot of cushion on the day right now. Yeah, you should have 100% on Visa already. Again, that one was just the cheap. It was down 80%. So the option is still down 30%. That's just it going red to green after being up 5% yesterday. So that one ended up working out. So be smart with it. Ghetto spread it. Take profits if you want. You got a nice move. If you want to push it for the big bucks, be my guest. But just be careful. Amazon again. Sherwin-Williams is rising, so they were red earlier. If this wants to go full Visa, but they're down 10%. They're not. They weren't down 0.5%. Abivi, yeah, 1%. Again, those puts came up yesterday. If the plays don't get too crazy, I'm gonna look at those by the end of the day. Spotify's rising up there too. Microsoft, first little red candle. Google's holding up decent. Amazon and Meta kind of dancing. Meta looks strong, though. Again, people feel really good after Google. Tesla, big pop. I have Tesla in the bottom left. Surprisingly, it's not the dollar. It is the Teslonian dollar. Micron lagging chips. Tesla breaking out to the high. Micron is because Qualcomm and the other ones are doing very, very good. And then Texas Instruments, another dollar spike. Dollar's now only down 0.09. Market has ignored the dollar for the most part, but, I mean, dollar is still declined overall. XLV running through on the low side. XLU went red. XLI holding. Spotify, another high back to 120. NVIDIA's on the high again. Enphase is killing it. That's why we're getting gains on TAN. Tesla again, too. Enphase, very, very good. Very, very good. Airbnb, very good guy. Very good guy. We love him. Oh, very good. 106 is pretty high as of late. But we were at like, what, 108, 110? Biotech struggling. Yeah, today's not the day for healthcare. They had their day yesterday. Utilities now went negative 2.17. Then consumer staples, defensive stocks, they're down 0.5. And then materials are down 1%. With communications still leading just under 3%. Tech at 2.74 and discretionaries at 1.5. And then real estate is right in the middle of the market. Thessalonian one more time. Texas. Oh, no, that's TPX, not TXN. They tricked me. So a little red candle. We've only had, what, 4 or 5 red candles on the whole day today. It's only been about 31 minutes, though. But good start. You're already up 2% on the NASDAQ in 30 minutes. 1% on the SPY, just under 0.5% on the Dow. Visa red. There's MasterCard. American Express not doing too hot. Overstock. Sorry, I'm excited. Be excited. Nothing wrong with excited. It's Powell Day, bro. It is literally Jerome Powell. I will be honest with you. I am not as excited for this Powell as some of the other ones because I feel like Powell has a parachute on this one. I feel like just because he has so much time till the next meeting, I don't know if it's going to cause the immediate reaction that will be as big unless he announces a bombshell. But I think he has a parachute. He has a way to get around this one without it being too costly. But we will see. 0.75 is big. 2.75s in a row. The only other person or the last time that ever happened where you raised 1.5% in interest rates in 2 months, last time that happened was Volcker. Feels like we're getting pulled into the principal's office today. Ah! Apple is killing it, man. They're up 2 right now. Yeah, I mean, he is in the back seat. He is no longer piloting the plane. I think we do have pending home sales. It's either 10 or 10:30. TYDE, LNG on the low. Tide, Cryptide. I thought it said crypto, like a toe, though. Like toe feet. Yeah, data comes out at 10, so 7 minutes. Real estate data, pending home sales, and then you're also going to get EIA oil numbers. Which one's more important, Powell or earnings after hours? I would say earnings after hours hold a little bit more weight right now, but depending on what Powell says, they will, the ingredients mix very, very well. But I do think earnings and what we've been seeing so far and just the scope of this earnings week in some of these big companies, I think that is probably going to have a bigger effect for the most part, but I'm sure we'll find out. But like I said, the last 2 days, every day this week has been defined by after hours. There's just no other way to put it. So like here was Monday, we only dropped a little bit. Oh, no, that was Friday. Here was Monday, we dropped, that led in, the news with Walmart led into this. And then yesterday, we were like right here. And then that news on Google and everything led into this. And then that's where we're at today. So I really do believe the earnings have a little bit bigger of an effect than Powell. Are you more bullish or bearish this week? I started off more bullish. And even though it's kind of playing out like that, I'm a little bit more neutral now. I just think up until we see where the companies are at, get certainty, see what Powell's going to say, get certainty, and then I think then everyone's just going to spaz on the data sets that come out over the next couple days and weeks. And then whatever information we get about buybacks, that could say a lot. uh, 75 chances, 75. I think it's pretty much guaranteed. And then again, it's going to be a big one. The last 2 in a row now. Very, very big. Very, very big. Microsoft's selling off a little bit, but Google's going up. Things still look a little bit active and jumpy. First 5, they're coming up now. That's actually a good one. They were red too earlier. UNH drop in. Value plays. The staples just not holding up like they were yesterday. BA. Boeing starting to come back up again. How long can we go with every company claiming they need work while also maintaining high unemployment? I don't know, because like right now, it's people are claiming they need work, but a lot of industries are firing, and then it's unemployment has still not gone up, and that's why whatever Powell says about unemployment, we're gonna really keep an eye on that one. Disney up $6. No, Disney's not up 6. I was like, that means Netflix should be up a lot. No reaction to the gas being shut off. That I think because right now it's like either shut off or I think they're assuming 20% capacity. But I think give it a little bit and you'll watch it go through. But a lot of gases ran up. European gas is hitting a new high, and then our gas kind of ran up yesterday over that last 3 weeks. I mean, we went up 50% on UNG in 3 weeks. Hear me out. The consumer spending turnout in the stores are going to be pricing in 25-50 September. I thought Powell might want to go towards September, but again, that's the question of today. Does he even bring up September or not? So there's a good likelihood that Powell may ignore the September deadline. Or this, he may say it's too early. He may just say we're not going to try to forecast on it, and wherever the data, he might outline what they're looking for, but I don't. That's the thing. It seems less risky for Powell to ignore September than to talk about it and try to lower expectations. Because you got to realize that if Powell says he is gonna, chill out in September and raise 50 or lower, then the market will go up, and then if the market heats up again, it will directly counteract some of their goals. Someone is going to ask him a question on it. That's exactly what we're looking for in the press conference today. But again, just don't underestimate Powell's ability to not answer the question. Wow, that again, that's literally his art. The Fed's balance sheet, it dropped a little bit from the peak, but then started climbing as of last week. There's Google, AMD again. Mara's even on the high, TXMD. Walmart turned around. There it is. Or it was JP Morgan that was selling off. Walmart was doing good. Isn't that moving away from predictability? Yeah, and that's why if it's not, he won't be predictable, but it will, again, that right there will be the main question. I don't think Powell cares about predictability, but that's why I was saying the other day, the more predictable it becomes, the more better it would be for market. But again, if he's too predictable and it becomes too bullish, it could counteract their goals. That's why the September question is literally going to be the most crucial. Apple going up again, another candle. What do they mean market pricing? Like when they say market pricing in, it means that there's an asset or some function, like some level of asset. People have either bought it or sold it ahead of the move. So like the easy example I think for pricing in is like Christmas. Like a lot of people think, like when I first started trading stocks when I was 14, I was like, oh yeah, I should buy stocks in December because Christmas, people are going to buy stuff that's going to be good. But usually a month ahead of Christmas, people start buying stocks for what's going to happen on Christmas, more or less. So it's just when the move is already priced in, aka the price has either been bought or sold to reflect a certain effect in the future before it happens. Is Tesla the most popular stock? I don't know. It depends how you define popular. Are we talking dollar amount, retail traders, active trades, all that? It's 10 a.m. So, yeah, market's reacting. Oh, pending home sales down 8%. Estimate was 1.0. Year over year, pending home sales down 19.8. Estimate was 13.4. Really bad real estate data. Market may like it. I don't know. I'd watch the dollar. But yeah, here it is. Year over year, real estate data is very, very bad now. Let's see. Yeah, and then off from estimates were a lot higher. Because remember how pending home sales were bad, then turned really good. It's been a very volatile metric, but here's where it is. I mean, they were expecting the purple line. We came in on the blue line, so that's not good. That's month over month. Down 8.6. Estimate was 1.0. And then this is year over year. So this is where we're at. People forecasted a decline. That's been the overall trend on the year. But nah, that is now breaking down. Real estate data is well, there's off from guidance, but after yesterday's new home sale, people didn't even react to it. But it's not good. That's not good. But again, could kind of mean some goals getting accomplished, maybe ease some things, but we'll see how the market. I would just watch the dollar and then where are the bonds. Bonds didn't move off of that too much. Pending home sales is how many homes right now are in escrow. So right now, there's homes that have not been sold, but they're not on the market. They've accepted an offer and now they're pending. So it takes about 30 days for escrow to complete. So right now, the amount of homes in this month that are in between getting sold is about 20% less than what we had last year in July, and then 8% lower than last month. How long till this affects real estate markets? It's already affecting it. I mean, you're already watching, it takes longer to sell a house. Prices, or at least the craziness in prices came down, but, I wouldn't expect a stock market reaction on real estate more or less. Tam plays green. Nice. Where's end phase? That data delayed. That's from it's a month ago. I think it's 30 days trailing. It might be. That's for June. So that was for the month of June, not July. How come we are seeing good reactions from companies who double miss and guide down? It's confusing. Then Visa crushes earnings and gets zero love. Well, they're going up now. It just depends on the metrics. So that's what it is. Like, again, Tesla, they missed on a couple of things, but they said 50% growth rate. Microsoft yesterday, the best way to look at it is that Microsoft was literally down up until after hours where they gave guidance, and then they said they're still expecting double-digit growth for the next year. So this was Microsoft. The earnings came out. They missed. Again, numbers are still elevated. You got to realize that. Like, I could bring up most balance sheets and show you that they're making almost double than what they were making in 2019. But, again, so numbers are still high, but, it's like if they miss, you get the reaction. But depending on the company's metric, and then if they're still able to forecast growth or have something good, they're going to go up. So Visa was a little bit weirder. I was surprised, but Visa got a downgrade and a price target drop regardless, or that was separate from the earnings, and I think that's what impacted it. That's why it went red to green, but it all depends on their metrics. Again, Google, when they said ad spend, they missed on everything, but as long as that ad spending didn't go down, they're not worried about that because that is $60 billion a quarter. So it just really depends on what metrics the companies have. Every company has specific stuff, and some things are more important than not. So depending on what they report, and if they could guide up on their strong points, they'll get rewarded. If they could have growth, they're going to get rewarded. But bad margins, low cash flow, those are the things that will get hit. Lowering guidance and then doing bad on your core metrics, those are going to really hurt you. And then again, just ultimately lowering your growth rate. There's Amazonian to the top. TLT kind of moving from the data, but SPY already recovered. Real estate data, no real reaction. Will they release what Powell will say before he goes live? There's a pre-written, like the beginning is usually pre-written. That's why you get the reaction. Very, very simple. But then we go from there. Oh, let's go, Daniel. The flip is live. Bro, good work. Wow, how do you feel? Bro, how do you feel? Oh, you got your first house flip, bro. Look, was it easier than you expected? Oh, man, it looks nice, bro. It looks nice. Wow. If you don't get an offer, I want you to paint the front of the house. If you don't get an offer in 2 weeks. So you can do that Josh Answer special. They love the makeup, bro. They love the makeup. I'm telling you. That was one of my bigger expenses when I did the house flip, but trust me, the outside make it look, oh yeah, just the front. You can paint the inside. Inside looks good. Everything else looks dope. It looks nice. I like it. Dude, I like it. I hope, did you go under or over budget on there? And then good for, it doesn't show up your price history too. So it doesn't even look like it's a flip. Shout out Chicago reporting standards. That's amazing, baby. Horna. I was looking through it. I didn't get to look it up. The Josh Answer special, bro. The Josh Answer special. Well, we felt we couldn't just paint the front. Yeah, well, that's it. Again, if you don't see the demand, that paint, I think, will get a lot more people in there. Again, it looks good. It's a first reaction. It makes it feel cleaner, makes it feel newer. People love that. But honestly, it looks great. I even looking at the comps, it looks like you have comps that sold 20 to 50,000, even 100,000 higher than you. I think you should get some demand on that one. I like it. I like it. Bro, you did that fast. I told you. Oh, man, Daniel was so nervous. You're probably still nervous, too, so I feel you. Let's go. Get that sold. That's exciting. That's exciting. Yeah, the comps back it up very well. Like when you go and look at it, that's the part I really like about it. That's why regardless of paint or that's the best part. Again, doesn't matter what it is, but it's just like you got it at a good price, you got budget. It's like you could spend some money, but right now it looks great simply because it looks like a good deal if someone's going to buy it. Yeah, how long did it take? It's been like what, 60 days, maybe less? 45 days? Walmart gassing, yeah, they have been from the morning, and it's kind of odd because a lot of the consumer staple stocks are doing pretty bad. Google trying to climb up, AMLX on the high again too. UUP starting to climb. Tesla back to 800. Closed on June 1st, so just under 60 days. No, wait. Just under 260? June 1st? That's like a month. 30 days. Oh, no, not 60 days. It's the end of July. Not bad. Not bad. And then you'll get a nice net profit. Get a yearly salary. If you could close at that price. General Dynamics, they got earnings. Or no, they beat. EPS forecast beats. Walmart again on the high. Visa's holding. XLV, yeah, they're not doing good. Even XLE is negative now too, energy. And XLF still has a little cushion. SPY coming down. We had literally, here's the real estate data. I had a little bit of a pop and drop there. Kind of moving a little bit weird, but we're getting away from that early morning steam. Tide holding up well. That was a runner there earlier. Oh damn, Daniel, you even listing your own house. I just clicked on the listing on the other tab. Listed by Daniel Garcia. Look at this guy. He's you flipping your house. You listing it. You like a young lending tips out here. You know you had like a young lending tips. What do you mean? Of course he's even saving on the even getting his own commission back. He just cut selling fees in half, 2.5%. I do know that guy. I do know him. A great guy. Great guy. Sell it. Sell it. I'm excited. So get ready. The next fun part is the offers, because then you get nervous until someone puts in an offer. And then, like, I don't know how the demand will be in the area, but like back a couple months ago, you would get like, it was a fun game because you would get like 7 offers and then you got to pick everyone. It was like deal or no deal because you get to pick the offers. Like 3 people are like, I'll give you $100K above on a loan. Then someone's like, I'll give you $100K below on cash. And then it gets crazy. Tesla popping again, 804. It's a nice 3.5%er. 120 on Google. They're clapped a little, but they're coming back. So I think like I got the 112. I'm still at the, even though the stock's higher than earlier, I'm like down like $50 on it or $70 on it. So it's still down like 30%, but they want to move up. Their PayPal, no, PayPal, just people were talking about Elliott Management taking a stake in the morning, or that news got confirmed. And then people were hoping that PayPal would be a positive sympathy to Visa. RWE sees full-year adjusted EBITDA of 5 billion euros. European company. Again, what time is it? 7:11, 10:11. Still got Powell in a couple hours. Tesla absolutely killing it. Amazon, I mean, we'll see. I only have the puts on that. I think I have one random call play on the random account, but I think Amazon is still going to be a little tricky. But after Google and Microsoft, I mean, it seems like these big dogs, I mean, even Tesla, they haven't really reported too far away from their guidance. Again, I think Meta is the one that's really scary, but we'll find out. The way Amazon gets killed is if they miss on any big metrics, and then if they warn on any guidance or lower guidance, as if they were Walmart, then people would definitely freak out. Tesla 850s, 100%, go work. 90% on real estate coursework, let's go. Everyone, it seems like things are moving. I like it. Tesla popping off 808. That's it. Yeah, those Teslas are gone. Those would have been fire right here. Right after that pop, they went nuts. Microsoft trying to climb up a little bit. Tan. Enphase. Texas is chilling out. You had CMG. We have Boeing. Bottoms for Coin. Kathy did sell. They said first time Kathy sold Coinbase in over 12 months. Market scamming on XLY. We're kind of cooling down, though, now. So this is good. We were feeling very, very... We ran up 2% in 30 minutes. I mean, it's only been 45 minutes now, but, again, most of the day was just going vertical. But then Tesla's adding to a lot of that. Like, if Apple and Amazon, if those just even make highs, or any of the other declining industries, if they could bounce, like financials, healthcare, or even energy, we should be able to go up. Oh, excuse me. I'm only buying or selling if Nancy does. Otherwise, no need to trade. Wow. Could J. Powell use August as a reason to hike one, and then people look at it 50-50? He could if the Fed futures were pricing it, but it's not. So that's the thing. As long as the Fed futures aren't priced in it, I don't think Powell is liable to to do 100 basis points. AMD, Roblox, a lot of things hitting the high now. Not necessarily your big tech except for Tesla, but things are going. Amazon's looking good at least. And then I think Meta too. Meta's starting to climb. Walmart, they're going up too. Again, Roblo at 40 now. Shop and Pop. Shopify's going up 6%, even off of bad earnings. That one, maybe you just argue they were just already beaten down the day before. Costco, they're killing it now too, up 516. Walmart, and then where's Target? I think they're all doing. Target's a little bit less, but even Amazon's getting some. So discretionaries are up. Yeah, discretionaries are 3. They're up 2%. And then communications up 3. Again, T-Mobile, that was another earnings that did very, very well. And that's contributing to that. Biden tests negative for COVID-19. Doctor says there's Amazon now. New high on the SPY. Tesla, Microsoft and Alphabet haven't played along. Microsoft wants to. Qualcomm on the high too. Cyber stocks running. Cyber, Palo Alto, TSM's on the high. Intel, I think, is Micron still lagging? No, Micron's even coming back up here a little bit too. FFIV, that was after hours. They're still going up. Net, Cloudflare up 4.6. Lulu on the high. Where's Chipotle? Chipotle and Lulu. I feel like they go hand in. Chipotle's still up 14%. Possible bull trap. Well, I mean, just get ready for volatility. I mean, Powell will cause it, but I'm also kind of taking up until we get to like middle of the day, like an hour or two before Powell. I think a lot of this is earnings. Again, like Chipotle is up 13%. Like there's at least 10, 15 companies right now that are just coming off the back end of good earnings, and they have really, really big market caps. There's Tan and M phase one more time. Remember, none of them were beats. Well, they beat in the right areas. Again, I know Chipotle was. Chipotle had a pretty solid beat and like even up $2 EPS year over year. Visa was a solid beat, but they're up the least amount. But again, there's just a lot of companies, and just don't forget what we dealt with literally 2 weeks ago. It wasn't as bad as feared. So just remember that. You know, this is kind of the result from selling off 10, 15% coming into to this earnings season. Margins awful. It depends. I mean, just things don't definitely look as bad. I don't know. It's like, have you ever like went out with like a girl and like you show your friend, and then your friend is like, nah, she ugly. Like, nah, she ain't even that cute. But then like you see her, or like maybe you see a girl and like you see her picture, and then you see her in real life, and then she's a lot prettier. Like that's what I think happened with earnings. That's it. It's just like, I think some people are like, she's ugly, but it's like it could have been a lot worse. And then it's like it looks a lot better as we get into it. It's just like earnings, the balance sheets could be a lot lower across the board on a lot of these companies. So it's just like we really, really, really thought it was going to be very bad. And even though there is misses, again, you have to ask yourself, what are they missing? You have to ask yourself that. These are expectations set by analysts. So it's not as if you're watching 10, 20, 30% revenue declines. You're not watching too big. And the ones that they did pay for it. Again, like Shopify's up today, but they sold off 15% yesterday off of that. Again, Walmart didn't have earnings, but they dropped off that leading into it. So, but I just think it's not that, it just hasn't gotten that bad as what we could have expected. And so, again, I know there's a little bit of confusion, but wait for the full digestion. Wait till all of the earnings are done, and then by the time we get Powell, I mean, that will factor into a lot of it. Market got the beer goggles on. So 75 is basically 2.37s between this month and next. Yeah, give or take. If Powell raised it by 100, would that crash the market? I think it would bring us down. I think it would maybe open the door down to the level of what's it called? Of 372, but he wouldn't do it. I just don't think he will. But it would shock the market initially. If he does, that would be crazy. That would be crazy. Kanye and Gap, I think they're still together, but somebody brought up yesterday that he might go to Nike. I don't know, Gap, and then Gap is struggling. I don't know if they paid him in shares. Come on, Googly Woogly. Amazon is just running with the Walmarts and the discretionaries now. They're getting their bounce today. It's the same annoying perspective of it's bad but not that bad. Yeah. I mean, pretty much that's what Wall Street lives off of. Like, it's just you freak out until over something that could happen. And then if it doesn't happen, that's it. But then one of these days, it's going to happen. Like, what do you think happened with COVID? Like, that's exactly, like, again, it was January, February. We had our plays. We talked about it. But remember, people freaked out initially. Then they're like, nah, it's going to be good. And then they freaked out. And then sure enough, the worst case scenario happened. That's it. Wall Street gets very pessimistic. They worry about something. They're looking over the edge. They're like, oh my gosh. And if it doesn't happen, they quickly come right back, right? And then it turns, and then it's like, okay, it's not that bad. But then until it is. So that's where it is with earnings. So until there's certainty that earnings don't carry this possibility of this type of big risk and big change, then up until we it's going to be like this every time. Everyone's going to freak out about the worst case scenario. If that doesn't hit, they pull back a little bit. More data, freak out. Oh my gosh, it's going to be like this, then pull back a little bit. And then when it finally does happen, then you will get your reaction, and then you're able to kind of now stage a real recovery from there. Starbucks on the high. USO dropping. Yeah, not looking too hot. UAG even flipped. The gains didn't hold. Tesla to 900 by Friday. You would need a very good Powell, very good Meta earnings, and then everybody else, and then everyone saying it's the bottom. But, I mean, in the right environment. But I would, again, my target price, I wanted those like 850s, 840s. That's kind of where I was aiming at. No Starbucks play. I had that old leap. That thing got clapped. That was because it was like 2023, and I didn't realize 2023. If you bought those at the beginning of the year, those leaps expire in like 4 months. But Starbucks has bounced actually really nice. Why do we want to be bullish now? You don't want to be. I mean, it's just responding to what it is. Just little by little. Again, yield curve, 6 to 12 months. That's what we've been saying since a couple weeks ago. And until then, whatever the market does, I mean, we respond to it every day since we're here. But at the end of the day, it doesn't really matter. Like, you're going to just get the market doing whatever it wants to do, and people are going to go back and forth. But to have a negative scenario and have the market still operate without going fully down, that's common. Again, even today, you had more yield curve inversion. So literally between, like, this is the most since like the early 2000s now. There's only one other point where the yield curve has inverted more than this. So, but again, like I've even said in videos years ago, even to this day, like I said, just watch, because a lot of people, the common phenomena is that the market gets volatile, people freak out, the yield curve inverts, and then all of a sudden, a couple months later, the market starts ripping even though the yield curve is inverted. And then people start doubting the yield curve. This happens literally over and over and over again. And it's kind of there. TikTok working to provide API access to researchers. So right now the yield curve's at negative 0.28. So more than a quarter basis point. So it's just like in the midst of this, it's not like we want to be bullish or want to be bearish. And I hope none of you take it as that. It's, again, we're just responding as we get stuff. Hopefully you could pick up on the clues of where the market's pointing. You could see how people are acting. But when it's all said and done, it's like we are in a purgatory. Where the market is, that's why the freak out, then it's not as bad. People are trying to figure out where we're going with this until the data and the numbers actually does it. Pretty much people freak out until the numbers show something, and until the numbers get to that point, it's going to take a lot of time. That's why once the numbers really do start dropping all across the board and you see numbers that, can't be debated that are bad, that's when you start to really get those effects. Recession fears ease. Could we expect to see rotation out of utilities and healthcare? Possibly, but unless people are on the same logic that I'm on, where you might watch things cool down, but it still just might be a good place to be in for a lot of people. I don't know if that makes sense in this, like commodities. So like commodities during a recession, they go down initially. But then during a recession, commodities can rally. That's where a lot of people misinterpret certain things. So it's like, even though you may see signs of it cooling down, if the yield curve is saying 6 to 7 months, we may have problems. If you're a savvy investor and you're looking at things and saying, well, whatever, if you're not responding on a daily or weekly basis, you're going to say, well, I still see, a benefit to be owning some of those defensive names 6 to 12 months from now. So it's like for me, I wouldn't get out of healthcare, even if we saw inflationary pressures drop and all that. And until I see how the yield curve is going to resolve, if it doesn't resolve itself and it comes as a result of the Fed intervening, then I would still be holding on to those names. Nobody hit the Mega Million. I didn't have time to buy a ticket. That's why. We need to get our 400 houses for the cult. Would that even be enough? So let's say if we bought... No, I don't even think I'd have enough. Yeah, if I try to buy everybody a $200,000 home, I wouldn't have enough. So if we won, Chad... Oh, I guess you have 800 million now. No, if it's 800 million, we could pull it off. I keep 200, and then Chad, everybody in here gets a $200,000 house. I think we could pull it off. Josh, what's your okay today? Oh, I was like, what? All I made was the Visa. That's it. Visa post-earning went up. It's still holding up. It was up 100%. Now it went from 50 to like 70 cents. That would be insane if you did that. It would be insane if I did it, but what's more insane is I would have to hit the lottery first. So I don't know. You know what I'm saying? Like, I don't know what's more insane. What I would do with the money or the act of getting the money. Dollars came back to break even. So some of the bullishness today, most of the day was down. Cash option 602. I'll keep 2 mil. That's fine. Still a good. I'd be happy. I mean, that's a good profit. That's a good profit. We did it. We did it, Joe. We did it. Lotto ticket donation. I just have to make. I didn't know yesterday was one of them. I didn't. We talked about it yesterday. I didn't get one. Long term, the same list: Airbnb, Uber, J.P. Morgan, Abivai. I wish Spotify did bad, so I could have made money on the put and bought them cheaper. But we'll see where Uber and Airbnb goes. And if they do good on earnings and rip too much, I may even wait again. But we'll see. And then if Abivai does bad, if Abivai has bad earnings, I'm kind of praying for that. I know I hate to break it to you, because then that would just be the easiest place to put my money in this environment. I really hope if we could get an Abivai dump and then get it back to lower prices. Oh, I would love to snag that up at 4.75%. Like, yeah, right now it's at 3.7. So, like I'm saying, if it could go below 130, get us back to some of the earlier prices, I would love to take it. Crude inventories fell 4 million barrels last month, EIA says. That's the natural gas chart I was talking about. It literally peaked out on that future contract and came down. Oil's popping off of that. EIA numbers. Big draw on oil. U.S. ethanol fell 1%. Watch UNG too. And then dollar is now positive 0.05, but SPY doesn't really care as much. UNG not reacting as much. 4 months on Twitch, baby. Hopefully you've been enjoying it. The Real expands into trading cards and comic grading. Nice. What did someone brought up Farfetch yesterday? Yeah, UNG not reacting. Oil futures moving. Ford is going up now. Why is Ford getting active like this? Again, GM didn't have good. Ford looks like they got something going on. Everybody in the UNG. Ford earnings after close. Okay, that makes sense. Oh, not as much sense as Bradley Frizzle and the Peach. Uh-oh, that one brought a red candle today, but it's all good, ladies and gentlemen. Jerome Powell arrives today, but what comes before Jerome Powell? Bradley Frizzle and the Peach, ladies and gentlemen. Or not. Oh, Peach Nation, stand up. You're in for a treat today. You are in for a treat today. Oh, my gosh. Oh, my. It's an honor to be here. Bradley Frizzle, thank you for your contribution. Thank you for blessing us all. Oh, my goodness. This is amazing. Wow. Like the video for good luck. Amen. Wow. The Peach. Bro, wow. Wow. We hit the Peach, bro. That's like, wow. 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 It's the Powell Peach. Call Howard Peach. I think we need a peach real quick. Our top export is peaches. What? I'm sorry, I was remixing an Uncle song. Kramer was talking Ford earnings. They have Tesla-like demand. I don't know. I saw a Mach-E yesterday, and that shit looked fly. I don't know any other way to put it. That's it. Like, the Mach-E looked good. Other than that, I don't know how much they're making off of it. I don't know what they're doing with the firing. I don't know what you remember it was like 4 quarters ago when they're like, we're going to spend more money. I was like, no. So hopefully their spending plans don't get in the way, and that's about it. And then Microsoft chilling out from the high. Google even chilling out too. But that won't make you not invest because Bowen hit record profits. And I'm going to get that divvy check. I think that's before when they used to pay a dividend. It's sick looking with trash infotainment on the market. It looks good though. That's like it's a good looking car. It's a good looking car. Bro, you know what car I saw the other day? It sucks. I was trying to like give him props and he thought I was like flexing on him trying to race. Let me show you. Bro, I saw one of these. I saw one of these. The OG F-150 Lightning. Yeah, bro. And I was like giving him a thumbs up. And like I was driving next to him. And then he just started like revving. And he thought I was like flexing on him. And I was like, nah, G. Like, nah. Like, I love your car. Like, I was trying to. Like, bro, I was trying to let him know. I was like, dude, I know what car you're driving. Like, I was like, dude, you're driving like the real Lightning. Yeah. That's why I was like, oh, man. That car is dope. That's the real Lightning. the SVT. Boeing or Disney will reinstate divvy. No, it'll take some time. Boeing might be able to, but they still have a lot of problems. I mean, free cash flow is good. And then Disney, I don't think Disney's going to do it for a long time. So a couple things are cooling down. Again, Ford is still going. We caught that there on the first 4 minutes, and then it's still moving up here. I don't have any news on it, though. DFJ, Consumer Financial Protection Agreement with Trident Mortgage over mortgage payments. Bullish candle. Well, we're chilling out. Again, first 30 minutes were insane. We've got 1 hour so far. Let's check the volume, actually. Volume's a little bit higher than the last couple of days. If this could continue at this pace, we're definitely going to do a lot more volume than the last couple of days. Powell's going bring the volume. TAN is moving. Our premiums are up now. The spreads are still a little bit wide. The ask hasn't gone up since the morning, but yeah. And that play doesn't have too much time, so you want to get rid of that one sooner than later. Wayfair. Overstock. I have tinfoil for Overstock. I don't know if you want it. Can I interest you guys in some early morning tin? I have some breakfast tin. I got a breakfast tin burrito. We have a tin and chorizo if you're interested, or you could get an eggs tin addict. That sounded really weird, but still. So if you're interested, it's about like 55 likes right now for breakfast plus tip. Brings you to about 75 likes if you're interested. But you could choose one of three. But I have some. No, it says, 55 likes. But again, I mean, if you're trying to eat out with tin in the morning and you don't tip, you're just an asshole. So it's okay, there you go. We got 60. We need like 10 more just to cover tip. You guys can figure out how to split it. Over easy. Okay, there you go. Nice. Perfect. Thank you. Oh, wow. You guys tip very nice. Thank you. Wow. I was not expecting more than 20% tip. Wow. Thank you. I appreciate it. Wow. Okay. So, spoiler alert. I don't know if they're going to put this out. But somebody asked me about this the other day. It was like I have one. I have a report. I think it was the same reporter for one of these other ones. But they were asking me about retail stocks. And I brought up what we talked about with Overstock. But here's the tinfoil pretty much. I answered a reporter with tinfoil. I know I did. I'm sorry. But this is what I said. Overstock is going to benefit from all of the consumer decline. Pretty much like we talked about yesterday with TJ Maxx and Ross, as some companies go to rush and sell out of inventory, or they have problems with too much inventory, these lower brand companies that make money off of excess inventories, they're the ones that are going to profit off of that, right? But I was talking about how they are now, Overstock. One, they're uniquely positioned, just given the fact that they have more online presence than Ross or anybody like that. But then two, I think they're going to come in, pick up all of the scraps for retail. But now, are you ready? There it is. Yeah, the crypto. I think they are going to come in and clean up all the scraps for crypto. Because literally, they did not get caught up in any of that mess. Remember, Overstock has a brokerage, T0, but they funded it all themselves. They got the funding of being a stock on Wall Street over 10 years, and they didn't get caught up in any of that brokerage. They potentially, they could do a little bit of Sam Bankman-Fried, come in here, and they could also buy the Overstock crypto as well and any other assets in the space. So I like them. I think they've held up better, obviously. They've still gotten quite a haircut, but you look at how they hold up, but it's a little bit better. It's still holding up some of the 2020. So that's my tinfoil, is that they're going to come in and get the Overstock on Walmart, and then they're going to get the Overstock on crypto. And I do own Overstock, yes. And I'm down on it like 40% or something. Tezos, yeah, T0 is linked to them. Is pronounced Freed. Yeah, I just say Sam Bankman-Fried for all my potheads out there to encourage them to get into financial stuff. Because then they're like, what, a billionaire is fried? Hell yeah, I'm down, Josh. So it's good. We like to, we try to make sure everybody is, accesses the information. Oh, dude, a little Sam Bankman-Fried, bro. Oh, okay, dude, with a little Fibonacci, dude. Now you're talking, Joshua, huh? Oh, hell yeah, dude. Get ready for Powell. Sorry, I just get excited. Oh, yeah, but I have the other one if you want it. So here's the other one. They put me. Remember, I dropped it to you guys early. I'm hella leaking these to you. Again, if you're on stream, you're going to hear it first. That's where all of these quotes pretty much originate from. But they got us in a U.S. news for the hydrogen stocks. They asked me about fucking hydrogen, and I was like, dude, just get an ETF because you don't know who's going to fail. So it's good. HY, again, we talked about it the other day. If you remember, somebody asked me the question, and I brought this one up. What do you think is not priced in? Nothing. I don't. I think what's not priced in is 100 basis points, but depending on what he does, I mean, we'll find out. But I don't think he's going to do 100 basis points. 3 years ago this week that you hit TLT, maybe the first one, but the second one occurred in March. Yeah, but would you buy EV ETF or just buy Tesla? I would probably go with just Tesla, but there's nobody in the hydrogen space really that I think has that. There's like APD, like the air company. What do they do? Or APD or ADP or something like that, and they've been around for like 100 years. But other than that, it's like early on right now. You just got to realize, like, I don't like when I call ESG, like I think ESG is a scam. And don't ban me for that. But what I mean by it is not that we shouldn't be focusing on it and not that it's real, but more or less in the sense that when you have a rush to something like ESG, a lot of people, there's just a lot of companies and a lot of people start chasing all the money flowing around, and it often leads to a lot of excess capital that goes to waste. So what I'm saying is that, like, with any ESG, hydrogen, again, EV, a lot of them, there is going to be some big successes. It's where a lot of money is going, but also there is going to be a lot of failure. So that's why I think, until you find out your real winner, until you find out your real Tesla in the space, it's very, very hard. And that's why I would just go with the ETF, especially if the expense ratio isn't expensive. And clapped. We're coming back to view. It's chilled out. Definitely chilled out. ESG and exploitation. It's just more likely if you don't think there's people taking advantage of it, you're naive about it. But it's, there will be a future for it, but just finding the right investments on it early on, it carries a high level of inherent risk. So Boeing is investing aggressively in digital tools for the next plane. I think Boeing's earnings is happening right now, their earnings call. So get ready. You might get some big Boeing pops or drops if they give any bombshell. Remember, Microsoft guidance yesterday after hours, that's what literally gave us this run up. Microsoft and Google came with good guidance after hours after the report came out, like later, and that drove everything up. HYG, it's high yield. So it's pretty much the higher yield corporate debt. So this is any corporate debt that yields above, I think, 5% or 6%, and it's just different quality. Again, to get an idea, like companies like Affirm, they're offered debt at like 5% or higher. That's high yield corporate debt. Whereas Apple offers bonds and corporate paper at less than 1.25, and that would be not HYG. What's the other one? Why am I blanking? Is it IYG? Yeah, no. What is it? HYG and how am I blanking on this? It's investment grade. LQD, there it is. More liquid. No, LQD. LQD is the higher quality corporate debt. That's lower yielding debt. So it shows just relative risks for credit market. Again, high yield credit and low yield credit, depending on the rates of both of them, you could get an idea of how investors feel. And then also you could get an idea of the relative risk. But usually if high yield credit starts breaking, that shows you a problem there with riskier assets. But then if you watch LQD and HYG go crazy, it's just telling you something's happening in the corporate bond market, not necessarily the government and like treasuries and stuff based on, fixed income from the government, but more or less corporate credit and what they're offering, or if there's a problem in there. Sava's on the high again. That's been running twice. Where's Sega? No Sega hype today. It's coming up there. I was going to say, I haven't heard Sega once today. What the hell, bro? I ain't heard one Sega comment. That's what I don't like about monkeypox, is y'all freak out about it every other 2 days. Like, you know what I'm saying? That's where it messes with me. I spoke on Sega earlier. I didn't see it like yesterday. I saw it. But like ever since monkeypox came about, that's how it was. Like I hear about Sega one day, then nobody talks about it for 2 days, and then everybody's like, monkeypox. Did you hear about monkeypox? Oh my gosh, monkeypox. And then the next day they talk about like something with finance, and then it's like monkeypox. And then they're like, nah, and then it's like monkeypox. So it goes back and forth. I have not heard it today. FIG and you tag me on that. I was gonna say the email didn't have it. Who is that guy? Does he work with the company? Cause that's interesting. Does he work with T0? Is he on the board or anything? That's very interesting. So literally, I don't know who this guy is. I think he's just big in finance. That's what Jay Alt just tagged me on this one. I'll retweet this. But he pretty much just said exactly what I said on Overstock. That's very good to confirm that. Where they're pretty much saying T0 will be the last one standing. Again, if you didn't build out aggressively during this crypto run up, and you didn't take leverage, and you have access, and you haven't got caught up in any regulatory issues, oh man. You better like the live stream. Y'all still on monkeypox? Okay. See, y'all gonna forget about it tomorrow. It's okay. Target's doing the worst out of some of the retail stocks that bounced. And I say that because like Walmart's up like 2%. Even Costco started shooting up 1% or 0.69. They came down. But a lot of the discretionaries bounced. PayPal through the high again. Remember, They're going off of Visa earnings and then the Elliott stake in the morning. Look at his profile pic. He's ringing the T0 bell. Really? Oh yeah, it's back. Yeah, it is. Jerome is going to come on in a couple hours, 2 hours, 10 minutes, I think. Or that's for the release, and then 2 hours, like 40 minutes, you'll actually get to hear from him. Can we have it in the title, 2:30 p.m. Eastern? That is the big one. That conference call. Yeah, I just had CMG up. It's killing, dude. They killed it. CMG was one that beat on most of the metrics. So where people are saying some things aren't going too well. I think they missed on one maybe. But they, even then, if you compare Chipotle's growth year over year, it's like pretty amazing. Second quarter GDP is tomorrow. So a lot of people are expecting a reaction, and just keep in mind that you've really already reacted to it since the White House started saying stuff. So just keep that in mind. And then again, I mean, a lot of people have different ideas towards what the data will show, as well as what it implicates about the broader economy. Fed futures are pricing in 0.75. They are not pricing in 100 basis points. We've had the talk. People said, what if he does do 100? I think that would shock the market, but I don't think that's going to occur. Are we ignoring the future effect of rising interest rates? Well, no, I think that's what the yield curve shows. And that's why, we'll see how much he's going to raise. We have an idea. But like what he says about the future, that specificness, that's what we got to see. Otherwise, they know the future effect and all of that, but it's hard to really understand the future effect if you don't know when they're going to stop. You see what I'm saying? Like finding out where the Fed's terminal rate is, understanding the dot plot and having an idea, we don't know where it's going to end up. Right now, the Fed futures, that's the only way we could assume anything, but it doesn't mean, the Fed is going to follow that plan. So we know a little bit, and that's why rates have already moved a lot and people see it. Again, the yield curve says something, but until we know when, where the Fed finds neutral and where the Fed says, yeah, this is a good spot, and they've already communicated stuff like going above neutral. But once we know where, Powell has an idea of like mission accomplished, then we can know the future effects of interest rates. But in the meantime, that's why the yield curve and Fed futures are so volatile, because everyone's trying to figure that out and price that in. And now that's what's giving us a secondary set of reactions. But I do think a lot of the bond market, just like you can't underestimate, like that's the problem right now with like everybody. I think everybody needs to understand this. We are 7 months into this fiasco now, almost 8 months right now. So it's like a lot of things have already occurred just throughout. So when we're looking at all of this, it's like the bond market has already moved a lot. Like, again, your mortgage rates are doubled. That's not a joke. And that if so that has an impact in and of itself. And what I'm saying is that we've already reacted to a lot of what's happened. Again, that's the reason why we're down here. The bond started moving, it started compressing the margins, or started compressing EPS, and people were worried about inflation. Then Powell gets aggressive, but it's like we've already made very sizable moves that's got us here. So that's what you got to keep in mind as we move forward. But now it's all about the next level. This isn't about do we have a problem right now? No, everybody knows that. And again, this last 8 months has brought us into this point. The real question is now, like, where are the next steps from here? And that is going to be the question on how that gets priced in, or is it accurately being priced in? Rockwell CEO says customers accepting price increases. Hilton CEO says business travel revenue at 2019 levels in second half. That's bullish. They're not going up on that one. Check, though. Maybe travel stocks get a pop, but business travel going up. What's his name? CEO of Hilton. CMG 15, but it's actually running. It's hitting new highs. And SPY's even coming up to a new high right now. USO's blowing up. Yeah, oil again. It was like, what, 10, 20 minutes ago, you had an oil inventory drop by 4 million barrels. A lot of people say recession 2023. Wouldn't that mean teetering on the edge for the next few months with confusion? Yeah, 100%. That fits with the yield curve and everything. It could even take a little longer. But yeah, and that's the whole point. Until the data accurately reflects, like, oh my gosh, wow, there's no point in teetering. It's bad. Everyone's going to teeter and go play this game. Oh, it's bad. Oh, it's not that bad. Oh, it's really bad. But it's not as bad as it could have been until we're like, oh, man, it's bad. Yeah, Boeing dropping again. Conference call. They lowered 737 delivery target to low 400s for fiscal year 2022. They had targeted 500 deliveries of 737. So they pretty much lowered 737 deliveries by 20%. That's coming on during the call right now. That literally just came out. That's why the stock's reacting. So there's the news that correlates with it. PayPal, they're still killing it. Chipotle running through the top right now. Yeah, they're doing great. Boeing still dropping again. That call is going on, so just be on the lookout for that. Sega hits record high, 1785. Where's the other one? Googly. Are you scared to fly on that supersonic airplane that comes out in 2029? Bro, I'm not going to lie to you. Anytime I go on a plane and then I look at my ticket and it says like the plane you're on and that shit says Boeing 7 anything, I freak out. Because I'm like, man, am I on the Ford Boeing Pinto right now? And then I get hella freaked out. And I'm like, I know what you did because I'm too smart for this bullshit. I know they just rebranded the damn thing and they didn't do much. I understand American marketing. And I was like, bro, this is a rebranded Ford Pinto. I know exactly what plane I'm on right now. And it gets me mad nervous, bro. Every single time. This is facts. That's why I'm like, bro, they've rebranded it. That's it. You ain't going to fool me, Toyota, Lexus. I know it's the same. I'm like, dude, you just changed. All you did, it was 737 Max. They called it 737 Max, and now they changed one number. And then you just took out the Max. And I'm like, nah, bro. So I'm not getting on any supersonic jet. I get nervous on all of these Boeings. I'm like, can I get an Airbus in here, please? I tried. I went up to the front desk. I said, y'all don't have any available Airbuses. She looked at me like I was insane. And I said, it's just a question. It doesn't hurt to ask. Just buy your own plane, man. I don't trust me anymore. Are you kidding? I was gonna get a helicopter and learn how to fly a helicopter up until what's it called? Up until I saw the what's it called? The Kobe thing. That one really got me. Deanna, chill. What's wrong with you? Deanna, used to come in here like a year or two ago. Used to be so nice and sweet. What happened? You wake up aggressive for Powell today? You'll be good. Go for a jog. Go for a jog. The mods are probably cracking up right now. Just go for a jog. Yeah, the Kobe thing freaked me out. And then I was like, I can't do it. But I'm not a flying person, if you haven't noticed. I'm a very grounded individual. You know, I like to say down to earth. Not a big fan of planes. XOM ripping, yeah, they came from the bottom. Did UNG didn't go up with that? UNG selling off. Amazon, Google hasn't moved. Microsoft looks to be chilling. Netflix back to 220. Oh, no. I want 230. I forgot. Still good, though. I just saw an article on Netflix. They were saying something about a U-shaped pattern. Only time I've flown the past year is it go see the call, baby. Amen. I think the only flight I was on was for the house flight. Oh, whoa, we got a hype train? Oh, Charlie. Of course, Charlie. He said, I need more children. God bless you. I forgot to take the horn out. Yeah, my bad. Amen. Yeah, I only flew to flip the house this year. That's it. Otherwise, I ain't get these house prices expensive if I ain't working, bro. That's it. I've been taking my girlfriend hiking instead. I was like, I said, you need to go for a run. And then she looked at me really weird. I was like, I meant that in a different way, ma'am. And then, but yeah, because anytime we tried, I was like, these flights too expensive. Veru emergency review. That's positive. That means they may even be able to qualify for a PRV. The EMA reviewing data on stabilizin for COVID. European Medicine Agency initiates review of stabilizin. I don't see emergency review. Oh, there it is. EMA's Emergency Task Force has initiated review of sabizabulin. Sabizabulin. That's how I don't know how to say it. Treat me as spies ripping. I don't think it's off of that news, but Veru getting some stuff. Netflix on the high. Google's even starting to move a little bit, but that slowed the premiums down. Amazon, a couple of discretionaries are killing it. Even healthcare is starting to come up, and then I think energy is lifting us up. I think energy might be the leader. No. It has to be communications. But energy's number 3 now. Energy is right below consumer discretionaries. We'll add the PR. It's not a PRV because it's Europe, so it operates different. But Veru, they have emergency review from the European FDA, pretty much. They start a review of Veru's sabizabulin. Sabizabulin. Bro, how do you say this? This is how you spell it? Because I feel like I sound ridiculous, but I don't know. It's sabizabulin. Come on. It's fun to say if you want to try it. I just posted it. That's the drug that they got emergency approval for. Abby vibe bouncing off the bottom. Sabizabulin. Yeah, SPY 396. Again, 397 is a stubborn spot. But if we could get there, that's good. XLF bouncing off the bottom. Sounds like Bill Cosby named it. For real. CRM on the high. The leaders from earlier are all going. Visa's trying to play along too. Meta's on the high too. They're killing up 4% now. Let's see. So Meta puts. Oh, those Meta puts went negative after taking 3 days to go 100%. What little scammers. But then again, remember, we have the call. So where did the call go to? The call is still down now too. Now calls are negative and the puts are negative too. AKA, the market maker won this battle. He won the battle, but not the war. I mean, yeah, the puts are really cheap now on Facebook, if considerably. Because now you have the calls are lower. Remember, I sold out of those calls for 3 days ago for $600. I bought them at 2. Now they're at 170. But then now the puts I bought at 130. They're down to 120, but they were up to 260 yesterday. So again, and it's a very, very interesting one because you're in the middle of all. You're like right in the middle of all of it, and now calls are cheaper and puts are cheaper, more or less. So not bad. Not bad. But that means if you get this earnings move, you're probably only going to make 100% on the puts. You need a real big miss out of Facebook at this point to really move them. I think the puts I had were the 135s for next week, and then I had the August 19th calls for 200. 200, Bob. Tiva agrees to play $4 billion. I think, was that in the morning? Department of Energy. They have numbers on gas demand. There's a lot. I can't read it all. A bunch of imports, refinery, and crude distillate numbers are coming in. Inventory bullish for the market. No recession. Well, if you could ease the supply concern, that would be good. But as of now, I mean, even though the price goes up, for the most part, you haven't even seen the price go up, and some would say it's because of the recessionary fear. So if you remember, I brought this up in the last day or so. We were talking about this spread between Brent crude and the spread between WTI. So if you're not familiar, WTI crude is different than Brent crude. So one of them is based on the sulfur content, and pretty much they use Brent crude more in Europe. WTI is what we use here in the States. So lately, the spread between the two has been the widest it's been since March in the invasion, and that's usually the spread is a lot tighter. But with that spread getting wider, pretty much European energy prices are going higher on oil, while our prices have came down and they're not catching up to Europe prices. Now, what does this say? We brought this up yesterday, but now what some people are arguing is that the recessionary fears in the United States, that's what's contributing to the spread increase. So pretty much what you could see is that you have a, You have a problem in the sense that the recessionary fears in the United States are negatively impacting the oil here, and that's why we're watching the spread. So the recession effects are factoring into oil, and they have been literally over the last month or so. Even yesterday there was that AAA report on how people changing their habits, spending, all of that based on energy prices. So you got to factor that in. Boeing dropping again. Watch for more comments. Spirit Air recess merger until 4:15 Eastern. Meta's going up. Yeah, Boeing has the conference call. They sold off 4% green, and now they're down 0.5%. Looking good. They're going to sell another 20 million barrels of street. I don't think that was additional. I think that's part of the original plan. But we'll find out. They will make a big show about it when it is time. BA last chance on save. Well, yeah, I mean if that announcement comes in after hours and they agree on a deal, assuming it's not already at the price, you could get a move. Just risk on what is agreed upon, and if you follow the timeline, you'll be better positioned. Boeing's still plummeting a little bit. Meta went on a run there. Amazon hasn't broken that just yet. Google went up a little bit higher, so that's good. I don't know if that play came up. Oh, they're coming. Dude, we're only down 60 cents on that play, which is wild considering we lost a lot leading into it. Now that's butter. There's Googly. Can he get to 112? Oh, he has a long... Bro, he could get up to like 119. He has a long way to... Honestly, that's why it's like no matter what, any of these moves are big, but shit, we're still low. You're still in the gulag, man. Sell puts, collect premium. Actually, yeah, that could be good. The only risk is if the deal goes really, really sour and then it drops, and it could happen, but that seems like a high probability easy one right there. The Google log. Plenty of meat on the bone for Powell to ruin it. He could, man. Thanks. They are doing good, but again, when you pull it out on the daily, though, it's not as if because I thought Google really what I'm looking for is kind of like Starbucks, where you want to see when you pull out the daily, you want to see these companies off of the bottom and getting higher than getting back to some of the earlier March and April prices more or less. So that's why when I look at Google, I'm like, damn. That thing ain't, it's not really doing that. Like Amazon, they look a little bit better. That's why it's if Netflix, they could break above the last earnings and get up to somewhere around here. I mean, I don't know about this high, but, it'll look a little bit better, but still not too crazy. We want Amazon to go down for the debit spread. Well, yeah, I mean, we would profit off of it, but it's not like we like need it to happen. But yeah, again, I have a put too. I'd love to hit on it, but like we're seeing, a lot could happen. Like even on Google, I didn't really think I was going to hit on the Google, and now with that plays putting us in a great position if we continue this. Same thing even with the Microsoft, but those are still down a lot more. So we'll see what happens with it and vibe with it, but it's not like we need it to go down. But I'm just talking in general of like a broader economic market health and like, spotting more of a bottom. Like we need more things to go up. Boeing is just getting clapped right now. So again, I put out that stream alert to watch out. Again, I told you guys that earnings call is happening. They're giving a bunch of statements. They're saying China accounted for half of the undelivered 737s. I think they're talking China stuff right now after lowering the 737 targets. Nice run you had on the treadmill. I'm sorry, Deanna, that's not good enough. Come on. I know you work out harder than that. Go for another run. That was like 2 minutes. Andrew Tate would be disappointed in you. China, well, Boeing's bringing that up. That's what they're saying is negative. China and just overall cutting the guidance, but I think they're cutting the guidance because of China. Fed pivot in 2018 after this Fed tightened. That was like at the end of the year, more or less. When things got really, really bad, Powell just pivoted and said, all right, we're done. On GovT, run the function nav, it was billions. You look at the flows a lot. We might need to do some stuff with that. I'm going to do some squats. I'll see you for FOMC. Amen. Amen. That's what we need. That's what we need. Meta pin. Oh, yeah. What if pins? I forgot. Maybe pins comes back up. Those Googles. I love it. Those Googles could turn fire. Yeah, we're still clapped on that one. PayPal. Dude, PayPal is fire this morning. Again, the Elliott stuff as well as the just Visa thing is good. Sava's on the high. So is Enphase. That means the TANs need to be going up a little more. Still watching Snap. Yeah, well, today with Meta, we will find the answer. We will find the answer. LabCorp to report. The LT ones are dead. They're at 2 cents. We bought them at like what, 15 or 18? Oh yeah, you do have a GDP tomorrow. The Google call is awesome. It depends how much you're in the money, but welcome again. Like the market maker won on Meta, and that one was I didn't think I was gonna lose no matter what on that. Like pretty much, I thought I was gonna either have the puts hold up or those calls would just rocket back up, but nope. And that's why I just take a look. I mean, some contracts did good, but just not as good as you would have thought. Like literally, most of them are just slightly above break even. That's further from the money. The ones close to the money did a little bit better. Those like went up at least 50%. So it really just depended on how close you were to the money. And I'm going on a short time frame, but anything with lower amounts of time is practically just break even or a little bit higher, 30 to 40% higher. Really didn't move too much. But if it continue, that's the point, is that if it could continue from here, it could get really, really crazy. Look at Tao, my bad. We pulled that one up earlier, and you guys were calling it. I was looking at another play right now. Did you see flow in it? I haven't looked on that on GovT. How did it even do? Oh, wow. It filled me on that? All right. I sold out of the tan plays at 115. Again, that play, we were down on it for most of the time. It's just starting to break out. So I got about like 50%, just under. I sold out at 115. We bought it at 80. But they expire in 2 weeks, and this was the biggest run. So pretty much my logic, if they turn around at any point today or tomorrow, I feel like we go right back to break even, and then we get put in a tough position. U is up now. Unity. Roblo is killing it too. Unity and Roblo, remember that? Even Google. So watch here, because if you have Google options, I mean, this is now, if you get a breakout from this point, but I think it's like 114 is when they really get crazy. Expiry, usually, I mean, lately with earnings, I've been going with like shorter terms because I've been keeping it very cheap. But like, it's a real big range. Like the XLVs I have till October. We have a lot of energy plays like Conoco till January. We have other leaps, but those we haven't really traded as much yet. But I would say anywhere from like the sweet spot is like 30 days to 90 days. And then depending on the price and everything, with shorter terms, you could go for the earnings. But you got to just be careful. Don't let them get out of hand. A Boeing increase in 737 output is hampered by casting shortfall. If you bought the September tans, you're doing better. I just had no time on that. I only have 1 more week, 2 more weeks. And then if they flip from here. But I got a good price. I didn't think, 115 on those is great. But now it's only 120 on the ask. So if those tans make another rip, you might be able to squeeze another 20, 30 cents out of it. Yeah, more Boeing news as well coming out. Let's have a rip in. Democrats delay vote on assault rifle ban. Roblo is at 39. Upstart gas, uranium. Unity's on the high too. Uranium. Like that. Sorry. Baba's safe after Hong Kong listing. They might be. They're going to benefit. Google breaking out. Watch the premiums. You could even try to double dip and snake the premiums now that they're getting back to break even. But I mean, the whole point of the whole point of Google premiums is like they're not active. So it's like if it starts to break out and they start getting back up to a high price, that may be the IV juice point, but still not there. ICLN, another clean ETF with end phase exposure. Good call out. Coinbase to relist USDC, Euro, and order book soon. Any take on Taiwan? China, Taiwan. Why is it China, Taiwan? That's actually fun to say, but I don't think it's going to cause anything. I mean, tensions are going up and people are tripping at that. Boeing to share growth plans at November investment conference. Bro, is Roblox halted? Or is this just me? Chad? Am I tripping? Or is Roblox halted, or are my quotes being really weird? Yeah, E-Trade doesn't show that it's up. That's weird. They said Saudi, PGY. Bro, the thing is, we watched that thing go crazy. I can't trust any of my charts now. Yeah, no, it's moving. It's up. My platform said it's not up, but it's up 6%. Googly. Visa. U tripping. The stock U is tripping too. Pelosi invites Representative McCall and Representative Meeks on Taiwan trip. NBC. That just came out right now. Is he crazy? Qualcomm, Micron. Trying to raise but again, I mean, I don't think China's going to do anything. It's not that, like, I honestly, I think China's been more offended by misspeaks by the president and kind of some of the times we've acknowledged Taiwan in other fashions. I remember, like, even Kamala called them and other stuff, and then not to mention all the stuff with Trump prior to this presidency too. So Hilton's CEO says business transit was nearly 50% of revenue in second quarter. That's really, I'm surprised they're not moving on that. It actually got a red candle off that. I'd watch Airbnb though. I think all the business travel news is great. All I made was a Visa play. It's still up about like 50%. And that's it. And then I just sold the TAN plays. Took profits on that. And that is all we have. The TAN plays are up 120 to 135 now on the bid. Should be able to get a little bit more. Work for Hilton is busy. All the travel, again, Visa, like the strongest point about Visa was them saying it was travel demand. Like they were just saying travel demand is spurring consumers. They're using their credit cards and they're paying for it. So if there's anything, you got something very, very, very bullish about travel from Visa's earnings. Is it Visa or Visa? Man, I don't know, but it's accepted everywhere. Why you asking so many questions? You gonna take it or not, son? That's all. Accepted everywhere. That's all I know. Isn't it wild to think that there was, in 1 month, there was $2.7 trillion of transactions that were processed through Visa cards? Have you ever thought about how wicked that number is? That in 3 months, So in 90 days, over $2.7 trillion was just spent on visas. Or like with a visa. They didn't make that in profit and all of that, obviously. But that's how much how much money is moving around in a 90-day period. $2.7 trillion just off of Visa. That's what they reported in their earnings yesterday. Boeing erases gain after lowering 2022 737 delivery target. It's Visa, Mike Tyson. It's Visa, son. So it makes the surcharges. It's just so much money. So much money. Daily basis. So many boomers going on vacations. Are you making fun of me, man? I went on 2 vacations in the last 2 weeks. Come on, bro. I needed it. It was my post-COVID vacation. It was a recovery vacation. You said a boomer. I thought it was the millennials who wanted experiences and shit. Wasn't it? You don't remember that? Like, I remember 2016, bro. People used to make fun of me for saving money and buying houses. I remember. and they weren't making fun of me for what they make fun of me for today. They were like, why wouldn't you just spend your money and enjoy your life? Why wouldn't you? Don't you want experiences? You don't remember when there was that millennial wave? You guys don't remember that when everybody was like, nah, just go travel. They used to call houses balls and chains. They're like, why would you be tied down to your houses when you could go travel the world and you could have experiences, and it's better to spend your money to find yourself on travel. You guys don't remember that? Oh, man. I still hear that just with stocks. At least it's a stock. I mean, it'd be better to own a stock than... I mean, travel's fun though. I mean, it's definitely like I do agree with some of it where I'm like, yeah, it's good to get out, get some good experiences, but like, hey, man, you ain't got to put it on the visa. You know what I'm saying? I was the same boat, but I was forced to because I was broke at 18. That's got me. It may have paid off, honestly. I said that I said that to the other day. I even told that with my girlfriend. But I think I've told you guys that. Like I was looking back and I was like, man, I got hooked up that we didn't have certain things. I remember like, bro, my parents wouldn't buy me Pokemon cards. Like we didn't have money to buy all this like random little toy shit. And like I just remember like all the trends that was like being younger, and it carried into when I got older. But because it was just like, oh, it's like I would like that, but I couldn't get it. Like it's like that would have been cool, but then before I knew it, it was like a year or two later, the thing that I wanted and to spend all the money on, that shit would become out of style. Like I remember, like literally, I had no Pokemon cards in elementary school. By high school, I was like, man, who you like? We were just like, why you still, you know? I was like, you were whack if you were playing Pokemon cards still. And then I feel you though. It's like some people, if you were younger a couple years ago, or you're depending on your financial situation, you may have been forced into saving and keeping your money instead of traveling. So may have ended up paying back. But I feel like sometimes it's a blessing and a curse because you're like, oh, I wish I could do some of this stuff. But it's like it kind of keeps you just away from a lot of BS. Like, I don't know. Like, I saved a lot of money growing up, I guess. Yeah, I'm not fiending for a Tamagotchi. And then you were 30, and if you kept those Pokemon cards, you were right. Well, no, not because if you didn't have any good cards, bro, like, I don't think they paying you for a Diglett. You know what I'm saying? Like, none of those is popping off. Like, I don't think Jigglypuff is worth anything now. I think you need that Charizard. You need that first edition, that holographic Charizard, bro. I'm just saying. I've been out the game for a long time, but I know a little bit. You know, like seriously, I ain't, if you had like a Diglett from like 2004 or something, like it's not going for 20K right now. You know what I'm saying? Like you would have been better off with Apple stock. Oh, I know. I feel you. But still. You ain't wrong. Amen. A first edition Diglett is for $36. Even the 1999 version is $7.99. This is a scam, bro. Like Walmart, they got it, bro. They got it for 30 cents. It's a scam. $5 is a C. Diglett, he doesn't have the appreciation. He was high growth. High growth, I guess. Too much future duration. That's crazy, man. Diglett even got dragged into this whole growth slowdown. That's sad to see. The deflation is real. He only stays in the ground. What about growth? Nah, bro. What's the other one? Doesn't he pop up with like 4 of his homies? Once he evolves? I don't know the math, but I just have a general idea. Just wait 30 more years. Look at you guys. We're talking about Pokemon cards, and you're like, just wait 30 years. I say that with stocks and dividends and prove how 30 years would give you a net return of 100% on a 5% yield, and you're like, oh, I'm going to wait 30 years? I'm going to wait 20, I'm going to wait 10 years? What about now? Oh, and then you guys are like, oh, but just wait till 30 years. Wait till that Diglett pop off, bro. It's like, what? Come on. You like, what about Dutrio? No? Okay. Man. Crazy. Well, Walmart. Consumer discretionaries did good. Again, the relief from Google and everything else kind of calmed things down. Dollar dropped a little bit. Bonds went positive. So calmed down a little bit from there. But that's about it. And a lot of good earnings, too, though. A lot of earnings across different spaces. Again, like T-Mobile didn't say what AT&T and Verizon said. Chipotle, that's very consumer-related. They absolutely wrecked it. And they're opening stores and showing growth. So there were some good signs there that calmed down a little bit of the excess fear that we had the last couple days. Living off dividends is the way. Eventually, you gotta work into it. That's I mean, I hope you guys don't ever forget. The long term. Once we get to the latter end of the at the latter end, that is what it's supposed to provide for you. It should be able to give you nice monthly income, pay for your rent, maybe pay for a Lambo. Who knows where it goes, but definitely. But that's it. I mean, I had a nice talk with somebody yesterday about this, and it's the talk I've given you guys every single time, where it's just like I'm a U.S. 2-year for FRNS discount margin at 0.037. I thought it was bond auction. But check out the DO October volume 7.5 came up on the scanner. DO. But like I was saying many times to you guys, just don't forget 119-day bond auction coming in too. But just if you have those dividend stocks, even if we enter the worst recessionary environment that compares to the 1970s and turns into a decade-long type of effect on assets, it's just simple. If you're yielding 5%, in that 10-year period, you will make back 50% of your initial investment, even if stocks don't do anything. So it's like, and then, another 5-10 years, and then obviously you're going to be a lot older at that point. But once you get that type of momentum and you've been dividend reinvesting, you would be surprised what some of these can turn into, especially if you add to them along the way. Yeah, we looked at the yield curve is crazy. That's what I was saying even today. Again, no matter what, even if Powell is somewhat neutral, I mean the Fed futures or the yield curve, it's saying a lot. But I think once we get past 0.50 negative, then it gets worse than 2001. What do you think about this being the richest recession ever? Due to wage increases and household net worth checking balance up, could the consumer power through this recession? Maybe a little bit. I think that would pretty much. I've never heard that. That's honestly a very interesting take. The richest recession. Honestly, that's actually wild. But what I could see is it's more or less going to slow things. It could slow the recession or make it less deeper rather than kind of avoiding it completely. Because at that point, you're just saying soft landing, right? But it's like I think it could make it where we have a less harsh of a recession. But I don't think you're getting out of this one unscathed. And even then, even if we bounced from today, I don't even think you could call it unscathed. Yeah, Dio's popping. Maybe that's why those contracts came in. If it came in around there, it could correlate with that. TAN's going up, but the premiums are still around the same price. A little higher on the ask. Come on, Googly. That time. It is push-up time, and I need to go pee, though. So I love you.
Showcasing a real use case for 5G to meet people's home broadband
this is T-Mobile,
needs
CEO.
at a time when prices and connections there are concerning Americans as well.
Mike, this might be a silly question, but did those people just not have internet before, or did they also switch internet providers? Because switching internet providers is like a big task to have to do.
Well, about half are switching from cable in suburban areas and rural areas. And so that really speaks to the value of the proposition. Do you know that speedtest.net, Ookla, just came out with a study for the first time ever showing that T-Mobile's 5G network is faster than cable on average nationwide? 5G from T-Mobile on smartphones is faster than cable. And so people are switching for a quality connection and for low prices. And what's different about ours, of course, is you don't have to disconnect your old one to give it a try. You bring home a router, plug it into the AC power. That's the only wire you need. And you can light it up and see if it meets your needs. And if it does, call cable and disconnect.
Mike, you got that advantage around 5G, but the question is for how long? Are you seeing catch up from your rivals? Is this a game? Is this 6 to 12 months out, or does it take you further, that support that you're getting from 5G?
Well, one of the things I've been predicting is that this 2-year lead we have in 5G, 2 years from now, will be a 2-year lead in 5G. And you saw that play out again this quarter, where our speed advantage versus AT&T and Verizon actually expanded. They're rapidly rolling out their C-band deployments to try to match us, and yet we pulled further from the pack this quarter. So far from them catching up, what we're seeing is T-Mobile is extending our lead, and I believe we'll have a 5G lead throughout the entirety of the 5G era.
And then to kind of put these two together, I get the whole idea of speed would be key to the broadband. But for wireless at home, I should say. But what about for switching to T-Mobile? Like, do they just want the lower price? Is it like free Netflix? Is it like, what's the thing that you do to get people to come to you?
Well, you know, we're solving right now the biggest pain point this industry's ever faced, which is for 30 years, you've had to pick between the best network and the lowest price. And now we offer both. PC Magazine came out last month for the first time ever saying T-Mobile just doesn't have a lead.
I don't know if this is an interview or an ad. Because, like, I was just going pee, and I was like, maybe I should switch to T-Mobile. I was like, maybe I should try this router out. I didn't know they offered such easy connections. Wow, who would have thought? I said, never, wow, is that easy? Okay, brought to you by Tesla, 5G while charging. He said, yeah, it's like an infomercial. Bro, Billy Banks is going to come on. He's going to be like, hey, new ShamWow by T-Mobile. Like 200 down with my T-Mobile internet. I need to see. I legit thought you started doing paid ads. Well, T-Mobile, they used to spend a lot. I remember at the Padre games, they used to give out like 200 grand or something for every home run. Like, dude, they spent a lot. I don't know. Do you guys know how T-Mobile became so big? Like T-Mobile used to be really whack. You know that? So, like, what ended up happening, this was like years and years and years ago. Where was it? I don't know if it was before or after 2015 or 2014, but they had a buyout with Sprint, and Sprint was going to buy them out, right? And then there was a antitrust. They said, no, you can't do the deal. And then there was like a $1 or $2 billion breakup fee. So Sprint had to back out and paid them like $1 billion cash. So then they took all of the cash, and then they took $1 billion and then just invested it into the company and just took a brand new $1 billion, or was it $4 billion? I know at least $1 billion. It was something ridiculous. And then they spent that money on advertising, building out the network, doing a bunch of crazy stuff. And then that's it. And then they were able to actually overtake a lot of the phone providers just off of a breakup fee. They got one big breakup fee paycheck. Maybe that's what Twitter's hoping for. Like, imagine if Elon has to pay a breakup fee. Oh, and then they just said now they have $1 billion, $2 billion to invest. Wow. Was it AT&T? Because I remember it was either Sprint or AT&T. I could be mixing up some of the details. But it was general notion. Breakup fee turned into their biggest investment. That was what T-Mobile did back in the day. What if they bought Bitcoin? They would be MSTR. The company would be worth a lot, but they would not be. I mean, today Today, they're doing good off their business. Today, people are like, yeah, they're signing up. They're not guiding lower. People like it. But they would just be MSTR. People like, what does T-Mobile do? I don't know, but they got Bitcoin. MSTR do. Honestly, we're getting closer, but we still haven't figured it out. It's a very wild concept. Remember the 5G era 6 years ago? I bring it up every time. Dude, you don't remember when everybody would freak out about 5G, and then you don't remember when every YouTube video was like, best 5G stocks. Everybody would ask me that every day. They're like, Josh, what's the best 5G stock? And now we don't even care. I haven't even heard about 6G or nothing, bro. It's crazy. Netflix 220. 10G. Biden remarks in Rose Garden. What's Biden talking about today? Oh, I think he's going to bring up something about, it's either Taiwan or I read it in the morning. Boeing, I mean, I just think they're just trapped in this like range. They've done a little bit better, but I mean, the earnings today, we'll see if it doesn't bring it down with that bad guidance. If they could get up here, I'll be very bullish on it, assuming the bad guidance on the 737 in this conference call doesn't take it down. But otherwise, I'm not trading it right now, and I'm really not too excited to. Do you trade SPX on E-Trade? Yes. I think you have to just put money sign SPX. Or no, is it? Yeah. So like even on the option chain, if you want to trade this SPX, you got to just do money sign SPX on E-Trade, and then it'll bring you up the bigger contracts and all that. Why is Snap pinned when tech is up? Because Snap is grounded right now, right? So, like, what happened a couple days ago, like, you know, the Papa Powell walked into the kitchen and noticed all of the social media was spilt everywhere. And then everybody was like, ooh, Snapchat. But then, like, Amazon, his brother Amazon, or not Amazon, excuse me, his cousin, Zuckerberg Lizard, also got in trouble. And then so did Pinterest, his sister. And then, so they got in trouble too. Everybody got in trouble, even though they knew it was Snapchat who spilt the social media. And then after yesterday, the older brother, Google, he was like, nah, man, I'm good. Like, he was like, see, look, I was actually out there working while Snapchat was spilling the social media. So once, like, you know, Papa Powell and everybody else found out that Google wasn't actually part of that, they chilled out. And then the brothers and sisters, their grounding time got lowered a little bit. But Snapchat's still kind of grounded right now. So until we see whether Pinterest or, again, his other, you know, his little lizard cousin Zuckerberg's a troublemaker. So we'll find out what happens today, and then that could affect it. But till then, you know, it's like, go to your room, Snapchat. You got to think about what you just reported 3 quarters in a row. And then don't come out until you have growth and stop spending so much. And that, so we're gonna find out though. But then if you could blame it on, again, if his lizard cousin, then it gets a little worried, because then, you know, Mama's been dealing with it for a while. She about to get real strict, and then they'll be like, why can't you be like your brother Google, huh? Why can't you be like Google? You know what I'm saying? Like, imagine, like, this is what even Jesus had to go. Like, imagine James, bro. Like, y'all know Jesus had a brother. Bro, imagine hearing that from Mary all damn day. She's like, why can't you be like your brother? That's what's happening with Snap and Google now. So we're going to see. They're going to be like, why can't you be like Google? Okay. I'm sorry. This one hits close to home. I'm just... President Biden speaks to reporters from Rose Garden. Oh, wait, is he going to be? Oh, wow, bro, he back.
All around the world.
Oh,
not just
15
here in the
minutes
United
apart.
States.
Dickhead.
We should take precautions to try to slow the spread of this virus.
Precaution that shit.
My administration has made billions of dollars in funding available to improve ventilation in our schools.
Did you say we just made billions
and
of
our
dollars?
public buildings. We've made tests widely available, so you can take one before attending a large indoor gatherings or visiting with high-risk individuals. We've made high-quality masks available for free, so you should consider wearing a mask when you're in a crowded indoor public place. These precautions
Save 15
add an
minutes
extra layer
apart.
of protection for you and for those around you. But the reality is that BA5 means many of us are still going to get COVID, even if we take the precautions. That doesn't mean we're doing anything wrong. Unfortunately, this COVID is still with us, as it has been for 2.5 years. But our fight against COVID is making a huge difference. What's different now?
We have to
is
watch
our
this
ability
because
to
this is his
protect
first time
ourselves
back.
from
I want to
serious
see if he
illness
coughs.
due to COVID.
He honestly
In
sounds
fact,
way better than before.
That's radically different today than it was just a year ago. COVID isn't gone, but even with cases climbing in this country, COVID deaths are down nearly 90%. And when I took office, that's 90% difference for today and when I took office. That's what's new. That's what's new in COVID response. Different from where we were just a year. Even if you get COVID, you can avoid winding up with a severe case. You can now prevent most COVID deaths, and that's because 3 free tools my administration has invested in and distributed this past year: booster shots, at-home tests, easy-to-use effective treatments. We've got through COVID with no fear. I got through with no fear. A very mild discomfort because of these essentials, life-saving tools. And guess what? I want to remind everybody, they are free, they are convenient, and they are safe, and they work. First, booster shots. They weren't available a year ago. They are now everywhere. Every person aged 5 and over should get a booster shot. If you're over 50 years old, you should get 2 booster shots. I did. And if you have your boosters, 1 if you're under 50, 2 if you're over 50, your odds of getting severely ill from COVID are very, very low. Even older Americans are very unlikely to get severe COVID if they have 2 booster shots. Most COVID deaths are among those who are not up to date on their shots, their COVID vaccinations. So if you're over 50 and you haven't gotten a booster shot this year, go get one right away. Go to covid.gov, type in your zip code, and find a place where you can get a booster shot for free, usually at a site that's less than 5 miles from your home. Second, at-home test. A year ago, at-home tests were rare and expensive. Now, everyone in America can get them for free, shipped to their door. Shipped to their door. There's no excuse. Again, go to covid.gov and order at-home tests for free. Testing to find out if your symptoms mean you have COVID is critical in getting treatment quickly. Third, treatments. If you test positive, we have a new powerful treatment called Paxlovid. It wasn't available a year ago. It's a pill. And now you can take these pills at home. You can get them for free at tens of thousands of local drugstores around the country. The Food and Drug Administration, the FDA, even put in a special rule so many pharmacists can prescribe this particular drug. So you don't even have to go to the doctor to get a prescription. Millions of Americans have used Paxlovid. I tell you what, I think
you have to say it right to get the ad money.
Paxlovid, including me. This life-saving drug reduces risk of hospitalization and death from COVID-19 by about 90%. Again, it's free, safe, and easy to take. And we move quickly to make it widely available, including the thousands of convenient tests to treat sites where you can get tested. And if you need it, Paxlovid is ready right then and there when you make your visit. Again, Go to covid.gov to find where test and treat sites are that are near you. Here's the bottom line. When my predecessor got COVID, he had to get helicoptered to Walter Reed Medical Center. He was severely ill. Thankfully, he recovered. When I got COVID, I worked from upstairs of the White House, and the office is upstairs, and for that 5-day period. The difference is vaccinations, of course, but also 3 new tools, free to all and widely available. You don't need to be president to get these tools used for your defense. In fact, the same booster shots, the same at-home test, the same treatment that I got is available to you. My administration has made sure that all Americans across the country, from all walks of life, have free access to those tools. COVID was killing thousands of Americans a day when I got here. That isn't the case anymore. You can live without fear by doing what I did. Get boosted, get tested, and get treatment. At the same time, my administration remains vigilant. Right now, we have the tools to keep you from getting severely ill or dying from COVID. But we're not stopping there. Earlier this week, we had a conference at the White House for about the next generation of vaccines with the goal of keeping people from getting sick in the first place, getting COVID at all, even getting it. Let me close with this. Over the past 18 months, my administration has left no stone unturned in our fight against this pandemic. None. We brought down deaths by nearly 90% since I took office because of the help of all the people in this Rose Garden. Business and schools responded. Grandparents are hugging their kids and grandkids again. Weddings, birthdays, celebrations are happening in person again. So let's keep emerging from one of the darkest moments in our history with hope and light for what can come. Get vaccinated if you haven't gotten already. And now get boosted. Order your free test. And if you get sick and test positive, seek treatment. Take advantage of these life-saving tools. We have more of these tools than we ever had before. And to my friends in Congress, let's keep investing in these tools. Vaccinations, treatments, tests, and more so we can help making them available to Americans, the American people, on a permanent basis. Let's get moving. When I say permanent basis, as long as they are needed. Let's keep moving forward safely. God bless you all. And now I get to go back to the Oval Office. Thank you all very much.
That was President Joe Biden speaking at the White House.
All righty. All righty. That was good. That was good. Paxlovid. 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 Pakistan. What? I don't know. It was a big crowd. Big crowd. I don't know what was going on there. That was crazy. That was crazy. He beat it. We could all beat it. Honestly, yeah. I mean, at that point. I mean, literally, a lot of people are like, what happens when Kamala come in? They're like, he's not going to make it. They're like, Josh, how did you deal with Josh? I know it was hard for you, Josh. That's it. It's like, that's it, man. He was throwing shots. He was like, I'm just saying, the last time a president got COVID, he was on a helicopter. I was chilling. Hey, come on. I didn't need no helicopter. I told you, give me a Neapolitan sandwich and a little Paxlovid, and I'll be chilling. Give me Paxlovid in 3 days and a couple more naps. I'll be fine. Come on, send me the bill. Come on, send me the chip bill or some shit. Come on, I'll figure it out. I don't need Walter Reed? Huh? What, Walter? I'm like Walter White. I'll shave my head and I'll break America bad, you know? Too late, just kidding. Okay, don't be a clown. Stop it. Man, no, he was talking smack. It was good. It was good. I'm good to see he's back. Good to see he's back. Let's go. Let's go. Any thoughts? Google, I mean, we're in the money now on the play that we got, surprisingly, but we're in the money, break even. So it literally took from selling off yesterday to going back up to break even on the contract. And we bought this when it was out of the money, but now we're just break even on that contract. So I like it though, but if it comes down from here, it's kind of at like a breaking point where either premiums go nuts from here or they get clapped, but not to worry. 2.5 hours, you got Jerome Powell, ladies and gentlemen. Yeah, IV crush, you might even see it across the board if things slow down or hopefully we melt up into it. Tan is still on the high. Was that today's hype? Yeah, today's hype for Google. It was part of today's hype, and again, they guided up, or at least it was looking good in terms of guidance, YouTube, and all that, and then the Microsoft guidance after hours. That's what led up to the upside. Please run for something in government in San Diego. If anything, you could insider trade and not get in trouble. It's like, I think that's the problem. I hope this is not what, hopefully this does not motivate the next generation. All these kids are like, AOC was like, I want socialism. And now all the 20-year-olds are like, I want an insider trade. And now it's just like, wait, hold up. No, I thought that's the whole point. They call it a public servant. It is supposed to be a servant. You should serve the people. It is not a money-making opportunity. I don't know. I'm sad that we have to clarify this. They're like, I want to be like Nancy when I grow up. Yeah, they're like, I'm going to get into politics and run it up. Oh, man. Altruism is dead. Nah, man, I ain't even looking for altruism. We were looking for decency, actually. Decency is the word I'm looking for. You don't even got to be altruistic. I could settle with decent. You know what I'm saying? Just give me like an old 40, 50-year-old who just doesn't have a stock account. That's all. That's it. That's it. Maybe all the politicians just don't have stock accounts. Maybe that's it. That's all. Just decent. I don't even care. We're even going to get into lobbying. We ain't going to get into how it's set up between local governments and the... No. Just give me just no stock accounts. We'll start with there. Puts on that. Get money, youngins. Spies going up. Have I ever had an office job? Kind of. I've been contracted out by companies to do work, and I would have to go to their offices. But I've never stayed at like an office job or been there. The only other job I had was Foot Locker. So I have put shoes on people and said, hey, would you like a 9 or a 9.5? And then I'd have to go look at the SKU number on the box or inside the shoe. And then I'd have to run to the back and I had to find this damn shoe. Do you know how big a Foot Locker is in the back? It's stupid, bro. The back of Foot Locker is bigger than the front of Foot Locker. And then I got to run in there. I got to go find the shoe. Then I got to bring the shoe back, and I'm short, so I got to use that giant-ass stick. I got to get that stick, bring the shoebox down. I got to run it over to you. And then you're like, oh, can I actually get a 10? And I'm like, hold on, I'll be right back. And then I ran back and did that and do the same thing. And then they're like, can you help me put the shoe on? And I'm like, you're a grown-ass adult. And they like the feeling sometimes. You know what I'm saying? Like sometimes you like it when they spray the water on your hair when you get your hair shaved, but like they just want you to like put it on their feet. They want you touching their feet and shit. It's awkward as hell, but that's what I did. And then I did consulting with office stuff, and then at that point I said, I'm just going to do real estate, and I'm never looking back. And then I made sure I held on to all those stocks. Meta's going up, Google at the high, stocks are at a high, S&P. Not everything, it glitched. Real estate's negative now. They were green. Healthcare's still negative. Materials still negative. Utilities and staples. Everything that was negative, still negative, but now you got bigger green in financials. Industrials recovered green. Energy's up 1.2. They were negative earlier. Discretionary's 2.4. And then tech is 2.8. And then communications are up 4. Again, T-Mobile, don't underestimate T-Mobile's like impact on communication stocks. It's flowing through. It is flowing through. Yeah, messing with some people's random feet would make you try to figure out a better financial decision real quick. No, well, there was one moment. I think there was the day that it was the day that was it. That's when I knew. I was like, I'm not, that's it. Because my parents, they wanted me to get a job. They were like, no. Because even back then, like, I had stock stuff. I was like, I had a bunch of, like, online ideas. I was like, again, I told you, bro, I knew about, like, drop shipping and a lot of stuff very early on. And I remember my parents were like, no, like, they wanted me to get it. They're like, you have to, they told me the internet is not going to last forever. You must work a real job. I'll never forget that. Because I just remember that. They were like so adamant. They were like, the internet is a fad. They're like, you cannot make money or a job off the internet. So they said, get away from it. It's haram. So then, they thought, literally, they were like, in their mind, the better option trade. They were like, yeah, go work at Foot Locker. That's it. They were like, that's it. Trust me. They're like, nah, that's the move. They're like, that's the one. That's the one. But then I remember I got yelled at. I was putting my shoes on somebody's feet and like I couldn't understand them. And then they started yelling at me, bro. And like I didn't know what a shoehorn was, and they wanted me to use a shoehorn. I've never been bitched out like that in my life. All because I couldn't get this guy's shoes on. And then I was just like, all right, man, I'm out. I changed my life from that moment. I said, Mom, Dad, I'm sorry to be a disappointment that I'm leaving Foot Locker, but it must happen. I said, I can't do this. And then we got back to the plan. Me and my mama hopped in that U-Haul van. Any pessimists, I ain't talked to them. Plus, I ain't had no phone in my apartment. Okay, if you know, you know. Anyways. Shoehorn got replaced with horn. Hey, man. I bet you fitted some good shoes. I don't know if I was too good at that job. I just remember I was tripping out, though, like, because you'd have to stand up the whole time. And it's ironic because God is funny like that. Because I went from, like, standing up, and I was like, how do people stand up like this for so many hours and never sit down? And now I stay seated for most of the day. That's why we have to do our push-ups. And speaking of which, ladies and gentlemen, we're like 30 minutes behind, but we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly Watchlist and main channel. First link for the Scream Alerts Bootcamp and Real Estate course. But, ladies and gentlemen, boys and girls, we've been here for 2.5 hours. We got 4.5 left to go. You got Powell in another 2.5. Sitting is the new smoking. Like I said, you could be at a job where you stand up all day. Some of you are sitting down all day, but you want to do the opposite of whatever it is. So get beside your desk and do 10 push-ups. You can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1, get on your knees, do a push-up, plank the worm, anything. But get the body moving. Then, optometrist recommendation, stare at object 10, 20, 30 feet away. Blink a few times, relax those pretty little eyeballs. Blink, 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 blink. Blink, 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 blink. Oh. Beautiful. Wow, eyeballs relaxed. Now you need to relax your shoulders. Drop the shoulders. Fix that nerd neck. Nobody is attacking you. Chest to the sun. Flex the core. Tuck the hips in. Sit up straight, baby. Put that chin up a little bit. Chin up but level. Chin up but level. Like you're trying to stop sweat from falling down your face. Just tilt the chin up a little bit. You know what I'm saying? There you go. With the chest to this. Bro, you looking good, man. You looking better than Visa earnings. Bro, you looking better. You looking stronger than consumer debt. And it sounds like an oxymoron, but I'm just saying, you look good right now, man. Wow, God bless you, okay? And legs in front of you, not wrapped behind your computer chair, okay? You are not riding a dolphin. Legs in front of you, please. And then finally, I need you to relax the jaw, get a little of these in there. Go, blah, 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 blah. Go ahead, do a couple of them. Don't be too shy. It's okay. Do that and then breathe in really deep. Breathe out with your tongue out. Do the dragon breath. Go. Let's go. Oh, I forgot. Can I go check my mail real quick, Chad? I think I got a new microphone filter. So I get to replace the dirty-ass microphone filter. And I think it might make me sound differently if there's not as much dirt on it. Huh. Hold on. Is there any news I could play you? Okay. I'll be right back.
Quarter number will be positive, but whether it's negative or positive is huge from a psychological standpoint, because you've got a lot of folks in the market and even in the broader public who are talking about, well, if you get back-to-back negative GDP numbers, that means we're in a recession. The broader economy doesn't seem to be in a recession. Certainly labor markets are still robust, and I think while the economy is slowing down a little bit, it certainly doesn't feel like it's contracting right now. And so I think the fact that we're probably going to get a positive number in Q2 is helpful. I think it would be really difficult for the Fed if we actually were to get a negative GDP number before the meeting and then they had to deal with that, because we know that Fed officials seem to be a lot more optimistic about the economy right now than I think most market participants. Most of the Fed officials that have spoken over the last intermeeting period have been talking up the soft landing scenario as opposed to the recession narrative that dominates the markets right now.
We got some economic data, may not have been GDP or PCI. Got some economic data in today, actually, trade and also durable goods investments. Does that tend to underscore the possibility that, in fact, the economy is a bit stronger than what some people are saying? Yeah,
the trade deficit came in a lot smaller than anticipated for June, and I bumped up my Q2 GDP forecast by about 0.5% on that. So that hopefully that takes us a little further away from that magic number of 0 for tomorrow. But I think from the Fed's perspective, they're looking at things more broadly. Several of the officials have noted that maybe the GDP numbers aren't giving a completely accurate picture of the economy. They're focused also on the labor markets, and as I mentioned, I mean certainly the employment numbers, the unemployment rate continue to point to a very robust labor market. So I think right now, the economy is a bit in transition. There are sectors that are weak. I mean, housing is clearly contracting at this point, but there are other parts of the economy that are still quite strong.
And labor is one that appears to be quite strong still. Also, spending, business spending as well as consumer spending is quite strong. On the one hand, that's good news. The economy keeps going. On the other hand, does that suggest inflation is more durable than perhaps we thought, and therefore the Fed might have to go farther to get it under control?
Right. Well, that's my baseline view. I think the economy is...
Chattadonia, do I sound any different? How do I sound right now? It's a really different filter. I wish I could hear myself. I probably can. Let's see. I probably can. Oh, it sounds good. Let's see. I probably can. Oh, it sounds good. Let's see. Okay, does it sound because it's smaller? Less reverb. Crispy. Oh, yeah. Oh, like you're at least 6 foot tall. Amen. I am. I know. Remember I told you that's the conspiracy. Like, what if you find out, like, this whole time I was just actually, like, 6'7", and I'm just doing this to, like, market to the short guys on the internet? Wouldn't that be wild? I feel like some of y'all would feel betrayed. You'd be like, what? Josh isn't. He's not. But I thought this whole time, Josh was. You told me. Oh, there Google is. So let's see. What are the premiums at? They should be up now. Now that we got $20, 10% gain from down like 60 to up 10. Bro, I'm 5'7". Help. I honestly, the only way I could help you is help you make money, because that's the only way to fix that problem. I'm speaking from experience, okay? So that's it. You better get to work, okay? We don't have the same benefits as other people, so we have to work, okay? It's great. Don't worry. You could be, it feels like a disadvantage now, but trust me, you're going to end up good. You're going to end up good. That's all you got to trust me. It makes you learn how to survive. I think it's like every $125,000 you make is like, it increases your attractiveness on like a height of like 1 inch. So pretty much, or I think like, or if you make like $250,000 a year, that's like being like 6 foot tall. They've done studies on this. I'm just reposting, or I'm requoting a TikTok. So I don't know. 113, yeah, Google's ripping, so is Amazon. I think Powell gets asked why they haven't tapered as much since they would let the balance sheet reduction. It appears they stopped buying. Well, yeah, that's what I brought up yesterday on the watch list, that I'm going to look for somebody to ask it. But there is two views of it. So it's like retail is confused about it, but like most people on Wall Street, they're not asking this question. They don't really care. What they're saying is that like you have to look at the effect of the market, look at where the bonds are, everything else. And pretty much what people are saying is that given what we're going through already, it's already priced in the moment they set it. So even though you're not watching the balance sheet go down, Wall Street is believing that it's already priced in and that it will go down. Pretty much they're not assuming that, and you're already kind of seeing some of the effect before the balance sheet goes down. However, a lot of people on the retail side are asking this question. So I do think he might get asked this today, and I think it'll have some insights, and then also to pair it with any other news on increasing the pace, I think that will explain a lot more too. Playboy 52-week low. You sold Woogly too early. I mean, it depends when, but not a bad move because the real money on Google is tomorrow, or if it goes like crazy from here. Because otherwise, a lot of the contracts have just came back to their original levels. Past two Fed meetings, the markets have rallied end of the day, then gave it all back the next day. Yes, I think there was a lot more on the. I think there was a lot more. There's a lot more anticipation for the last two Fed meetings, though. That's what I'm saying. Like, I really think this one will be borderline neutral. I'm not really the market impact initially should be a little bigger, but people aren't anticipating as much unless we see him be extremely specific, but I doubt it. So we will find out. Microsoft, they're hitting a high now too, but those premiums are still down. Volume, it was pretty active in the morning, but now we are well below average. That means the last 2 hours, you probably did like what? We're 15 minutes off hour 3. You've done like 5 million an hour in the last 2 hours, and then we opened up with 10 million in the first hour, which was good, but pretty low right now, honestly. 20 million by 15 minutes shy of this third hour. The last 3 meetings, Powell took questions at 2:30. We rallied. Right, there has been a moment, and then right when he opens his mouth, it depends on the first question. But like I'm saying, he's most likely gonna sound like every other Fed meeting we've seen recently. So that's what we're looking for. Is if anything new comes from it, that will be it. Yeah, earnings outweighs Powell. We have 80. We already know 85% of their roadmap, pretty much. And like anything we need needs time to like really find out what's going to break first, either the Fed or inflation. I mean it's going to take a couple of months. I mean that's why the yield curve, even coming into 2023, that's when we're really going to see all the real action, more or less. So, I did not get it. Tradingfraternity@gmail.com, my friend. Dividend looking nice. Google, Saks, PSEC, MPLX, IEP, MO, Sun. There you go, man. Dividend's good. TTD on the high. TTD popping. TTD popping. Check news. TTD popping. Check news. Heavy volume. I'm not seeing any news on it. Were these already up? Yeah, I bought a premium on one. I don't have any news on it, but Wasn't it a couple days ago? It was like the Microsoft partnership and stuff. Let's check. Oh, I think they got earnings coming up, but that's it. I'm not seeing anything on it. It's popping though. Who else? MG and I, the same thing. If there's any sympathy, just be on the look about it. TTD, Google is preparing a pushback deadline for chilling off tracking cookies till 2024. Oops, old news. Is it? So don't trade that. I made an August play for 38 bucks. That's it. But it looks like the news is the Google thing. It hasn't hit the wire just yet. It may not hold. It was just a big pop, but it's not. I mean, and they're already up 7% today, so we'll see. The cookies, it might just be for the EU. I mean, there's some related to the Apple stuff, but it's bigger. There is a bigger deal with it in the Europe or the EU. AMD pulls 80% on that Preem. Yeah, it was already up when I got. That's why the ones below it were a little cheaper, but the ask. And then it's because it starts going in $5 increments. But we'll see if it continues. But again, I don't know if it's going to hold there. The first pop was big, but the follow-up not too big. Company was TTD. Remember, we've seen a couple of pops. They can move pretty big. Googla Woogla coming down. Amazon's still coming up. Microsoft near the highs. Meta's still going. Snapchat's pinned at a BNB. Visa chilled out a little bit. UNG, not too sure. I mean, UNG is up 50% in 3 weeks, so I wouldn't be disappointed with any pullback. It's honestly good because if it could have a decent-sized pullback, it could even give it some more fuel if we're actually going to see a real move. Spy calls, maybe if you want to play the Fed, you could look at some of the dailies. I mean, it's Wednesday. I think there is an expiration. Just be careful. And then Qualcomm's today too. Tesla's on the high. Tesla's starting to break out. XLV too. Oh, that's why. Wait. Why did that show up on there? Oh, that's XLY. I was like, damn, XLV's going too? I said, maybe we should be ripping way, way bigger. Iraqi protesters storm parliament in green zone. Beto pop. Yeah, Beto's going up here. Tesla Q on the low. Tesla on the high. Tesla's really going. So he moved up like $4 or $5 in the last couple minutes. And then SPY is just straight melting up right now, 919. Got about 2 hours until Powell. CTD, is it going again? Yeah. Again, the premiums are already expensive, so just be careful. But if it holds, it's good. But I don't think the premiums are even popping off that again. Again, I paid a lot for mine. The ask is up, but that's it. Yeah, the banks. Well, the banks were doing good the other day. BP. I just saw it right now. I didn't know what company it was. So BP, a bunch of puts just came in. TTD premiums, they're cheap, but they're just, again, the thing could move, but the stock could also not do a lot. Any play? No play on Baba. It should have been bullish with all the Hong Kong news. It might be up today, but barely up. I mean, remember yesterday went up 5%. TTD, big call candle now, or big candle down. Amazon, looks like some things are kind of giving up the gas here now at the top. Everything looks like it's getting a candle. I think someone did bet $1 million on it. Defense. Hey, man. If UNG goes low enough to get back in, it would have to go down like 30%. Or if we could get like a big 20%, 10% candle, that could do a lot. But, I mean, don't underestimate what UNG has done. I'm surprised that everybody's so interested in it all of a sudden again. But it's just like you don't want to be like, I'm telling you, like in this, like just imagine the world that we live in with commodities. Just buy them when they flush out big no matter what. Why? Because it's just like if it does come back up, at least you know the whole broader situation is in your favor. If it doesn't, then a lot of other things will get better. But the point is, just don't buy into the highs on any of them. That's all. No, I still have it. I have 2 more contracts remaining. We've already made it like above free and beyond. I've realized like $3-4 grand of UNG calls already, and we still got another like $2,000 left. But just don't try to do it. You know what I'm saying? Like it's just don't try to buy it when it's up 50% in 3 weeks. Remember, like we didn't make money at any time doing that. The only time we made money buying the upside is when we played the first breakout at the beginning of the year when we realized, oh crap, maybe domestic gas is about to start get affected by the European situation. So literally, it was the end of March. The Ukraine stuff already happened. So it was right when it started breaking out here, end of March, early April, we made the first play. And then any of the second plays, we played the gigantic dips here. I think we played this dip or this dip, and again, 1,000%, or this one was 2,000%, 1,000%, and then when it dropped here, we finally bought the next big dip again. So just what I'm trying to say is just wait until there's like a really, really big drop, and then you could take advantage of that, and the premiums come down. That is where you want to start taking advantage of it. But other than that, it's like you could still make money at a higher price, but remember, the higher you pay, the less you return. It's like cap rate. So you still might be able to make some money on it, but just remember, if you end up overpaying, that can turn around and cost you. So the way I look at any of the gas plays, I just wait until there's like a fat drop or there's a fundamental shift in the market, and those are when we go after it and you'll make money. Otherwise, it's kind of hit or miss. You're the man. Nice explanation. I hope it does, man, because they've been awesome plays. We've hit a lot of good energy plays this year, and a lot of people bring it up. I mean, we were pretty vocal about the UNG. We bought it like right here, and there was like 3 or 4 days. Even right here, you could have got in, but then after that, it's just like a lot of people want to get into it and expose themselves to more risk. Where just look at the volatility we've experienced. It's like if you could wait a couple of weeks, you'll find your opportunity to just get something where the odds are really, really in your favor. So would I play it to the downside? No, I'm not really. I haven't tried to short any of them. Again, I was going to short oil when I called the drop, but then, I mean, it just started moving a little too quickly there. But that's not necessarily the route that I am taking. I just caught my reflection in the computer screen. And I was flexing and my arms look big. That's good. I feel you. Tesla 815. Snap big candle. Microsoft again. Googly woogly. Come on. Go googly woogly. Meta. Roblo. Dude, Microsoft, I don't know if those are going to start climbing. Google's a scammer. Honestly, I think those can come up, but we need more juice. Meta high of the day. Did they raise those prices yet? So now my calls are coming back to break even, but the puts got clobbered. Not too much, but we lost all the gains on it from yesterday. Coin little breakout. Yeah, Powell could still, I mean, you got to realize it. Today with Powell, one comment that just gets interpreted in a negative way, or if they really are reaching to try to get some clarity, and, you know, it leads to Powell saying something, you never know. Like, again, something as little as saying that their commitment is, you know, unwavered, or if he says something where it's going to be unconditional, he could signal a couple of things here and there. But for the most part, I do believe earnings will have the biggest impact, and we got to kind of look at everything combined. You know, today is about Powell as much as it is Powell in response to earnings and earnings in response to Powell. That's kind of how we got to be able to break it down. So, yeah, like if he doesn't have caution with his words, or if a reporter gets it out of him, or if he just wants to take a more aggressive tone to make sure it's communicated, those are the things that could surprise right now. But other than that, this is like one of the only meetings where there's not much room for a big surprise, in the sense that it's, you know, we've had data, we've had time to interpret the data. Although we freaked out initially about 100 basis points, you know, a couple of things have already changed since then. So how it's playing out is like there's just a lot more uncertainty at this time around, or again, the chance for a surprise, than there was at the last meeting. So that will have an effect. I'm going to sell if Powell feisty, but he might not be. What could Powell say to create the best case scenario? Best case scenario would be to repeat everything you said last time, stay away from recession, and if not, double down that it's not a recession and that you still could see a soft landing, reassure that there's still going to be pain so that people don't view it too rosy, and then don't answer anything about September. That would be the best case scenario. I would say. If you could stay the same, not answer September, and not really feed into any recession talks or anything of that nature, and then still highlight that, this is kind of what we should expect with pain and that it's not over yet and that you're still working hard, that'll be good. I think worst case scenario would be if he did 100 basis points or if he gave any sort of explanation towards September that didn't sound really good, or another possibility could be that if he ignores the September question, maybe some people get bothered by that and maybe the market has a tantrum, but I doubt it. But if that did happen, that would actually turn into the worst case scenario. But anything related to September, or if he gives out data points that kind of we could already see have gotten worse, like if he says, oh, just look at employment, or if employment goes below this number, and then he could kind of paint himself into a corner, and that could be pretty negative. So we will see. His talk is actually 2 hours and 29 minutes, 2.5 hours on the dot. In an hour and a half, we will get the actual report. So even from the actual report, you're going to get a lot because we're going to see economic conditions, current condition. They always have that one paragraph that explains what they're reacting to, or if the economy is good and growing, or how employment is. So we'll get that in an hour and a half. And then the real questions and where some of the more volatility will emerge will come at 2:30 in about 2 hours. It's going to be exciting. Give me that 100. I mean, I don't know. Do you want to? If Powell, again, the craziest part is that if Powell does 75 today, he is still just as aggressive as Volcker, which is like, that's what, again, I don't know why 75 is treated so small, but you got to realize you went up 1.5% in 2 months. I don't think they feel me, Chad. I don't think they feel me. Please, let me show you. So here's for context. So again, the last time we ever went up 150 basis points in 2 months was the last time it was Fed Volcker as chair. But to give you some context into how big your after today, how big the last 60 days will be, just look. They kept rates low. So from 2008, 2009 to December 2008, they were at 0. Right? They didn't start moving till 2015. So that right there, 2008, 9, 10, 11, 12, 13, 14, 15. About 7 years just to go up 0.25%. And then once they started that in 2015, they went from 0.25 all the way to 1.5 before pausing at the end of December 2017. So last time it took on any other rate hike cycle, the last time we got to 1.5, it took the Fed about 2 years. The other time it took even them 5-7 years to move 0.25. So now after today's rate hike, you will have moved what they used to do. This is modern too, because this is based off the last time it happened. Like in 2017, pretty much we've moved up faster in 2 months than we would have done in a whole 2 years during that time frame. Chip bill passed. Kind of volume was coming in there early. Intel's reacting. Let's see. Disney is starting advertising deal with Trade Desk. Oh, no, that's old. I'm on the wrong news scanner. I said, what? Dollar ripping, no bueno. Yeah, he was negative all day today. But now he's come back with a vengeance. We're going to be super bull if the Fed is taken positively. Yeah, and and if Powell, if he wants to burn the card and just corner the markets into September, he can make it very bullish. But he could also be very, very bearish if he fumbles how he communicates September, and then it sounds too aggressive. But if he literally is willing to say, listen, We've done a lot already. I'm willing to go back to 50 basis points in September. Market is going to rally up, especially if Meta does good. But then if Meta does bad and the rest of earnings, I mean, just don't underestimate how fast earnings can pour cold water on some things. Could he do more for 100? He could, but it wouldn't be rational for Powell to do that. Like, what benefit would he get by doing a move that's not priced in by the Fed futures and that nobody was expecting, and that would add a lot more pressure on the market? That's not going to like, it wouldn't make sense for him to do that. That's like go right now, like that's like just going up to your girlfriend and telling her that you cheated on her, even if you didn't, and then just like, for what reason? Like, you know what I'm saying? Or it's like, bro, it's literally like it's going up to your girlfriend and saying a whole host of different things where it's like, why would you do that? You really don't need to go and do that right now. So it's like a lot of, like, it doesn't make sense for him to go above there unless he really just wanted to break up the market more or less. Yeah, Netflix, we need that above 230 could get crazy. It didn't make sense for him to keep calling inflation transitory. No, it did. It did. You could talk him down. That's it. Bro, half of 75% of America got tricked into believing that for most of the time. The same people who right now are saying, oh my God, GDP, 2 quarters, recession. Like a year and a half ago, they were saying, oh, it's transitory, it's transitory, it's transitory. So it's a little different in that sense. Like, he had reason to, because if you could control the psychology, if you could keep the expectations and keep the market kind of anchored, saying transitory had some benefit. Don't underestimate that. It's not like he just made a mistake. That mistake just so happened to buy him a year and a half of time, even though it was his biggest one. So it's there. But in this case, it really, I don't think he would break the Fed futures trend. Again, even since 2018, even as of recently this year, we have seen Powell commit to the Fed futures like it's nobody's business. Like, he loves the Fed futures. He won't break from it. Again, our first TLT, the first TLT we ever hit, 10,000% play, we played it on the first rate cut in 2019. And the reason why we played it, because it was going to be the first in 10 or the first in 40. It was going to either be the first rate cut or it's going to be the first time in 40 years he breaks the Fed futures. This was in 2019. This was before any COVID, before anything happened, before any pandemic. You know, Powell's credibility was a lot different back then. But even then, I thought he wasn't going to do it, but he did. He will stick to those Fed futures like it's nobody's business. Again, the last CPI 2-3 months ago, when it hit that high number and the Fed futures priced in 75 overnight, he followed it. So that's the easiest thing to look at coming into any of these meetings. He is not going to do what the Fed futures doesn't. Until he does it, maybe, but the man, like, you could tell that he values it. Like, it's just simple as that. Like, because, again, I disagreed the first time he ever did it. I was like, why would he do that? Like, again, even transitory, it's like, why would he do this? You know what I'm saying? But he really is, those Fed futures are important to Powell, and I don't think he's willing to violate that. I think he's willing to violate how many rate hikes. He'll raise this shit. He don't care if the market comes down. But I think the last thing Powell wants to do is get rid of that credibility between him and the Fed futures. Because no matter what, when it's all said and done, that makes him somewhat predictable. It makes it where at the end of the day, there is something over the last couple years, even in this crazy volatility, there is still something that we could hold on to. Even if it's a different administration, it doesn't matter. Again, Powell has exhibited this under both Trump and Biden. So this concept of Powell strictly following the Fed futures, it did not just occur this year. It did not just occur in 2019. It's been at both times. So that's where I'm like, Powell, he really likes it. Leafly, is this weed? Is it weed? LFLY? They were halted and now they're popping up right now? You have to remember, Fed futures were 80 and a 1. The only reason they fell because someone from the Fed said they will be against it. Well, 2 people did. It was 2 or 3 people, but yes. And then, though, what happened? What happened after all of those Fed people talked? More data came in. People reacted accordingly. Commodities still stayed lower. And that's the thing now, too. This is going to be one of the first Powell meetings where commodities have actually dropped for over 30 days. So now Powell and commodities going down for 30, 45 days, that will actually get factored into their decision. And we're going to hear what they say about it. And maybe they have guidance on it. Who knows? Either way, it's going to be fun. I hope you're ready. Does this live trading work? Do you tell us your trades? Every now and then. It depends. We only made 1 trade today on Visa. Oh, and TTD. Leafly popping. So that's a runner now. You could trade that if you want. Currency on Amazon. So Microsoft was able to get around it. It's constant currency. So as long as they don't miss their growth target on constant currency, people aren't going to freak out just yet. And the dollar stopped going up too. So we'll get an idea. But for the most part, they should be insulated of it in the sense that as long as their real growth doesn't drop, they should be good. You sold TAN. Is it up more? TAN. Isn't it weird, like, the solar ETF is literally called TAN? Like, I thought the whole idea was to generate energy, not, like, TAN. But, like, it makes sense, but, like, I'm like, wait a minute. Like, how come it's not, like, clean? You know what I'm saying? Or, like, just why don't they just call it, like, SLR, like, or SL, like, solar? Or why don't they call it, like, sun? Or, like, sun rays? They're like, TAN. Wind ETF is fan. I'm down with that. I mean, I feel you. I feel you. And then they get like super like borderline racist with the China ones. They're like yin and yang. I'm like, oh yeah? What made you think of that, assholes? And then it just goes, and then like some of the names make sense, some of them don't. You know, it gets really, really weird. Like boil and cold, like what? Like y'all just... Yeah, bro, that's like if they had a Middle East ETF and they called it Habib and Haram. That's it. The bullish one was called Habib. You're like, oh, Habibi. And then the bearish one, anything that's on the downside, they're like, oh, that's Haram. Oh, you trading Haram? That's the only thing I could see. I'm like, hey, wait. Like, why y'all bringing the culture into the ETF, bro? Yeah, they're going to have halal and haram. Oh, man. Sand. Haters. We're doing on the meeting. So go watch the watch list from yesterday. We have a nice list, but I mean, to keep today very simple, the biggest thing is if he touches on September and what the Fed plans to do or whether or not he ignores that question. That's where it starts, then economic conditions, and then we go from there. Where did the girlfriend thumbnails go? I told you. She broke up with me because like she said, you can't get the likes without me. And then she started her own YouTube career. And then she left me. And I was like, are you for real? And she said, yeah. And then I was like, I was like, just give me my Abby vibe back then. She's like, what are you talking about? I'm like, I don't know. And then that's it. That's it. No, I'm just kidding. She did get, she got mad at me, though, for the Selena thing yesterday. I told you if she listened to that. She's like, how come I didn't make you starstruck? I was like, I don't know. I'm just like, I was like, you're not famous? Like, I explained the story. I was like, what? Like, come on. Like, what you want me to say? And then she was like, Selena. And I was like, what? I was like, you're hotter than Selena now. I was like, I'll give you that. And then she was like, I was like, so what's the issue? I was like, I got you. I don't even like Selena like that anymore. And then she's like, well, what about back then? I was like, I can't lie to you. Selena was fine as hell. Like, you want me to lie to you and tell you that old Selena wasn't the baddest. Oh my God, come on, I can't lie. Like, do you want a dishonest relationship, or what do you want out of this? Well, I said, you're good right now. I said, that's all that matters, the present. This one was a real conversation. This one was a real conversation. Yeah, right now. That's why I said you better just play defense. Yeah, I was like, defense. Defense. Why does it market caps don't mean anything? I mean, they do. They do. Right now, we're still. That's why, like, at the end of this earnings and so far with what we got, we haven't really, there hasn't been earnings compression. Initially, what we've been dealing with is market, pretty much the compression of margins and just even price compression in general on these stocks. So it's going to lead into the earnings, but for now, this is just the multiples. And so market cap has had a little bit more freedom. Minutes come out before Powell. No, the minutes come out in 2 weeks from now. Real estate data was awful. Continue to wait to buy in Miami. I wouldn't listen to anybody. I mean, you should always be looking for a deal, no matter what. The right deal in Miami, take it. That's it. I mean, obviously, you have more. These numbers, all it shows you is that, like, as much as everybody wants it to crash, let's just not forget it's been a seller's market for the last 2.5 years. And all this data is showing is that it's kind of transitioning back into a buyer's market. So that the prices have calmed down. They've chilled out a little bit, but it's like, again, I'm speaking from firsthand experience. I'm still getting deals, and I'm still buying houses too, but I'm just making sure I get them at the right deal. So I would definitely keep looking no matter what, but don't be so jumpy where you're taking things and paying above asking or buying the most, just don't be the most expensive house in the neighborhood that sold this year. That's it. That could take you a long way. Profits, V came down. The V put. Real estate, significant crash or correction. No, whatever is happening now is kind of borderline what I expected. I mean, the data is coming down, and people think it's very scary, but notice the price hasn't really dropped. It's holding up there. Again, I thought worst case scenario, maybe we go down 5% in price. So even though sales activity is going down, it's there, and I don't really care what anybody says at this point because I'm like, dude, it's not like we aren't 8 months into this. Exactly. You guys have been saying for 8 months, the market would drop 10%, 20%, 30%. Crypto drops 60%. Every single growth fund drops 80%, 90%. Bankruptcies. You got energy problem. I could keep going down the list. Food, everything. All of this has already happened and has been going on now for the third quarter. And there has not been any sign of 2008 or a dramatic price drop in real estate has shown. All you've seen is sales activity dropping or slowing down for the last 4 months. But again, the prices are staying stable. So I just think before we go to a crash, we're probably going to shift to a buyer's market. And that's what I see happening. So take advantage of the buyer's market. And that doesn't mean buy anything you can. It means buy something, get good value. Use this opportunity where if other people, are willing to sell houses or they want to get out now and you could offer that liquidity, you could walk away with a very, very good deal. I won't see the prices drop significantly until employment rates come up. Yeah, and until supply, just like the Lambo index. It's not about like everybody is reacting so early. Honestly, I wish everybody reacted like this to inflation. That's the hilarious part. Like if everybody was this adamant, like right at the early signs of recession, early signs of GDP, if they treated inflation like this, oh my gosh. I feel like it was, again, people were fighting, trying to say, no, it's transitory. It's transitory. You know what I'm saying? But it's like, nah, so with how it's playing out now, man, it's just we got time. You need to wait till it hits the market, till like later on you actually need supply to go through the roof for cars, for houses, and that is when things will start going down. It does correlate more with unemployment than anything, but it's like it's leading into that, and then once people have no choice but to sell, that's when you really start to see the problems. So here it is, Lambo index. It's only gone up 1. I think it's the same as yesterday. So no new increases. Want to buy 10% of your house? Not really. I'll buy all of it. But usually like a 10% deal, not necessarily. Like we usually, if anybody wants something like that and they have equity, we just do a loan. It's just a straight up loan with a lien on the property. But that's why you got to be careful, because this is what I say. Like, a lot of people even ask, like, should you crowdfund real estate and stuff like that? But you just got to be careful, because like owning smaller portions of real estate doesn't go too crazy. And then if you don't have the good liquidity and everything, it just doesn't really it's not worth it's honestly a bad deal for the investor, especially if you're a smaller investor. It doesn't really make sense. There's no real money on that 10%. Like 10% of a $500,000 home is $50,000. So what will that do? So it's like if you would have to double, your house would have to go to $1 million for it to go up. It's low risk. No, it's very high risk, because then again, if you fail on that house and I just bought equity and I just become on the title with you and it's not as a loan, it's actually debt more often than not. 1 hour, 8 minutes to go. Yeah, fractional share of a house, not a good look. That's why, like, if some of you want to do like crowdfunding, be careful. I said it the other day. That's why I was like, if we ever did that, people have asked, like, it would be a huge minimum to invest, because it's not a good deal to do that. If you want a loan, like, that's the best way to go about it. And then it makes more sense for you. So why would you give up the equity, and you could profit off the 90% of it? But it's like you could go get a lien where you say, hey, I have $200,000 of equity. Give me $50,000, and then you put that as a mortgage on the property, pretty much. And then that way, if anything happens, the house sells, whatever, it gets paid back there. Could you do loan based on payback only on the sell? Yeah. Or you could just set a term, 2-year payable all at once, balloon payment. AGL on the loan? What's this? AGL? Agalon? No, I'm not seeing anything. They're just dropping. Yeah, they're getting clapped. It looks like something. Agalon. Citron. Oh, Citron? Yeah. Citron just came out with a tweet. He said, we're not going to write another short report unless we found a company that we believed was harming the system. Ridiculous valuation. Headwinds are only getting stronger. We found that. Here it is. It's Citron. Agalon, designed for abuse, exploiting short-term loopholes in Medicare and primary care. Target price $5. History of abuse. Nosebleed valuation. Their most exploited loophole just got smaller last week thanks to CMS. They help primary care physicians transition business to more value-based medicine using a proprietary platform. Private and nonprofit entities finding ways to insert themselves in the transaction between physicians and Medicare. So again, Citron hasn't put out a short report in a while. So that's what Aguilon is responding to. He's saying $5 target. They've been killing it. I mean, maybe. And that just came out right now. Again, that wasn't too long ago. That was literally 2 minutes ago. It started moving before, but the report came out on that candle. Yeah, all Citron. They said they would never issue one. But that's why he said he really believes they're harming society. Then SPY, Big Red, Net on the low. Coca-Cola, I thought Cloudflare was doing good there. UNG getting Vasi bopped. Yeah, CMG is killing. They're coming down now, though. It looks like everything is. We had a pretty big tech rally there. It's 10, 1 hour away till Powell. And Aguilon is Citron. Lowe's is doing NFTs. You got an Instagram. What? You gonna NFT a kitchen? Like what the? Hold up. They're like, buy your NFT backsplash. I just tweeted to Elon that God loves him because I was looking for more data on that Citron thing, and then a tweet of his came up. So I had to let Elon know that the Lord's favor is on him. He should already know. I feel like an NFT. What does that feel like? You're almost 3K negative on. Oh, like the stock. I'm like, I thought you meant like on the, like your crypto platform. I'm like, how is that even possible? Powell is in an hour. No, Powell's comments have not been leaked. I feel like every day we have a Fed. Everybody always says that. So just don't get too jumpy here with any reactions. But Powell, the release comes out in an hour. And then an hour and a half is when we hear from Powell. Bro, this is bad. And then AGL dropping. Bro, look at this. This is Lowe's. Exclusive NFT wearable. Open builder. Bro, they have like what? Like, look at this. This is crazy, actually. How, like, who thought this was like, yeah, this is fire. Bro, boots. You could buy a NFT work boots from Lowe's. They're like, you want a reflector safety vest? We got those too. New NFTs. That's crazy. That's like crazy. That is honestly like wild. Someone's like, damn, that's fire. That's fire. It's materials to build your house in the metaverse. That's crazy. That's crazy. Microsoft and everything's chilling now. We talked about land investment the other day. They have a metaverse hub. I want to stop reading, but I can't. Lowe's NFTs are all claimed. So everybody, they're already selling like hotcakes. We're over here laughing, and bro, you can't even get those. You can't even get those Lowe's Timberlands. Stop playing with me. I know. I think the idea of a bunch of like millennials spending thousands of dollars for fake work boots, I just think it's ironic. I feel like Elon would like that joke. I don't know. There's something about it. Powell is going to be an hour and a half till the press conference, and then 1 hour until we actually get the release. Can you get a home loan without the refi? Yeah. If you do like a private deal like that, it's a promissory note that just turns into a deed or a mortgage essentially. Like you guys know you could make your own mortgage to somebody. Like if you own a property that's free and clear and somebody loans you money, you could just file with the Secretary of State as a mortgage. And like even if you're not a bank technically, you could still be able to be on the title as a mortgage even if there's nothing on it. It's just like and then same thing. It's just like it's a promissory note. Just how you want to define it and where you go from there. But everything starts as a borderline. It's just a basic promissory note. And then depending on if it's secured or unsecured, if it's secured promissory note, is pretty much a deed or a mortgage. And there you go. Don't forget, in 2000, Pepsi bought virtual property in Entropia. The game is still... Was that game like Second Life? PHILO early. We might be able to. I know we got Powell. I got a little PHILO for you, actually. We could probably break it down. Powell's in, what, an hour? More blessings going into the primaries. Big bro, cash is king. Amen. Amen. A little bit of everything. Oh, no. Amen. No. Not Half-Life. Second Life. You guys remember that? That game, Second Life? It was like the metaverse, and I was like in elementary school when I heard about it. Does anybody remember that? Second Life? Nobody remembers that. I think we talked about this. Yeah, look, it still exists. Bro, it still exists. Like, this was back in the... Dude, this is old. No, it was like The Sims, but it was like you get to make your character. These are all people on the internet. And, like, you would go and, like, it costs money. People would build houses. You get to build your own home. You got to, like, talk with people. Like, bro, like, I remember I was like, oh, this game looks so cool. And I was like, this is so expensive. And I don't even have a computer that could run games because we're poor. But, bro, this was, like, back in the day. Where's the Wikipedia? Yeah, 2003. 19 years ago. It's still, like, this was the first metaverse. GLW on the high. GLW. Corning. GLW. Big Pop Corning. Deutsche Bank maintains rating. That's it. There's ratings coming in, but I don't see anything else. GLW. Decent pop, but be careful. It could play out like, what's it called? TTD. Yeah. 2 candles now. Not seeing anything about it. I like Corning. I think, didn't they have earnings? It's something that made them move the other day. I think it was earnings a couple of days ago. Premiums are kind of cheap, but the asks went up. Again, we don't know why it's moving up like that, but big volume, and they pop. Let's see. All right, give me a sec.
is going to continue
Follow
to
me on
grow in the
Instagram
second half of the year.
at the Trading Fraternity.
I do have those
I love
GDP
you.
numbers tomorrow.
God bless you.
I'm curious about the terminal rate, though. We're going to come back to the data in a second. 4 or 5% on the terminal rate. Do we get there? What does it take for the Federal Reserve to actually pivot and perhaps repeat the mistakes of the 70s?
Well, I think it takes a substantially lower inflation profile, number one, for the Fed to pivot. And that's how Powell is going to frame this today. We think he's going to have the same aggressive guidance of 50 to 75 going forward for the next meeting. And it's going to take clear and convincing evidence, as he said. I think what the market is underappreciating is that to get that pivot, you really need a recession happening in the back half of this year, 6% unemployment, to get lower than what the market is pricing for Fed terminal right now. And that's by even their most dovish policy rules. So in our view, the market is underappreciating how committed the Fed will have to be to bring inflation down.
So if that's the case, then why not go 100 basis points? Why not put it all out there? What is the point of slowing down those increments now?
Well, I think from Powell's perspective and others on the committee, they're cognizant of the long and variable lags of policy. Powell said last meeting, and he'll probably repeat this meeting, that 75 is a decisive move that shows that they're responding to inflation. And they really don't want to add some more disruption to markets, especially with QT acting in the background as a constant tightening impact.
Right, and of course we still have the economic data that we're going to get, GDP numbers and the employment cost index to really add to the labor story. Megan, what does that mean? I'm going to give you the last word here for the market reaction for Treasuries in particular. Is the bull case for Treasuries back based on the slowdown that we're seeing?
Yeah, on the Treasury side, I think it's really more about the 3-month 10-year basis is they're flashing signs of recession there. 30 basis points today. It was closer to 190 basis points looking at that relationship at the end of Q1. To me, the more important factor here is going to be credit spreads, which are arguably just too tight if we're actually heading into a recessionary backdrop.
MasterCard.
We should see that ultimately.
MasterCard. Hold up. They're dropping. They're getting clapped right there. That's a big candle. And it's a little unusual considering our city and the other ones coming down. Oh, come on. Expected bill. Senators aim at Visa and MasterCard credit card fees. So there it is. They're at Visa and fees by government bill related to it. They hate Visa. Everybody does, I think. Oh, wow. Those are going up a lot. Nah, it's kind of hard. Check out for any of the credit card companies. Again, expected bill at taking aim at Visa and MasterCard. Just raise, yeah. Visa's dropping. I mean, you could go for some of the plays. Just went ape shit off that. There might be a second move, and I don't know if that has hit everywhere yet. Visas might be a little bit cheaper there, but again, they all just went crazy off of that. Because the Visa puts are really actually the Visa everything's just jumping up now. Very, very difficult if you want to go after some of them, but if it makes another leg lower, Visa's dropping there too. Apple could move off of that, but it says specifically Visa and MasterCard Senate bill to take aim at both of their credit card fees. Oh, yeah, what about Square and PayPal, actually? They might, because remember, PayPal had a little bit, but there's MasterCard. MasterCard still has earnings. Visa already reported today. Yeah, PayPal, Square, none of those have moved yet. If you could bid, if you want to play, I would just bid super, super low and see if you get filled. American Express a little bit, but they weren't named in the bill. So it specifically has Visa and MasterCard. Visa going down again. Next leg. Watch if MasterCard too. There it is. I'm trying to see if I could snake it anywhere. It's pretty difficult. The news, there's a credit card bill, a Senate bill aimed at going after the fees of MasterCard and Visa and pretty much how they offer it. So there you go. It's hitting the wire again. You may get, I don't even think it's hit CNBC yet. But the premiums are just crazy. It sucks. It sucks. So Visa is still going down. Both of the MasterCard's pretty hard. Visa's a little bit better, but there's a lot of cheap contracts just all throughout the chain. They've pretty much jumped up like 100% from the bottom. So, and then the spreads are just very, very wide. Dude, oh my God. Maybe go for AXP then if it's cheaper. Or if it does start to hit square. Like AXP starting to move down. But remember, they weren't mentioned in the bill, but they are definitely moving the least out of all of them. AXP has only moved half of the amount as MasterCard and Visa, or Visa's down the most. Nah, I haven't. I've been putting in low bids, but they're not getting filled. And then I'm not trying to chase any of them. But dude, that's a big move. If Visa keeps going, Visa has the more volume, so watch. And then even maybe get ready for a bounce. But once that hits more news outlets, you're going to get another reaction. Again, they have it. Is that on Bloomberg now? So pretty much Senator Durbin is offering a bill going after Visa and MasterCard fees. So senators are preparing legislation that would give merchants power to process many Visa and credit cards over different networks. The bill will be introduced as soon as this week. It aims to create more competition among U.S. credit card networks, a sector where Visa and MasterCard has long dominated. Dick Durbin, senator of Illinois, a Democrat, and Senator Roger Marshall, Kansas Republican, are expected to introduce the bill. They said banks and major card networks lobbied his office to not sign on to the bill. He decided to move forward after hearing from a growing number of merchants, including small businesses, restaurants, and gas stations, about the toll of rising credit card fees set by Visa and MasterCard that are often pocketed by large banks. Good for Amex. Square. Well, I mean, essentially, this might be a benefit for Square and PayPal. So, like, this actually could end up being positive for PayPal because, again, they're saying they want to open up pretty much if you could process all of these transactions on other networks without paying the fee, that could actually end up being a little bit bullish. Very interesting. Can we see what Durbin holds? I don't know. I think you have to get that through filings. Yeah, the premiums move crazy. That was good timing, bro. I was coming back from my piss. I didn't see it in the chat. I was like, bro, Visa, MasterCard is getting clapped right now. So it's good. We came in at the right time. Good timing. Good timing. And then we got Powell here in a little bit. But that was amazing. So if you're in it, you're getting your first bounce again. You might get a secondary reaction. I'm telling you, we got this news very, very early. So just be on the lookout because you might start watching it hit places, and then we'll get the secondary reaction, or it'll kind of do its bounce until people get more information. And there goes cash back and rewards. Oh! Here, the real estate rule for Vegas, no pools larger than 600 square foot. I did not hear about that. That's crazy. BA puts, I mean, maybe they had that bad guidance there after hours, and Airbus came out with some positive stuff, but it's hard. Nancy Pelosi sold her Visa shares 2 weeks ago. I think she did. I think she did. Yeah, the Visa cars are screwed off of that now. Those went from 100%. Now they're back. That's it. I mean, they could come back tomorrow, depending on the earnings. But for the most part, that was a big drop. 3% in 4 minutes, 5 minutes. Yeah, that probably did kill the premium for MasterCard earnings, low key. But then again, who knows how big this will be? That's the problem. Kind of just think about what happened with like Altria and some of the cigarette bills. Like it would drop them down quick, but then like sometimes it would continue on. So it depends on a couple of factors here. It can make homes with big pools in Las Vegas jump up in value. Yeah, if they get grandfathered in. That's what happened in LA. So you're not allowed to build tennis courts in properties in the hills anymore. But if you already had a tennis court, it got grandfathered in. That's why houses with tennis courts, actually, they could probably fetch you an extra $1 million. So you're onto something, I would say. You better go find the biggest pools in Vegas. Oracle, Pelosi, killing it, bro. She's killing it. Square's going up or PayPal's going up. Who's posting that? That was in the Twitch. Nancy sold NVIDIA and Visa. No, she bought NVIDIA days before, and then she sold out of Visa. Tennis courts, you don't see them being used. I have. Well, that's the house where Elon's the neighbor. The other neighbor is Andre Agassi, and he uses his tennis court. I've driven by him once, and I was like, what? He using his tennis court. Oh, I was like, and that's Andre Agassi. I said, let's go. So some people use them, especially if you actually have them, and then you don't have to drive down the hill. Could actually save a lot of time. She had NVIDIA calls, but I think she might have sold other NVIDIAs. A little bit above VWAP there. I think all that news drama. MasterCard's bouncing a little bit higher. Again, they have earnings, but wait, because once you get the second update on this, you might get more movement. Qatar foreign minister meets with Venezuela's vice president in Caracas. Is it really going to rally? This ain't a... Bro, this one, there's going to be some scarring, definitely. Definitely. Twos and 10. Dude, it's down 0.3. Isn't it fascinating? Affirm on the high. Netflix too. PayPal's going up again. Maybe that's bullish for them, but they're already up 11. Oh, yeah. Oh, yes, ladies and gentlemen. I know you got Powell. Affirm popping now. Hold up. Affirm. Hold the PHILO. Hold the PHILO. It could be related to that bill. I'm not seeing any other news. What is it? Visa. Yeah, people are posting it in reference to the Visa stuff, but there's no other news. Just seeing it as a positive. The Visa news was, the Visa, okay, now Visa's coming down again. Maybe the news is hitting somewhere. Hold on. I'm not seeing it there, but And then new monkeypox designation to take effect August 1st. So we will see. But watch a firm. That one's popping out too. But, ladies and gentlemen, boys and girls, I know it's Powell Day. I got a mini PHILO for you, okay? I got a positive PHILO for you. It's all about defense. Defense. You know what I'm saying? So I really like it. I think you guys are going to like it. And I really, truthfully, I hope this helps your mindset towards defense. And I really hope this puts you in the right place and helps you understand some things, okay? So I'm going to keep it very short. It's very simple. But here's the breakdown. Actually, what we're going to talk about, I'm going to talk about the police today, Chad. And I've said this before, actually. I've said this a long, long time ago, which is funny about this PHILO, because I was thinking about stuff yesterday, and I was looking through some of my notes, and I was trying to find a Bible verse. I was trying to find a verse I wrote down. Remember when I told you the PHILO about the armor? You know what I'm saying? And we had the armor PHILO, and I was telling you how the shield of faith, it's good to know certain quotes. I was looking for those quotes because I was like, I need those. I need those right now. I was like, I need to get those, right? And then I looked up, and then I found an old PHILO from long, long time ago. Showed up in my notes. You know when you search certain words and like things pop up? So that happened, and then I just saw this thing. Pelosi's talking right now. But I looked up the notes, and I found this one thing. And I remember a PHILO from a while ago and what was said. So what I'm going to talk about with the police is that when it comes to defense and when it comes to making improvements, I feel like a lot of you, and myself included, because this is what made me think about it because I was doing it the other day. I think a lot of people start to, you treat positivity like it's the police. I don't think you feel me. Yeah, MasterCard and Visa, they're doing it again. Yeah, Chad, I don't think you feel me. Some of you treat positivity, improvement, and defense as if it is the police. So what do I mean by that? Come on. You know, do you know the feeling when you're driving and then a cop is right behind you? Or like if you pull up to a stop sign and then you stop in and then like is there a cop? Or if you see a cop, like honestly, imagine what if I told you every time you left your house, there was going to be a cop car in front of your house. And then when you start driving, he's going to start driving. When you turn, he's going to start turning. Honestly, by the third turn, you probably going to signal on everything. You going to signal just to go into the drive-thru. You going to be like, just to go in because now he's following you, right? Visa, MasterCard, and one more time. Exactly. Imagine that stress. Imagine that nervousness and everything, right? Cool. Now, apply that to your journey on improving and playing defense. And tell me some of these feelings aren't overlapping. Because that's what I noticed the other day. I was like, I wanted to buy something, and I was like, nah, I don't want to spend on that. And then I wanted to buy something else. I was like, nah, I don't want to do that. And then I started thinking this, and I was like, no, I got to think about defense. But then I started feeling like guilty because I was like, oh, no, man, I got to stay on top of it. I don't think I'm doing it. Dude, Visa and MasterCard again getting totally clapped. Ariana Selena, my Visa. There it is. That's part 2 on there. Oh, wow. Visa got even bigger. I don't even know if Affirm is still going up on that. No, even Affirm's coming down. Visa, MasterCard slaughtered. Double-edged sword, conflicting ideals. It is, a little bit. But then it was funny because, like I said, as I was looking for some Bible verses, because I was like, I don't know. I was like, I feel like really good, but it's weird how sometimes when I want to make the right decision and I want to improve and I want to build on something and get better, it's like if I don't make every little step, it's very easy to be hard on yourself. But then I realized after, because I was looking for a verse and then this came up and I read this old PHILO and that's what it was. And I brought this up as one part of a PHILO. It wasn't the whole PHILO. But the whole point is like, yo, are you moving like the police are following you all the time? Like, literally, are you viewing positivity? Are you viewing God? Like, honestly, a lot of people, they really think God is trying to pull them over all the time. So they're moving really defensive. That's why people get defensive with a lot of stuff. If you try to, even then, that's why I'm saying some of the stuff we bring up, I know it's about improvement and we'll bring up a lot of things, but like if you get called out, it's very easy to get defensive. Again, if you fall short of your goal or standard, it is very easy to get defensive. Yes or no? So that's kind of how I was viewing it. But then honestly, man, I read this back and I was like, yo, this is amazing. Because I really hope a lot of you could get in the mindset to simply just understand this, man. Positive changes, doing things that are positive, going for all of this, you know, playing defense. Even if you fall short at some times, I really just hope you know nobody's trying to pull you over. Okay? I know people on social media, maybe your friends and family, people like to call it out. Every little thing you miss, or you're not doing this. But listen, I hope you understand that in your pursuit, you need to remove this mentality that someone's trying to pull you over. And really what I'm trying to tell you is that everybody wants you to succeed. I want to see you do good at it, bro. I think the world wants it. I think God wants it. I could go down the list of it. But the whole point is the instruction, the defense, it is there to benefit you. Stop worrying about the negative. Even if you fall short, even if you operate in a mode, do not let that get to the point where it backfires and now you trying to do better and play defense and set a high standard for yourself turns into you trying to pull yourself over and then getting into a worse state because you're like, oh, I didn't live up to this, and now I don't even want to look at it. Nah, I can't even do that anymore. No, I'm gonna avoid it now passively. You see what I'm saying? Amen. And that's honestly, it's a simple phrase. I hope you remember. Nobody's trying to pull you over. The instructions, the foundation, doing good things, it is meant to benefit you. So just don't forget that, Chad, all right? So I hope you enjoy it. Like I said, it's going to be a small PHILO, but I just wanted to give this reminder because, like I said, I even deal with this myself where it's like, wow, like we got to make improvements, hold up the standard. We want to play defense. We want to do all of these things, but then it's like, yo, you live a lot of hours in a day, and then the mind could get tricky. And then if you feel like you mess up in one area, or if you feel like somebody's following you, waiting to watch every move and pull you over, it's going to make you feel a certain way towards improving. But I really hope you can make sure your mentality is in the right place. Like, yo, no. The whole point of this is to get a benefit. The whole point is, okay, we might struggle in some areas, but the whole idea is it's supposed to bring a benefit. It's supposed to bring freedom. It's supposed to bring happiness. So it's like if you're viewing it like someone's trying to pull you over, it might get you a little bit more defensive towards defense. So I hope the defense is put in the right area, Chad, and I hope you keep pushing. Hold on to this and just remember, there's the benefit of why, the fruit that you are pursuing. Just don't forget about that in fear of punishment or getting pulled over. All right, Chad? So I hope that helps, and I hope you take that to the bank. That is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watchlist and main channel. First link for the Scream Alerts boot camp and real estate course. Follow me on Instagram at the Trading Fraternity. I love you all. Defense. Yeah, Visa, MasterCard, Senate bill to limit the amount of fees credit card companies can charge consumers. So you even had a firm go up for a little bit. We were even talking about PayPal benefiting, but overall, that shit got clapped on Visa and MasterCard. But we got the news very early. I think we were the first one to drop it there. It was Wall Street Journal first, and then I think the second leg, it started to hit other places. So we had a lot of time on that one, baby. Amen. But here is your PHILO song. I think it's very applicable to today. So just a short, quick one, 1 minute and 30. Don't worry. And Powell comes on in 30 minutes. We'll call Howard Schuss. I think I need some coffee quick. Oh, man. He said like 32 through 38. Markets, then employment rates. That's actually a big fact if you think about it. Because, again, that's kind of what we're going through now. your market has dropped before employment rates. And then the Great Depression was actually one of the rare instances where, again, investor sentiment caused the collapse more or less with other factors. But you pretty much, in the Great Depression, you had things dropping. The markets and sentiment dropped before any employment or any other factors. Vivo. Oh, no. Vivo, I thought that was Vimeo. I was like, remember Vimeo yesterday? But we're back, ladies and gentlemen. Get ready. Powell in 30 minutes, or at least for the written statement. And then 30 minutes after that, we get the speech. Big speech, bro. Big speech. Spotify, ETA, at least by the end of the year. You know, Uncle got to give you at least one or two every year. So he working. He got some for you. Don't worry. It's on the way. Look at the chain on Vivo. That thing just looks like it's clapped. Meridian. And then remember that AGL one today earlier? How does Nancy keep getting away? I don't know, man. I mean, I've spoken on it already many times, but I mean, it's either everybody gets pissed off by it and they do something, or they don't, or she's untouchable. And like, this is your first view of what untouchable really looks like. Like, I don't know any other way to explain it. Powell meeting, there is a lot to look for, but, you know, just to keep it very, very simple, what you got to be keeping your eye out for is the September rate hike and whether or not Powell is specific about what he expects going to happen, what's going to change, anything of that nature. CDC set to make monkeypox a nationally notifiable condition, so they're not doing an emergency. But yeah, Vivo is crazy. I don't know what's going on with it, but that's a big drop. Or any of the other biotechs. Walmart, XLV kind of coming up. Walmart's at the high. Roblo, the Visa MasterCard debacle get crazy. Thanks for the Bowen and Visa call-outs. That's what we're here for, baby. That's what we're here for. Horna. Get ready for Powell. Spy, we need you. No. Thanks for the tan gains. Yeah, I closed out of those again. If you're on the shorter term ones, just be careful. Initial reaction from Jerome. I mean, I'm assuming I'm leaning more towards bullish, but like I said, neutral. But I think first reaction could be a little positive. Because I don't think the written statement's going to have anything negative. Again, unless they outline something about economic or current conditions that are a little different, or if they use the word recession, then we're clapped for a little bit. But I doubt that. But I think initially positive, and then borderline just kind of continuing the trend that we have today. And then depending on what happens with Meta after hours, that will cause a reaction. But even the post-earnings action will be different because you have Apple and Amazon tomorrow. So we're going to see, but again, I think the press conference is where we're going to get all the real big moves, and, you know, we know what to look for, and then we'll just see what he says as far as September goes and whether or not Powell opts in to be specific or not, which a lot of people are doubting that he will be specific. 100 basis points. That's not on the table. If it did come in at 100 basis points, like we talked about, I think that would cause a negative reaction, but we'll find out. Very chilled about the market today. Yeah, a lot of people do too. Again, we already know most of what Powell is. He should sound exactly the same, give or take a couple of factors, and those factors will be the things to watch. The White House redefining recession will steer that away. Not really. I mean, I think they were trying to get ahead of it, and, you know, whatever else they're doing. And, again, the Fed is still very adamant that recession is not even close. So I think that factors into it. But more often than not, not everybody believes the White House on both ends. So I think I'd watch to see how Wall Street really takes it. You'll get that data report, that GDP tomorrow, and we'll see how it reacts. But like I've even said, I don't believe the GDP number is really a big deal tomorrow. So we'll see. Cal X, and then Ball, and then Roblo, IBM. A lot of runners actually right now, believe it or not. Will they hit the target if they do 75? Will they? Yeah. Oh, yeah. Dude, if after today, remember, do you remember that one video that I made and we were going over 2.5 and 2.5 and we talked about all the ways to get there by the end of the year? They're way past that. So even after today's 0.75, we will be where everybody thought we would be by the end of the year 4 months ago. So that right there is already a big shift. Sava responding to media comments. What are they saying? What is Wall Street? Is it the people or the market makers? It's the banks, the market makers, the people in New York, more involved in that. The people, quote unquote, is called Main Street. That's why they say Wall Street and Main Street. And then that's why Uncle says, funny how, what does he say? Funny how the only thing separating, he said, the only thing separating Maine is a wall, I don't even know what he says. I give up. The banking cartel. Is that Tesla? No, Roblox is running. SPY's not really moving too much, but the high ticker is fairly active. .5, then R word. We'll find out. If he says, that's the thing, the Fed, no written statement ever has a mention of recession. So if they mention recession in the written statement, boy, oh man. But he might bring it up in the conference call, but that would have less of an effect. But if they put recession in that written statement, oh my God, yeah, algos will go insane. Everybody would. That's just weird because, again, there's a lot of stuff they don't have to mention in that part. So if they did say that right there would be your hot dog. They could bring up monkeypox again, and this is what we're talking about with economic conditions and what they bring up. Remember, you've heard them bring up jobs, and they said the jobs market's strong, or we see that it's cooling down. Therefore, we're looking for this. They said the war in Ukraine creates uncertainty. So although we have a commitment, the uncertainty, yabba dabba da boo. China, they say the COVID lockdowns and the uncertainty. So whatever they bring up, so they might bring up monkeypox. We'll find out. I'd watch SIGA because then if the Fed brings up monkeypox, then maybe you got something better. Oh, I think that's how it goes. No, he said, funny how it's a wall separating Main Street. No one's died from monkeypox. Well, I mean, you had that World Health Organization thing today. Remember, a couple days ago, they were about to declare it a world health emergency, but I think they just said they're changing the designation today. I don't think it's an emergency. I think that reporters asking, leaving the door open for a meeting in August, being data dependent, in my worry. I agree. But I mean, that's where Powell's skill is going to come out. Where can he avoid the question without having to say any of the bad words like recession or even saying it? Literally, if he could just find a way to say not my job or, we'll deal with it when we get there, or he'd probably say data dependent. that will probably, like, he'll find an excuse, and that's it. But you are right. I do agree with that, that depending on how it plays out from here, or how the reporter questions towards that August-September gap, then we'll get something. I believe there has been deaths from it. I don't know. I just feel like it's every 2 days we hear something about monkeypox on and off. I hope you all are staying safe out there. You know what I'm saying? I think Powell listened to the credit card company earnings calls. No. Powell, they use the quote-unquote Fed contacts. But anything, and even then, everyone's going to look at the broad factor. That's all it comes down to. It's whether it's one or... That's how he's going to get around anything, is by saying, well, it's broad, even though we saw this here and this and that. That's why I think a big update, I don't think we really talked about it too much here. I think one of the bigger factors that's going to be occurring on this meeting is that this is the first Fed meeting this year, pretty much, where commodities have had a month-long downturn. So now, like, a lot of commodity prices have cooled off. A lot of things came back to normal. So how he kind of, talks about this, I think that is going to, I wonder if that changes anything, that gives him any wiggle room or anything else in between. You remind me of my mother. Thank you. You're always right. Oh, wow. Thank you. I said thank you regardless. I didn't know how to interpret that, but I assumed your mama raised you well, so that's good. She did. She did. Amen. Just beware of Jiggly yelling, Jiggly Puff, Jiggly Puff. Why you always got the McDonald's theme song stuck in your head? I don't even think I did it today, actually. And the Fed ignore food and gas because of volatility. Well, and at that point, I mean, it wasn't. That's what I'm saying. Like earlier, I'm like, I wish people responded to inflation like they did this recession stuff. Because remember, there was a point in time where gas prices went up and the price of other things didn't. Before your gas prices went up, the price of lumber went up. Before your gas prices went up, a lot of other things were moving. And even then, when your gas and food was high, your rent was actually still cheaper, and then it started to go up. So it's not like we just like showed up, with the situation that we have here. So it's like, looking back just in time with it and how it's kind of developed towards here, it's like we had little clues along the way that really like changed stuff. So even with the commodity stuff now, it's like it was like services and growth. Pretty much at that time when we were ignoring commodity and energy going up, it's because it was goods were having inflation, and it was only two categories of goods, but services did not have any inflation. That's why, if you don't really understand, the moment that the market really started freaking out about inflation, you probably should remember the watch list. It was right when services started to go up, because then it hit everything. Then it was broader. At first, it was food and energy, and they said, well, those are the most volatile segments. That's why we use core, and it's only two areas. Two areas does not mean broader inflation. It has to go everywhere. They said, yeah, we know lumber. Yeah, we know aluminum, but it wasn't everywhere. Then eventually, as it persisted, and then it spread everywhere, that now became the new topic. And then right when services came up, they started doing it. So that's why now I think the commodities, maybe it has a bigger effect, but we'll see how it plays out now that it's down. Because even though they did ignore it at one point, it might have a different effect now. But you need it broader, and that's what they're going to be looking for. Let's do this. 15 minutes. Airbnb just sold off pretty big. Hilton's still up. I do not invest in Pokemon cards, but we talked to him today. Does Fed have access to not release data when making their decisions? Yes. They have contacts. They have different information that's not necessarily public, nor will it ever be public. But for the most part, the assumption is that they are. But usually, it's more along the lines of they get it about 30 days before you. So that's kind of how I interpret it. And my tinfoil is that they know everything. That's it. My tinfoil is that they just play stupid. That's it. They just act dumb the whole time. Well, even when they sound smart, they're acting dumb. I'm telling you. That's my tinfoil. I believe the Fed absolutely knows everything, and I don't doubt them when it comes to that. Does it mean you still can't have credibility? Of course. Does it mean there's still all those other issues and you got to interpret it, and you can't really bank on that to give you so much, but for the most part, I think that if something was really good or really bad, they know. Always. Again, why did they do an emergency cut in the beginning of March? Like, it's just they know. They have that. They know it. That's my view. So that's not necessarily a wide spread Wall Street view, more or less. BTRS, is it halted? BTRS, yeah, of course. I think this whole time, I think they've just acted dumb. Again, you've seen it. You've seen it right in front of you. The press release comes out in 13 minutes. That's for the actual FOMC statement. And then 30 minutes after that, you are going to get Powell and the press conference. So how does that jive with the tinfoil that the Fed was behind the ball on inflation? That they wanted it. That's the only way to explain it. Or that they knew it wasn't that bad just yet. Pretty much it wasn't as dire. But if they were 1 more month late, then we would have had a bigger problem. But I feel like the Fed has the information and they do not react until the very last second. That's it. Because once they could determine that it's like good or bad, they just know there's no going back from there. So that's why I think they just downplayed inflation until they reached the breaking point where they said, yeah, that's it. Now we have to. But it bought them it bought them a year and a half of time to do whatever they wanted. Like, you got to realize it kept everybody rich and it kept the market up for a year and a half, like ripping, like actually like juicing up. You know what I'm saying? What's up, Trenton? Hopefully you living good. I hope you're ready for the Fed. Roblo on the high again. High ticker still gassing. SPY's kind of trying to edge up here. About 11 minutes, Chattadonia. Bottom right is BTRS. I think they just got news of a potential takeover. So they're halted right now. But Troy just called that one out there. Yeah, shares up as much as 13. Halted for volatility. And don't mean to disagree. You feel free to disagree, my friend. Thank you for being respectful with your disagreement. I've had the same idea. Didn't Greenspan say they have no idea how money works? Well, yeah, that's why I think they play dumb, and sometimes they have good characters to fill the role. I don't like Greenspan, but yeah, they all say that. They all say there's stuff they don't know. Again, inflation. I mean, it makes sense in an economic sense. Like, the answer to 90% of economic questions is it depends. You don't really know. Like, even inflation. Do you know how inflation should play out? No, never. You can't say that. That's why I'm always going back to history, because the only way you could only get clues from history, but even then it's just bits and pieces. So you don't, nobody ever really knows, and that's why they'll say stuff like that. But like I'm saying, I don't think the Fed is, if the Fed doesn't come out, and even if they see a problem 6 months ahead, I think they act dumb until they get to the 6 month, and then they make an action where they don't panic or they don't say, oh my gosh, it's bad, but how they act lets you know, okay, the fact that they're finally moving, it tells you something. So I don't know if that answers that. It kind of gives some balance to it, but I like it. Good comment. Did Powell already happen? No, Powell is in 45 minutes or like 40 minutes, and then the report comes out in 10 minutes. So get ready. Again, if you want to finalize any plays, we played a couple dailies before. Usually I like to wait till after, but I mean, the volatility has been jacked and whacked lately. So just proceed at your own caution if you're going to go after any of them. Watch anybody with strength, watch financials, and then if anything else gets brought up. But there will be a reaction in the next 9 minutes here. But then it's going to be the real thing is going to happen at the press conference at 30. So get ready. Big tech will get leaked. Well, unless they release all of them. You still got 3 huge ones. That's why I'm like, just don't underestimate these net. Like, even this is going to be a weird Fed. I don't think we've had a Fed like with this much, like where the market's at and like this much volatility with the biggest earnings now and like a very pivotal earnings. Thankfully, yesterday was positive, but it's like the Powell data today still has to play off of Facebook after hours, and then it has to play off Apple and Amazon, and then every other value company that reports in the morning, all the Dow names, and then all of that. So there's just a lot. I am still in the wheat play, yeah. Oh, BTRS. I put BTS. Oh, and GDP too, Kramer. No, it's unhalted now. The weed play, I don't have a weed play. We saw Pops on it the other day, but I ain't got none. Jim Crater's gonna like Costco here after the Walmart knockdown. Wait. Are you playing the spy or waiting? I am waiting. Looking forward to your semi-strats. We'll get ready for the Powell strat. Yeah, watch crypto too. That's a good one. Again, usually Fed meeting. Don't underestimate the ability to drag crypto into it. Why do you think Powell will be positive? Unemployment will rise. I'm not looking at I'm just looking at the fact that there is nothing new really Powell is going to say that should surprise anybody. And the only way we move big is if he does find a way to surprise us or whatever it means. And then if he's willing to take the bullet, and like if Powell wants the market up today, if he wants this shit back to 415, he could do it with one phrase by simply saying, yo, we're going to slow down to 50 in September. If he says that, you're going to 415 in 2 weeks, assuming Apple and Amazon don't absolutely get clobbered. You could even sacrifice Meta and still come away back to 415 if that happens. But the whole point of like why I'm leaning more neutral or positive is that we have so much data coming out afterwards, and I think after today, we will use today to respond to the data. But as of now, there's really not much that is on the table to say like Powell is going to shock everybody. But we'll find out. That's what the next 5 minutes will reveal. Still with you that interest hikes are good for the economy. I'm not. I never said that, nor is that what I'm implying. Again, we're talking about. That's what I'm saying. Separate from the economy, separate from all of that stuff. It's just like this is where you hear people say priced in, priced in. Look at the Fed futures. It's like we've dealt with a lot of Powell. A lot has gone on right now, but is are people expecting something or not? And that's where we're going to really see some things. But it's not about, again, it's not about the data. And I think as the date after today, whatever is said today, it can and will be used against you in the court of CPI. So do you get what I'm saying? So it's like today will lead us into the next CPI. Today is going to lead us into everything else. Nail biter. Well, we're getting a little bit of a run. You got about 3 minutes, Chattadonia. 3 minutes. So let's see. You guys want some? Let's go. We could see this will be the third 70-point basis hike in 30 years. Wow. So here's a chart of the size of rate hikes over the last 30 years. You've had 36 25 ones. You've had cuts. Today will be the third in 30 years. If you get that. Who was it? Angelo Manalatos. He calculates that if Bloomberg's 5% terminal funds rate becomes the consensus, the 2-year Treasury is more than 1% too low. I would take, Ann Wong writes, what I would take for a recession to begin at the end of the year, not much. Financial conditions tighten further and the Fed continues to be hawkish. We should have a recession. Powell is, let's see, where to go. The Bloomberg crew is looking most hawkish amongst calls they surveyed. 5% peak federal funds rate. You can see that going in there. That when it comes to the Fed days, the S&P has been weaker when policymakers rise rates than when they take other actions, but the current tightening cycle has been much more positive reactions from stocks. In 3 meetings since the first increase in March, index has gained 2.2, 3%, and 1.5 respectively, which were stronger reactions to any of the other times in 1994. So most people are expecting 0.75. Sophia Marcelli, Chief Investment Officer at UBS, she's saying, looking at the prediction of the same magnitude hikes and watching for forward guidance, the pace of hikes and whether or not they're certain, that will be the key. Economists at Deutsche Bank expect 75 basis point, followed by 50-point hikes in September. Barclays, Ajay Rajadeskasca, and Jonathan Millar, they said financial markets seem to be pricing in a Fed pivot to accommodate weaker data. They are likely going to be disappointed this week, and the Fed will continue to talk through. So get ready. You got about 1 minute, Chattadonia. I'll be reading a couple of these as they come out. The report will come out first. Be prepared for a move in just under 60 seconds. That will not be the biggest move of the day because you have to wait till the press conference comes out, and that is where things start to get a little bit wild, Chattadonia. So I hope you're ready. Hope you're locked and loaded, and be on the lookout. About 30 seconds. The last 75-point hike in June was in November 1994. It was the only hiking cycle in 30 years that did not precede a recession. So 1994. Maybe we'll come back to this chart here. Let's go. About 10 seconds. Get ready. Place your bets if you want them. We're up right now, but coming into it, you're up 2.5 on the NASDAQ, 1.3 on the Dow, and a quarter on the Dow, and then or 1.2 on the SPY. Fed repeats they are highly attentive to inflation risk. Spending and production are softer, though jobs are robust. Fed raises policy by 75 in a unanimous vote, so nobody dissented. That's kind of good right there. They said, again, spending and production are softer. And they said they're repeating they're highly attentive to inflation risk. So right now, pretty small reaction. You got a little bit of a pop, but get ready for the lock and drop and watch TLT. But yeah, 75, not 100. So that was expected. The unanimous vote is bullish now because imagine all the people you heard. Nobody's talked about it. So now that they're all on the same page, I think the last couple of ones, there was a couple of dissenters. So give me a second here. I'll get up the document and we'll get the strike-through comparison. Watch the bonds in the meantime. Watch TLT. Where is it? Let's see. They say balance sheet reduction proceeding at announced pace. So he may not get asked that question. Pretty much most of the market is just assuming the balance sheet reduction is still working, even though the balance sheet's not necessarily dropping too much. They said they anticipate ongoing increases in interest rate hikes. Again, the vote was unanimous according to the statement, unlike last time where Esther George dissented in favor of a smaller increase. So that is kind of more bullish, or at least more unity on the Fed. Dollar is barely moving. 2-year yields reverse drop after Fed decision. Okay, I might have to go through this one. I'm waiting for the strike-through comparison. You have to give me a couple. It's only been 1 minute. There's a reference to softening in the economy, which Fed watchers also expected, but the job gains remaining robust sounds a little bit stronger than some of the corporate announcements we've been getting. I agree. That part, again, Powell seems a little bit more bullish on the jobs market. That might backfire for him. So here it is. Oh, let me get it. It's not letting me zoom in. So SPY's ripping a little bit off of this. Inversion 0.3. Yeah, again, especially after Powell talks, watch that 2-year is going to move a ton. Already saved that. Crypto popping. So here's the difference between this meeting and last meeting. So they took out overall economic activity appears to pick up. They said recent indicators of spending have softened. Nonetheless, job gains have been robust. So they kept that. They added food into there. So that, again, kind of weird considering food prices have technically dropped during this period. So they didn't change anything about the first quarter or the first paragraph except saying stuff has softened. They included food. They said Russia's war instead of invasion is causing tremendous hardship. The war and related events, they changed it from invasion to war. And then they took out COVID in China. That's no longer included. And then where they're raising it to, and then everything was the same. Yeah. And then again, so the dissenting is gone. That's positive. All they changed, literally, there was 2 changes in this whole document. So nothing is new. Nothing about this is new. Just so get ready for the presser, because whatever he says about September now, I think all eyes are on that one. Yeah, so then again, Neil Duda at Renaissance Macro, his quote, all I learned from the statement, the Fed marked down its growth assessment and still ended up going as much as it did in June. Michael Barr, new vice chair of supervision, and Lisa Collins, new Boston Fed, both cast their votes on the first one. And that's it so far. Honestly, dude, it's exactly the same. That was like the least amount of changes we've seen just in the last 3 months. So we're ripping off of that. You're going up there now. Take a look if any of the big earnings winners start to move. Or any, like XLV might come back to life. Energy's popping off of that. We confirm peak hawkishness. Well, he sounded a little bit hawkish in a weird way, but we're going to find out. It's notable the new entrants in the FOMC are voting with the veterans. No dissent against Lisa Cook, who some observers thought liberal and potentially not likely to adopt aggressive inflation fighting. That narrative has proved quite wrong. So they're talking about who voted on it. Again, the last meeting you had a dissenter. So the fact that everybody on the Fed is on the same page, just factor that in to what happened 2 weeks ago when it was Waller and Bostic who came on and was able to kind of balance things out. So keep all of that in mind right there. It did 75 basis points. Nothing really changed too much. Again, here is the differences from last meeting and this time around. It was very, very minor. So, again, they said they added food prices. They said things have softened, but they doubled, tripled, quadrupled down on the jobs market being robust and strong. Then they talked about the war. They took out China influences, raised the rates, and then nobody dissented. Very, very simple. Like, again, that's what I was saying before the meeting. It's just like it should have been pretty much the same, and it really was exactly the same as we expected. There were just a couple of changes. So here are some key takeaways. The Fed unanimously, that's a big key, unanimous, no disagreement, raised by 75 basis points to a range of 2.25 to 2.5, in line with expectations, and anticipates further increases in the target rate will be appropriate. In the statement, the FOMC acknowledges that, quote, spending and production have softened, yet affirms that job gains have been robust. We just went over that. Russia's war in Ukraine is adding upward pressure on inflation, as well as weighing on economic activity, the Fed says. The FOMC repeats that it is highly attentive to inflation risk. Fed balance sheet reduction is proceeding as planned, with caps doubling to $60 billion a month in September and to $35 billion for mortgage-backed securities. So give it some time. We're coming back down now. So you're back to VWAP and you are back to where we were at. Actually, yeah, let's take a look at the Fed futures. That's the Lambo indicator. Again, the yield curve is also inverting a little bit more on this one. Yeah, yield curve hit a new low of the day. So that means the 2-year yields are probably going up while the 10-year's dropping. And then September. Well, this has to update, I think, because we are already at 2.5 to 2.25 now. So this one hasn't updated. You have to, unless you're looking at that live Fed futures, that one isn't, and you got to give it 15 minutes because that one's not updating. Because we are at 2.25 right now. It just jumped. Let me refresh it. So we're back down to VWAP. No, it's still up there. Let's check November. Yeah, I'll just give it a sec. That's the new Fed future. September is the next one. World War III is priced in. This happened last time. We rallied, died, and then super rallied. I think so. I mean, again, nothing was new. It just all depends on Powell, and I would watch those Fed futures, but bonds are dropping now. So, again, bonds going up would be somewhat of a more bullish reaction. Dollar's not really playing too much, and again, some of the industries coming back to life. Yeah, even Amazon started dropping now. A lot of big shifts off of that. And I know I've got 22 minutes till the actual release, so get ready for some motion. Yeah, every single CPI now is just that much more important, but especially here. So the statement is exactly what's expected. Markets muted reaction, said Muhammad El-Arian on Bloomberg. There's a minimum change in the statement other than mark-to-market of the recent development. It acknowledges that spending production has softened while removing the reference to China lockdowns. These are statements of fact and shouldn't move the markets. And that's it, bro. Even analysts right now are pretty quiet. They're pretty quiet on this, so let's see. So you went back to VWAP. Get ready for a move here again. But right now, it's already, all this information is going around. There's really not much to react to except for, okay, we got what most people were expecting. So let's just see where we go from here. But that press conference in about 20 minutes, that will be the big driver. UUP. Didn't they downgrade the economy? No, I mean, he tripled down on the jobs market. So, again, Powell is still saying the jobs market's robust. That's again, until, just remember from months and months ago, until the Fed says the job market is weak, they are going to interpret that as they have room to keep raising rates. And that's pretty much what they said are in there. They're saying we plan to keep raising. That's why they're going to press him to find out whether or not what he means about that for September. But for the most part, if he's saying jobs are good, it is that just means more hawkish Fed for the most part. He did acknowledge the softening of the economy, but he said, listen, I know that y'all tripping, but the jobs market is strong. That's kind of how you could translate that statement into normal talk. But he pretty much said, we acknowledge the softening, yibbity baba doo doo. What's the phrase? This is the actual phrase. They said recent indicators of spending and production have softened. Nonetheless, the job gains have been robust in recent months, and the unemployment rate has remained low. So that's them saying, I know you worried, I know you scared, we see it, but the job's still holding us up. So we got to keep pushing. That's how it translates, but that's the way they put it. 2-year Treasury yields have gone from being down under 2 basis points to being up just under 2 basis points. 10-year yields have pared their losses just a bit. Not really seeing major reaction. Stocks have pared their gains just slightly. Broadly, this is coming in as anticipated. That's an analyst comment, Chris Ansley. Low and hard. Nah, it's facts, though. That's what they're saying. And again, Powell has made it very clear. If you have not been following Powell, how we have been following off Powell, it's very, very simple. The number one thing he said from day one is that as long as every time you ask him about 2018 or any other moment, he says, well, the jobs market wasn't like this. Unemployment wasn't this low. Yabba dabba dooba. So as long as they say the jobs market is still strong, that you could infer that they still see room to raise rates. Now, that's why the September one is going to be very, very, very big. Oh, you tweeted out the stream. Run it up, baby. Run it up. Run it up. God bless you. God bless you. And then if you guys want, you follow me on Twitter. We got Real Colt News. You can follow all the accounts that I just use these to find news. But then if you follow Fast Stock Market News, this is Troy who just retweeted us. You get Fast Stock Market News. It's very accurate. Wow. Amazing. Brought to you by Tesla. Sorry. They are still blaming Russia. Again, they made more changes to the Russia statement than mostly everything else. Like the second paragraph, this is usually where they explain some conditions. We went over this on the watch list yesterday. But this right there kind of gives us an idea. But they used it instead of calling it an invasion in the statement. They changed invasion to war, and they said that has been increasing pressures on inflation. But then they took out China, as you can see here. So 18 minutes press conference. We'll find out. Ooh, Ira Jersey. I love this guy. Ira Jersey and Monolato says that limited changes in the statement were in line with expectation. The post-meeting press conference may include comments and clarifications that could move the Treasury market. So honestly, I would start looking towards bonds 2-year and 10-year as Powell is talking. But here's their quote. They say the extent of how much the economic slowdown, now the first sentence in the statement, is worrying FOMC members will be telling. So there you go. So that Ira, I like Ira a lot, but what he's saying right now is very simple. They're saying the fact that now you start off the Fed statement with recent indicators softening, they say that could be a clue. So get ready for 2:30. Chief economist Anna Wong, she says the unanimous FOMC decision to raise rates by 75 at July sent a clear message. The Fed is nowhere close to declaring victory over inflation. While many are worried about the economy, that it's teetering on the edge of recession, Fed officials appear to see the glass half full, with a strong labor market allowing the economy to withstand rapid monetary tightening. Bloomberg Economics thinks there's a little chance that the Fed will pause its rate hikes later this year, as markets currently expect. Hot dog. Where's another one? Let me get you the other. All right, now the analyst comments are coming in. There's really little change in the initial paragraph describing the economy. China lockdowns have indeed become less disruption. They appear to be far from over. Just overnight, we heard news from a familiar location, Wuhan. And that's it so far. About 13 minutes or 14 till the presser. Again, mini pop, kind of big. You went from 395 or 396 to 397.5, came right back down to VWAP, and now we are just about where the report came out. Let's see. I don't know, Chad. What do you think? Well, first, I need you to like the video because we love you and you love me. I love you. Okay, I won't do it. But anyways, what do you think? Do you think this is a clue that they will be more telling? So literally, what I just read you right there, they are saying that the fact that the statement starts with an acknowledgement of things slowing down, they're saying that Powell might be willing to signal some more things here in the next 10 minutes. So I don't know. That's a pretty interesting take. Does that mean anything to you? Does it mean anything to you that it opens up with economic weakness instead of saying economy is picked up after edging down? It now just says indicators of production have softened, but the jobs market is robust. I think there'll be an emergency rate hike. Well, That's a big thing. I mean, emergency rate hikes don't happen. And again, here was the chart that we opened up with today. Let me find it for you. Again, so today you just had, right now, 15 minutes ago, they raised the rates by 0.75. So this number goes up to 3. But to give you an idea, over the last 30 years, so going as far as like the early 90s and 80s, pretty much you've only had 2 rate hikes this size. So emergency, I don't even know if there's a stat on emergency hikes. They're bullish. Anything different that's done. We need recession questions. We need September, honestly. That is still in play. So everything we talked about, we were talking about this right before it happened. This stuff starts to come out. What did we discuss? We were saying, nothing new is really going to come into this, right? And clearly there really was nothing. This was like the least amount of changes we've seen in a long time. Nothing really new, but now that September guidance is still important. This isn't, I could get you a side-by-side comparison, but this works just as well because you see what they crossed out and what they replaced. So this is the last, everything in red, this is what they said last time, but they got rid of it and added other stuff. They should have raised more and sold the balance sheet more aggressive. They did the opposite. And again, the market didn't even really, again, most analysts, nobody, even though they said they're going to double the pace of balance sheet reduction to 60 billion by September, most analysts, nobody's shocked by it. Again, like I told you, it seems like more retail Main Street. Again, I see the balance sheet. I'm like, wait a minute, this thing's not moving, but all of Wall Street is like content with it. I don't know how to explain it, except for most of them are already, everything is as priced in or expected as far as all of this other stuff is concerned. So it's quite interesting. The long-term chat. Tell them, Raj. That 75 is still real. Mortgages are going to hurt. Yeah, and that's why I just watched the bonds right now. 2-year and 10-year. Big key during the press conference because they didn't move much. And again, as we came into this morning, even when the release, it got a little worse, but that yield curve is moving. But a lot of people are going to jump to conclusions once they see the bond market move. So Omer Sharif, Inflation Insight, he said, despite the downgrading of current economic conditions, which was expected, I wouldn't be surprised to see the chair repeat the idea of a 50 to 75 move is the most likely path for September. There's basically one important change to today's statement, and it's the first sentence. Going from overall economic activity appears to picked up after the first quarter. It is now changed into recent indicators of spending have softened. What does this mean? The Fed is starting to see an impact on the economy from the rate hikes it's implemented, but there is still more to go. Here is the way New York Fed President John Williams described the process this month. He said, quote, a lot of the spending data is probably where you first see the effects of tightening of financial conditions, and that usually feeds through into the labor market, and then it feeds through obviously to wages and pricing. So if the thing the Fed cares about is bringing down inflation, there are a number of hoops they have to jump through in order to bring out that outcome, and this is telling we're still in really at step one. Womp, womp, womp. The statement of the job market suggests the Fed has only to take care of inflation part of the mandate without having to balance the risk to growth just yet. Some pointed to the recent rise in initial claims as a sign the labor market is deteriorating, but Tim Dewey, chief economist at SGH Macro, noted that it may be the seasonal adjustments as the increase happened during the same time of previous year. What happens in coming weeks now? I just lost it. In coming weeks now will be more informational when the seasonal factors fade. Until the job market slows meaningfully, it's relatively easy for the Fed to keep tightening the screws. We just talked about that. The statement notes softening spending indications. We could see softening consumer sentiment and Conference Board and the University Michigan of Consumer Sentiment. Sarah Hunt, portfolio manager at Alpine Woods, quote, they see some weaknesses in the labor market, but also see high inflation numbers, so it's a very mixed situation since the strong labor economy has been the justifier for faster moves, and a slowing labor economy may be what they want signs of, but they don't want that to go too far. So 10 minutes, Netflix popping. 10 minutes until Powell comes on. Again, we're covering just all the main stuff here. I'm going over a couple of quotes and what to expect from here, but just keep all this in mind. But that presser, there's still a lot of unanswered questions, so we still got a bigger move ahead of us. Just be on the lookout. Oh, Powell tie pattern. That's a good bet. What color tie? That's a very good bet. God bless you for reading. God bless you, bro. It's Powell Day, baby. I love it. I love it. It's coming in. We getting quotes. We getting prices. You getting volatility. You getting statements. It's history, bro. You guys are living through the third 0.75 rate hike ever. Or not ever, but like in 30 years. This is like the third time, bro. Come on. That's crazy. So here's another one. Anastasia Amoroso, iCapital Chief Investment Strategy. Quote, there are a few surprises in the 75 increase in the accompanying Fed statement, but one thing is clear. The Fed still thinks the economy can withstand ongoing increases in interest rates because the economy is slowing. Jobs growth is not stalling out. If there's any sense of an upcoming Fed pivot, there are no hints of it in this statement, and looks like the Fed sees a runway to continue to raise rates. So the Fed is clearly focused on inflation after that horrific 1.3 month over month in June. It wasn't just energy either. Takeaway from the number, it would still have been around 0.7. The PCE for June will be out on Friday. So that's a data thing that you could look for. Again, here's just the CPI and what we're talking about. Even if you removed energy, inflation was still up. So get ready for the PCE. Again, that's Friday alongside of University Michigan consumer sentiment. But like we said, after today's report, one, we got to wait for the presser here in 9 minutes. But every other piece of economic data now does have a lot more of a weighting. So here's another one. Quote, Peter Bukover, Chief Investment at Bleakley Financial. He says the statement was a, quote, big yawner, given that there were only modest changes to it relative to the June meeting, which, again, most of us were expecting here. So let's see. What time is it? 8 minutes, Chad Adonia. 8 minutes. Let's see. July, 27th? So much excitement. I know it's kind of calm. It's kind of calm though. Like we were kind of expecting this, but now, I mean, hopefully you guys could see it at this point. It's just there's still a lot of unanswered questions now. So we're gonna find out at this presser. And really, you want to see does Powell keep the runway? Does he pull back? Where do they see things? And how does he communicate September? That will say a lot. And let's see if anybody asks him about the question. I want to know, why did they start off now this statement? Does this really, are we inferring too much, or does this mean something? But it does look like Powell is kind of just, nothing really changed, just as hawkish as ever. Meta's statement replying to the FTC. That's off the lawsuit news a little bit ago. Those are crazy. Should we make a Fed funds play for September? I mean, you can, if you want to. You talking the futures? Are we talking like ZQ? Yeah. Or what are we? I don't know. Like, otherwise, I want to see, though, because, again, the bonds really haven't moved right now. You could go for ZQ if you really want, but it's hard to kind of say. I think leading into tomorrow and the next couple days, or I think you play ZQ off of the PCE or the next data set. But, yeah, bonds haven't moved too much, so that's why we'll see how the press conference affects that. Yeah, yield curve is most inverted in decades following the Fed release. The yield curve, Habibi. So 2 more takes as we get closer to the press conference. Joe Gilbert, portfolio manager for Integrity Asset. He said the Fed has remained measured and has tried once again to not surprise the market. Most of the rate hikes are behind us at this point. Every day we're getting closer to rate cuts next year. Press conference in Jackson Hole will really be the drivers going forward. Francis McDonald, a global chief investment head of macro at Manulife Asset. They said there is no pivot, at least not yet. While the Fed acknowledges a slowdown in economic momentum, they're still hanging their hat on strong job growth despite rising initial claims and survey data suggesting a slowdown. She adds that this doesn't look like a Fed that has blinked. It'll take a lot more than recession fears, clearly. And then Diane Swank, chief economist at KPMG. She said that Powell needs to be determined in his press conference in addressing the risk of middle-class incomes being damaged for years to come unless the Fed succeeds in bringing down inflation. Swonk says the unemployment rate will likely climb to 5.5 from just 3.6 today in this fight. And then Peter Cheer, I don't know, head of macro at Academy Securities, points out Esther George wanted to raise by only 50 last time and voted for 75 this month. He says, honestly, no idea what would have made someone more hawkish. It's actually true. I don't know why Esther George pivoted all of a sudden. Very weird, actually. And then the yield curve inversion, they're saying that's inevitable, that'll come up at the thing. Mohamed El-Arian, Alliance Chief Economic Advisor, he says he wants to hear Powell explain to America that there will be costs to anti-inflation campaign, but that it's better than the alternative. He also wants to hear how the Fed has restored its forecasting abilities. That is critical to their success. Very good comment. A couple of non-rate economy things that could come up in Powell at first. The Chinese intelligence report about the Fed. If you guys remember, that came out yesterday. So they're saying that could be brought up. They want to see him talk about restoring his capabilities. The yield curve inversion may come up. And then maybe why Esther George pivoted all of a sudden. Interesting. And then 3 minutes, Chad. Holy crap, it's here. SPY going up. Fetch, pop, Betaville report. You guys brought this one up yesterday. Fetch, far-fetch, popping. Betaville. And then Powell is on the way. Ba-da-pop-pop-pop. Careful. No. The move is about to start. So nothing really has happened so far. That's what we're waiting on right now. So again, the press conference is where everything starts to go crazy. Get ready. They asked how 75 in terminal rate of stops inflation. Well, again, I mean, I think most people are everything I've read about terminal rate being priced in right now is 5%. So we'll see. If you want to go for the weeklies, you can. Honestly, I would wait. I might just play I think we'll get one move, and then after the first drop, I might buy calls depending on how the conversation's going. Decided to join Twitch. We love you. God bless you. Like the video if you're on YouTube. Get ready. You got about 1 minute and 20 seconds, and then pop a pow, man. And then here it is. Have these changed? Let's take a look. Fed futures now. September is only pricing in 50. So believe it or not, you're only pricing in. This is good. This is bull. The Fed futures actually could reverse big. That's for September now. Interesting. So you're not pricing in 0.75. Tell you that much. Because we're at 2. Or no. We're at 2. No. Are we? Because we're at 2.25 to 2.5 right now. So then this would be 275. That would be 75. The market is calling Powell's bluff initially, but it is at 50. We expected that, but I was saying some people thought that was too optimistic. And like again, I thought as we moved on throughout the week, I was like, maybe it is a little optimistic. Maybe Powell will ignore everything, but we'll find out. There it is. 10 seconds, ladies and gentlemen. Oh, everybody's waiting. Everybody is waiting. Wow, good luck. No audio. And remember, this is like the second or third in-person Fed meeting. None of the other ones have actually played out like this. Again, they've all been on the press conferences. So, should be starting. Where's Powell? 30 seconds late. No, the audio we haven't. He's on. There he is. There's our guy. Oh, look at they got another side view. We've never. Oh, look at that. Okay, game time, Chattadonia. Listen up.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down to our 2% goal if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the FOMC raised its policy interest rate by 0.75 percentage point and anticipates that ongoing increases in the target range for the federal funds rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. And I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Recent indicators of spending and production have softened. Growth in consumer spending has slowed significantly, in part reflecting lower real disposable income and tighter
Again, most of this you already know, so the reaction,
activity in
don't
the
get
housing
too
sector
crazy.
has weakened.
This is
in
all
part reflecting
pre-written,
higher mortgage rates.
so it's not anything too new.
And after a strong increase in the first quarter, business fixed investment also looks to have declined in the second quarter. Despite these developments, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 375,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. Overall, the continued strength of the labor market suggests that underlying aggregate demand remains solid. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in May, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In June, the 12-month change in the Consumer Price Index came in above expectations at 9.1%, and the change in the core CPI was 5.9%. Notwithstanding the recent slowdown in overall economic activity, aggregate demand appears to remain strong. Supply constraints have been larger and longer lasting than anticipated, and price pressures are evident across a broad range of goods and services. Although prices for some commodities have turned down recently, the earlier surge in prices of crude oil and other commodities that resulted from Russia's war on Ukraine has boosted prices for gasoline and food, creating additional upward pressure on inflation. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 2.25% to 2.5%. And we're continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy. Today's increase in the target range is the second 75 basis point increase in as many meetings. While another unusually large increase could be appropriate at our next meeting. That is a decision that will depend on the data we get between now and then. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible.
That was the little pop, the drop in pop, but
As the stance of
it
monetary
could be
policy
because
tightens
avoiding
further,
September.
It likely will become
But
appropriate
keep
to
watch.
slow the pace of increases. While
Yeah,
we
he said
assess
usually
how our
large
cumulative
increase depends
policy
on data.
adjustments are affecting the economy and inflation.
So that's taken as
Our
positive. We'll
overarching
cover
focus
that.
is using our tools to bring demand into better balance with supply in order to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to return inflation to our 2% longer-run goal. This process is likely to involve a period of below-trend economic growth and some softening in labor market conditions. But such outcomes are likely necessary to restore price stability and to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Hi, Chair Powell. Thanks for taking our questions. Rachel Siegel from The Washington Post. I'm wondering if you can walk us through your thinking around the decision not to go for a full percentage point increase. We saw a ramp up after the May CPI report came in hotter than usual, and then obviously the June figure did too. Was there any discussion of a stronger hike at this meeting? Yeah, thank you.
Sure. So we did judge that a 75 basis point increase was the right magnitude in light of the data and in the context of the ongoing increases in the policy rate that we've been making. I'd say that we wouldn't hesitate to make an even larger move than we did today if the committee were to conclude that were appropriate. That was not the case at this meeting. There was very broad support for the move that we made. You mentioned the June meeting. We had said many times that we were prepared to move more aggressively if inflation continued to disappoint. And that's why we did move to a more aggressive pace at the June meeting, as we said we would do. At this meeting, we continued at that more aggressive pace as inflation has continued to disappoint in the form of the June CPI reading.
Thank you so much for taking our questions. Colby Smith with the Financial Times. As the committee considers the policy path forward, how will it weigh the expected decline in headline inflation, which might come as a result of the drop in commodity prices, against the fact that we are likely to see some persistence in core readings in particular? And given that potential tension and signs of any kind of activity weakening here, how has the committee's thinking changed on how far into restrictive territory rates might need to go?
So I guess I'd start by saying we've been saying we would move expeditiously to get to the range of neutral, and I think we've done that now. We're at 225 to 2.5, and that's right in the range of what we think is neutral. So the question is,
he's saying
how are we thinking about
he's
the
saying
path
that's
forward?
neutral. Interesting.
So one thing that hasn't changed is that it won't change is that our focus is going to continue to be on using our tools to bring demand back into better balance with supply in order to bring inflation back down. That'll continue to be our overarching focus. We also said that we expect ongoing rate hikes will be appropriate and that we'll make decisions meeting by meeting. So what are we going to be looking at? We'll be looking at the incoming data, as I mentioned, and that'll start with economic activity. Are we seeing the slowdown in economic activity that we think we need? And there's some evidence that we are at this time. Of course, we'll be looking at labor market conditions, and we'll be asking whether we see the alignment between supply and demand getting better, getting closer. Of course, we'll be looking closely at inflation. You mentioned headline and core. Our mandate is for headline. Of course, it's not for core, but we look at core because core is actually a better indicator of headline and of all inflation going forward. So we'll be looking at both, and we'll be looking at them at those both really for what they're saying about the outlook rather than just simply
bonds are playing around now.
What they say.
They're playing
but
along.
we'll be asking, do we see
watch out for
inflationary
that.
pressures
But again,
declining?
some bullish stuff, we'll go over it.
Actual readings of inflation coming
But
down.
most
So in
likely
light of all
people
that
are
data,
leaning on
the question we'll be
Powell
asking is whether the
slowing
stance
down
of policy we
after
have
the
is
second
sufficiently
question.
restrictive to bring inflation back down to our 2% target. And it's also worth noting that these rate hikes have been large and they've come quickly, and it's likely that their full effect has not been felt by the economy. So there's probably some additional tightening, significant additional tightening in the pipeline. So where are we going with this? I think the committee broadly feels that we need to get policy to at least to a moderately restrictive level. And maybe the best data point for that would be what we wrote down in our SEP at the June meeting. So I think the median for the end of this year, the median would have been between 3.25 and 3.5, and then people wrote down 50 basis points higher than that for 2023. So that's, even though that's now 6 weeks old, I guess, that's the most recent reading. Of course, we'll update that reading at the September meeting in 8 weeks. So that's how we're thinking about it. As I mentioned, as it relates to September, I said that another unusually large increase could be appropriate, but that's not a decision we're making now. It's one that we'll make based on the data we see. And we're going to be making decisions meeting by meeting. We think
that's the September question. He's ignoring it. Literally, he just said
it.
it.
Go to a meeting by meeting basis and not provide the kind of clear guidance that we had provided on the way to neutral.
Yeah, he literally just said they're not going to give clear guidance on that, as they did in the past.
Nick Timmerosa, The Wall
Very
Street
good
Journal.
answer.
Chair Powell, you've said that your
skirted
policy
it.
works through influencing expectations, and that policy needs to be at least moderately restrictive, which means you need financial conditions to stay tight. Futures market pricing currently implies you will raise rates this year along the lines of your June SEP, but then lower them a few months later next year. Are these expectations consistent with the need to keep financial conditions tight in order to moderate purchasing power and bring inflation back to 2%?
So I'm going to start by pointing out that it's very hard to say with any confidence in normal times what the economy is going to be doing in 6 or 12 months. And so to try to predict what the appropriate monetary policy response would be, I mean, of course, we do that in the SEP, but nonetheless, you've got to take any estimates of what rates will be next year with a grain of salt, because there's so much uncertainty. These are not normal times. There's significantly more uncertainty now about the path ahead than I think there ordinarily is, and ordinarily it's quite high. So again, the best data, the only data point I have for you really is the June SEP, which I think is just the most recent thing that the committee's done. Since then, inflation has come in higher, economic activity
that's not good. He's not really giving us signals to what to look for. And the last quote from Powell is he said the Fed is going to offer less clear guidance.
Estimate of where the committee's thinking is still, which is that we would get to a moderately restrictive level by the end of this year, by which I mean somewhere between 3 and 3.5%, and that the committee sees further rate increases in 2023. As I mentioned, we'll update that, of course, at the September meeting, but that's really the best I can do on that.
You said inflation had been a little bit hotter than anticipated. Has your view of the terminal rate changed since June?
So I wouldn't say it was. I think we didn't expect a good reading, but this one was even worse than expected, I would say. I don't talk about my own personal estimate of what the terminal rate would be. I will write down that it's going to evolve. It's obviously it has evolved over the course. I think for all participants, it has evolved over the course of the year as we learn how persistent inflation is going to be. And by the time of the September meeting, we will have seen 2 more CPI readings and 2 more labor market readings, and significant amount of readings about economic activity and perhaps geopolitical developments. Who knows? It'll be a lot. It's an 8-week intermeeting period, so I think we'll see quite a lot of data, and we'll make our decision at that meeting based on that data.
Gina. Hi, Jerome. Thanks for taking our question. Gina Smilik, New York Times. You kind of alluded to this earlier, but I wonder, in the event that you see several months of very weak headline inflation numbers because oil prices are coming down so much, but core inflation continues to be strong or even picks up, I wonder how you would think about that.
So it's hard to deal with hypotheticals, but I just would say this: we would look at both, and we'd be asking ourselves, are we confident that inflation is on a path down to 2%? That's really the question, and we'll be making, our policy stance will be set at a level ultimately at which we are confident that inflation is going to be moving down to 2%. So it would depend on a lot of things. Of course, as I mentioned, core inflation is a better predictor of inflation going forward. Headline inflation tends to be volatile. So in ordinary times, you look through volatile moves in commodities. The problem with the current situation is that if you have a sustained period of supply shocks, those can actually start to undermine or to work on de-anchoring inflation expectations. The public doesn't distinguish between core and headline inflation in their thinking. So it's something we have to take into consideration in our policymaking, even though our tools don't really work on some aspects of this, which are the supply side issues.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. Earlier this week, the president said we are not going to be in a recession. So I have two questions off of that. Do you share the president's confidence in not being in a recession? And second, how would or would not a recession change policy? Is it a bright line, sir, where contraction of the economy would be a turning point in policy, or is there some amount of contraction of the economy the committee would be willing to abide in its effort to reduce inflation?
So as I mentioned, we think it's necessary to have growth slow down, and growth is going to be slowing down this year for a couple of reasons. One of which is that you're coming off of the very high growth of the reopening year of 2021. You're also seeing tighter monetary policy, and you should see some slowing. We actually think we need a period of growth below potential in order to create some slack so that the supply side can catch up. We also think that there will be, in all
Powell
likelihood,
literally
some softening in
saying
labor
they
market
want
conditions.
growth to slow down.
And those are things that we
Yeah.
expect and we think that they're probably necessary if we were to have to get inflation, if we were to be able to get inflation back down on a path to 2%, ultimately get there.
The question was whether you see a recession coming and how that might or might not change.
There it is.
So we're going to be
He doesn't
focused
wanna
on
say
getting
the word.
inflation back down.
He can't say the word.
We, as I've said on other occasions, price stability is really the bedrock of the economy, and nothing works in the economy without price stability.
He can't
We
say
have a strong
recession.
labor
That's why he
market
can't
without
answer
price
it.
stability for an extended period of time. We all want to get back to the kind of labor market we had before the pandemic, where differences between racial and gender differences and that kind of thing were at historic minimums.
Dude, he's
where
trying really hard.
Participation was high, where inflation was low. We want to get back to that, but that's not happening. That's not going to happen without restoring price stability. So that's something we see as something that we simply.
I mean, I'd keep it in
must
mind.
do.
He's
And we
making a
think that
connection between price
we don't see it
stability
as
and recession.
A trade-off with.
We'll talk about that.
With the employment mandate, we see it as a way to facilitate the sustained achievement of the employment mandate in the longer term.
Told you he can't say the
Howard
word. So that's
Schneider with
bullish
Reuters.
if he didn't say it.
Particularly in regard to expectations, it's been said the last few months that the risks of doing too little outweighed the risks of doing too much. Does that remain the bias?
So we're trying to do just the right amount, right? We're not trying to have a recession, and we don't think we have to. We think that there's a path for us to be able to bring inflation down.
Ironically, not on the
while
other
sustaining
question.
a strong labor market, as I mentioned, along with, in all likelihood, some softening.
But he
in
said
labor
we're
market
not
conditions.
trying to get a
So
recession.
that's
Yep,
what we're
literally,
trying
it's
to
already-
achieve,
that
and
quote's already
we
hitting
continue
on
to
the
think
wire.
that there's a path to that. We know that the path has clearly narrowed, really based on events that are outside of our control, and it may narrow further. So, I do think, as I said just now, that restoring price stability is just something that we have to do. There isn't an option to fail to do that, because that is the thing that enables you to have a strong labor market over time. Without restoring price stability, you won't be able to, over the medium and longer term, to actually have a sustained period of very strong labor market conditions. So, of course, we serve both sides of the dual mandate, but we actually see them as well aligned on this.
But as a follow-on to that, given the uncertainty and the sort of paradoxical flow of data you've been getting, if you're going to make a mistake, would you rather make the mistake on doing too much, raising too much, than raising too little?
Yeah, we're trying not to make a mistake. Let me put it this way. We do see that there are two-sided risks. There would be the risk of doing too much and imposing more of a downturn on the economy than was necessary. But the risk of doing too little and leaving the economy with this entrenched inflation, it only raises the cost. If you fail to deal with it in the near term, it only raises the cost of dealing with it later. To the extent people start to see it as just part of their economic lives, they start to factor high inflation into their decisions, when that, on a sustained basis, when that starts to really happen, and we don't think that's happened yet, but when that starts to happen, it just gets that much harder and the pain will be that much greater. So I really do think that it's important that we address this now and get it done.
Thanks, Chair Powell. Neil Irwin from Axios. To build a little bit on what Steve was asking, do you believe the United States is currently in a recession? Will the GDP reading tomorrow affect that judgment one way or the other? And has your assessment of the risk of recession changed any in recent weeks?
So I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy
now the market's
that are
reacting good.
Performing,
it's weird he didn't answer the Steve question.
Of course, I would point to the labor market in particular. As I mentioned, it's true that growth is slowing, and for reasons that we understand. Really, the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow. There's also more slowing going on now. But if you look at the labor market, you've got growth. I think payroll jobs averaging 450,000 per month. That's a remarkably strong level for this state of affairs. The unemployment rate at near a 50-year low at 3.6%. All of the wage measures that we track are running very strong. So this is a very strong labor market, and it's just not consistent with 2.7 million people hired in the first half of the year. It doesn't make sense that the economy would be in recession with this kind of thing happening. So I don't think the U.S. economy is in recession right now. Haven't seen it, and we'll just have to see what it says. I don't. I would say generally the GDP numbers do have a tendency to be revised pretty significantly. It's very hard to accumulate U.S. GDP. It's a large economy, and a lot of work and judgment goes into that. But you tend to take first GDP reports, I think, with a grain of salt. But of course, it's something we'll be looking at.
So pretty much it's going to come in negative tomorrow, and then they're going to revise it 2 months later to back to positive.
Victoria Guida with Politico. I wanted to ask about the new conflict of interest rules that you all rolled out. Some senators have written asking for those rules to have more teeth and to have sort of more transparency about the Fed officials' financial activity. I was wondering if you could speak to that and whether you intend on toughening those rules in any way.
So those are the toughest rules in place, at any comparable institution that I'm aware of. We think, we thought about this carefully, and we put them in place, and we're building the infrastructure so that the enforcement will be tight. That actually you won't be able to make trades unless they're pre-cleared, and the amount of trades you make will be they'll have to be 45 days or more before any FOMC meeting. It's just I think we've really created a very strong and robust set of rules that will support public trust in the institution. And again, we're just now, the system is just now up and running, and I'm proud of what we did.
Hi, Katerina Saraiva, Bloomberg News. I wanted to ask a little bit more about the 75 basis points versus 50 versus 25. Can you talk a little bit about what
She's trying to
what
lead
kind of
until
goes
September.
into your thinking
There's another
for
September question.
making the decision on how much to raise rates, and just talking about a very large amount that you alluded to. Could that possibly be 100 basis points? And then kind of along those lines, is there any sort of weakness in the economy outside of inflation measures that would lead you to slow your hiking pace?
So I'm gonna take that as a question about the next meeting and thereafter. So as I mentioned, we're going to be looking at all of those things: activity, labor market, inflation, and we're going to be thinking about our policy stance and where does it really need to be. And I also mentioned that as this process, now that we're at neutral, as the process goes on, at some point, it will be appropriate to slow down. And we haven't made a decision when that point is, but intuitively that makes sense, right? We've been front-end loading these very large rate increases. Now we're getting closer to where we need to be. So that's how we're thinking about it. And we're, in terms of September, we're going to watch the data and the evolving outlook very carefully and factor in everything and make a decision in September about what to do. And I'm not really going to provide any specific guidance about what that might be. But I mentioned that we might do another unusually large rate increase, but that's not a decision that we've made at all. So we are, we're going to be guided by the data. And I think you can still think of the destination as broadly in line with the June SEP, because it's only 6 weeks old, and sometimes SEPs can get old really quick. I think in this one I would say is probably the best guide we have as to where the committee thinks it needs to get at the end of the year and then into next year. So I would point you to that.
Chris.
Hi, thank you. Chris Rugaber at Associated Press. I wanted to ask about, right now there is a sort of growing gap between the Fed's preferred measure of inflation, the PCE index, and the one that's followed by the public, the CPI, of course. How do you expect to handle this divergence if the PCE starts to come down enough for you to consider slowing rate hikes, even if the public is still seeing much higher CPI ratings? Thank you.
So it's an interesting situation. Of course, we've long used PCE because we think it's just better at capturing the inflation that people actually face in their lives. And I think that view is pretty widely understood. That said, the public really reads about CPI. And the difference really is because the CPI has higher weights on things like food, gasoline, motor vehicles, and housing than the PCE index does. And so that accounts for a lot of the difference. However, over time, they tend to come together. We were given the importance in the public eye of CPI. We are calling it out and noticing it and everything like that. But remember, we do target PCE. That is because we think it's a better measure. They will come together eventually. The typical gap was really about 25 basis points for a very long time. And if it got to 40 basis points, that would be very noticeable. Now it's much larger than that because of the things I mentioned. So we'll be watching both, but again, the one that we think is the best measure always has been PCE, at least since I think we, some 20 plus years ago, moved to PCE.
Michael McKee.
I'd like to weave a couple of things together, Mr. Chairman. Michael McKee from Bloomberg TV and Radio. You said that the destination pretty much remains the same in terms of your end of the year target, but where are you in the journey? We've now seen the federal stimulus programs end. You mentioned consumer spending, business investment have slowed. Are they moving at a pace you would expect, or is demand still greater than supply, too much greater than supply, that you need to do significantly more? And I ask because there are lags in the impact of monetary policy, as you mentioned, and a lot of this might hit in 2023. The strong dollar effect may hit in 2023 when the economy might be weak. How do you know where you are and where you think you need to get to?
Well, just talking about demand for a second, as I mentioned in my remarks, I think you pretty clearly do see a slowing now in demand in the second quarter. Consumer spending, business fixed investment, housing, places like that. I think people widely looked at the first quarter numbers and thought they didn't make sense and might have been misleading in terms of the overall direction of the economy. Not true of the second quarter. But at the same time, you have this labor market. So there are plenty of experiences where GDP has been reported as weak and the labor market is strong and the economy has gone right through that and been fine. So that's happened many times. And it used to happen, if you remember, in the first quarter of every year for several years in a row, GDP was negative and the labor market was moving along just fine, and it turned out to just be measurement error. It was called residual seasonality. We don't know the situation. The truth is, though, we think that demand is moderating.
Measuring error.
How much is it moderating?
Keep that one in
We're
mind.
not sure. We're going to have to watch the data carefully. There is a great deal of money on people's balance sheets that they can spend. The unemployment rate is very low. The labor market's very hot. There are many, many job openings. Wages are high. So it's the kind of thing where you think that the economy should actually be doing pretty well in the second half of the year. But we'll have to see. We don't know that because you do see a marked slowing in the second quarter that is fairly broad. So we'll be watching that. We'll be watching that. Of course, as I mentioned, we do want to see demand running below potential for a sustained period to create slack and give inflation a chance to come down.
Nicole. Hi, thank you, Chairman. Nicole Goodkind, CNN Business. When does the committee expect to see a meaningful slowdown in the labor market, and how much weakness will it accept with regard to slower job growth and higher unemployment before it pauses or begins to think about cutting rates?
So I think you're already you've seen in the labor market, what you've seen is a decline from very high levels of job creation last year and earlier this year to modestly slower job creation. Still quite robust, as I mentioned. So you're seeing that. You're seeing some increase in initial claims for uninsurance, although that may actually have to do with seasonal adjustments. We're not sure that that's actually real. There's some evidence that wages, if you look at average hourly earnings, they appear to be moderating. Not so yet from the other wage measures, and we'll be getting the Employment Compensation Index measurement, I think, on Friday, I guess. And that's a very important one because it adjusts for composition. So I'd say you and also anecdotally, you hear much, the sort of level of concern on the part of businesses that they simply can't find workers is probably down a little bit from what it was, say, for example, late in the latter parts of last year. So there's a feeling that the labor market is moving back into balance. If you look at job openings or quits, you see them moving sideways or perhaps a little bit down. But it's only the beginning of an adjustment. But I think most also, if you look at, once you start citing these things, you can't stop. If you look at the household survey, you see much lower job creation, and the household survey can be quite volatile, but it has no jobs created in the last 3 months. So that might be a signal that job creation is actually a little bit slower than we're seeing in the establishment survey. So, executive summary, I would say there's some evidence that labor demand may be slowing a bit. Labor supply, not so much. We have been disappointed that labor force participation really hasn't moved up since January. That may be related to yet another big wave of COVID, and there's evidence that that's the case. But so we're not seeing much in the way of labor supply. Nonetheless, I would say some progress on demand and supply getting back in alignment.
How much weakness would you be willing to accept before you think about pausing rate cuts?
So I think we're going to be looking at inflation as well. We as I mentioned, we need to see inflation coming down. We need to be confident that inflation is going to get back down to mandate consistent levels. That's not something we can avoid doing. That really needs to happen. But we do think, though, that the labor market can adjust because of the huge overhang of job openings, of excess demand, really. There should be able to be an adjustment that would have perhaps lower than expected increases in unemployment, lower than would be expected in the ordinary course of events, because the ratio of vacancies to unemployed is just out of keeping with historical experience, and that suggests that this time could be different.
Edward Lawrence.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So you said the path may be narrowed to avoiding a recession. So how close are we to a recession? And then how do forecasts of possible recessions from banks and economists, how does that make a soft landing you've talked about more difficult?
So as I mentioned, it doesn't seem that the U.S. economy is in recession right now. And I think you do see weakening, some slowdown, let's put it that way, in growth, and you see it across some of the categories that I mentioned, but there's also just the very strong data coming out of the labor market still. So overall, you would say that in all probability, demand is still strong, and the economy is still on track to continue to grow this year. But the slowdown in the second quarter is notable, and we're going to be watching that carefully. Sorry, what was a lot?
Forecasts. How do bank forecasts of possible recessions, economists? Does that affect the soft landing?
Well, we've said since the beginning, I think, that having a soft landing is what we're aiming for. Of course, that has to be our goal. It is our goal, and we'll keep trying to achieve it. I do think events. At the beginning, we said it was not going to be easy. It was going to be quite challenging to do that. It's unusual. It's an unusual event. It's not a typical event, given where we are. If there is a path to it, and we think there is, it is the one I mentioned, that the labor market actually has such a large amount of surplus demand that you could see that demand coming down in a way that didn't translate into a big increase in unemployment, as you would expect in the ordinary course, because frankly the imbalance is so much greater. But we don't know that. I mean, this is a case of first impression. So anyone who is really sure that it's impossible or really sure that it will happen is probably underestimating the level of uncertainty. And so I would certainly say it's an uncertain thing. Nonetheless, it's our goal to achieve it, and we'll keep trying to do that.
That did not sound too good, but the market liked it.
Thank you, Mr. Chairman.
You're at
Jean Young
401.
with Market News.
A lot of things ripping right now.
I wanted to ask about the balance sheet reduction program. It's been working for a couple months now, and in a different environment than the last time the Fed did it. What are you learning about how it's working and how markets are reacting? And is reaching the minimum level of reserves needed in the system still several years away at the current pace?
So we think it's working fine. As you know, we tapered up into it, and in September we'll go to a full strength, and the markets seem to have accepted it. By all assessments, the markets should be able to absorb this, and we expect that'll be the case. So I would say the plan is broadly on track. It's a little bit slow to get going because some of these trades don't settle until for a bit of time, but it'll be picking up steam. And I guess your second question was getting, the process of getting back down to the new equilibrium will take a while, and that time, it's hard to be precise, but the model would suggest that it could be between 2.5 years, that kind of thing. And this is a much faster pace than the last time. Balance sheet's much bigger than it was, but we looked at this carefully, and we thought that this was a sensible pace. And
again, this is AKA
saying
saying that you're not going to watch the balance sheet drop for a while. She started that question with years. So
Chairman Powell, Brian Chung, Yahoo
like
Finance. Looking at financial conditions, it seems like the tightening has slowed as of late, with the 10-year coming down, 30-year fixed mortgage rates also going a bit sideways when we talk about a hot housing market still. Just wondering if you find financial conditions tight enough, especially as you continue to raise rates.
So a big piece of that is inflation expectations, break-evens coming down, which, is a good thing. It's a good thing that markets do seem to have confidence in the committee's commitment to getting inflation back down to 2%. So we'd like to see market-based, readings of inflation expectations come down. Broader financial conditions have tightened a good bit. I mean, the way this works is we set our policy, and financial conditions react, and then financial conditions are what affects the economy. So, and we don't control that second step. We're just going to do what we think needs to be done. We're going to get our policy rate to a level where we're confident that inflation will be moving back down to 2%. Confident. So that's how we're going to take it. And of course, we'll be watching financial conditions to see that they are appropriately tight and that they're having the effect that we would hope they're having, which is to see demand moderate and inflationary pressures recede and ultimately inflation come down.
Thank you, Chair Powell. Greg Robb from MarketWatch. I wonder if you can go back a little bit in time to before there was this outbreak of inflation, when the committee put in place forward guidance on tapering asset purchases. I think it was December 2020. There's a recent speech by Fed Governor Waller talking about that and saying that maybe that was too tight, that kind of condition, and it put you a little bit behind. Not his words, but maybe, we're kind of late to react to some of that inflation. So could you talk about that decision, and have you looked at it in hindsight at all? Thank you.
So, yeah, we said that we wouldn't lift off until we had basically achieved our dual mandate goals. And the reason we did it in real time was that the first look at the new framework that we'd rolled out, plenty of people were saying, oh, it's not credible, you'll never get inflation to 2%. Some of our critics now who say inflation is too high were the same ones who were saying you'll never get to 2%. Well, but anyway, that's what happened. So we thought we needed to really make a strong statement with that. It wasn't part of the framework. The December 20 guidance was not part of our overall new framework. It was just guidance that we put in place. So I would say two things. One, I don't think that has materially changed the situation. But I have to admit, I don't think I would do that again. I don't think I would do that again. Ultimately, the situation evolved in a highly unexpected way for all of us. And, maybe the learning is that leave a little more flexibility than that. But did it matter in the end? If you look at, I really don't think it did. I'm not sure it would have mattered if we'd been raising rates 3 months earlier. Does anybody think that would have made a big difference? I mean, lots of central banks were raising rates 3 months earlier, and it didn't matter. I mean, this is a global phenomenon that's happening now. Admittedly different in the United States, but anyway.
That's very interesting because he was like accepting the blame last month. This time he's like, listen, man,
a lot of people
look at
talk
everybody
about that
else.
time, and they talk about a taper tantrum that I know you haven't talked about it too much, but that you were worried at the time about repeating that taper tantrum that you had experienced as a governor. So was that part of that? Where did that fit into all those? Thank you.
So I think we learned there have been multiple taper tantrums, right? So there was the famous one in 2013. There's what happened at the December 18 meeting where markets can ignore developments around the balance sheet for years on end and then suddenly react very sharply. So we just had developed a practice of moving predictably and doing it in steps and things like that. It was just like that's how we did it. And so we did it that way this time. We were careful to take steps and communicate and all that kind of thing. We were trying to avoid a tantrum because they can be quite destructive. They can tighten financial conditions and knock the economy off kilter. And when it happens, you have to really, in both 13 and 18, really had consequences for the real economy, 2, 3, 4 months later. So we were trying to avoid that. That was part of it. Again, I don't think that's the real issue of 2020 and 21 was just trying to understand what was happening with the reopening economy. That was where the big uncertainty was. And our view was that these supply side issues would get better, that people would go back to work, that labor force participation would come back, everyone would get vaccinated, schools would open, kids would be in school, and labor force participation would jump back up. That was very broadly thought to be the case. These supply side issues would get solved reasonably quickly, and they just haven't. They still haven't. So that's really the learning, I think, is around how complicated these supply side issues can be. We haven't seen this before in a long, long time. And so that's really what accounts for the pace at which we moved. And we did, when inflation changed direction really in October, we've moved quickly since then. I think people would agree. But before then, inflation was coming down month by month, and we kind of thought we had the story, probably had the story right. But then I think in October you started to see a range of data that said, no, this is a much stronger economy and much higher inflation than we've been thinking. And again, we pivoted, and here we are.
Nancy Marshall-Genzer with Marketplace. Chair Powell, I just want to pin you down a little bit more on the issue of recession. So if we get a negative GDP number tomorrow for the second quarter, would the Fed consider the U.S. in a recession? And just remind us, what is your definition for the start of a recession?
So the Fed doesn't make a judgment on that. We're focused on the dual mandate and using our tools to achieve maximum employment and price stability.
You keep using the word. Can you define it?
We don't say there is now a recession, that kind of thing. So that wouldn't be something we do. We would look at the data tomorrow, and
you'll
no
note
doubt we'll
he
look at it
doesn't
very
say
carefully and
recession
draw
unless he
whatever
says
implications we can.
recession is not going to happen.
As I mentioned, though,
or I don't believe.
If you think about what a recession really is, it's a broad-based decline across many industries that that's sustained for more than a couple of months, and there are a bunch of specific tests in it, and it just doesn't seem like that now. What we have right now doesn't seem like that, and the real reason is that the labor market is just sending such a strong signal of economic strength that it makes you really question the GDP data. But again, that's not a decision that we make, and we won't reach a conclusion one way or another on that.
Sir, nobody asked about GDP. Why did you say that?
Thank you very much. Simon Rabinovich with The Economist. You've said that some softening in the labor market is needed. Within the Fed, there are staff economists who've argued that NIRU, the non-inflationary rate of unemployment, might be as high as 5 to 6% right now, which obviously is a lot higher than the current rate of 3.6. What's your assessment of NIRU?
I thought she didn't say GDP.
Is that something
I was
that
like,
came up in
interesting.
discussion with the committee?
So I think broadly, a lot of economists think that the natural rate of unemployment will have moved up to some significant extent above where we think it was before. And the reason is it's the usual matching issue where matching has become less effective and that kind of thing when you have the kind of turbulent downturn and the big switches in demand from services to goods and all that. So it could be higher, and my own instinct is that the natural rate of unemployment is higher. Of course, I would add that we don't know it. We can never know where these star variables are in real time with any confidence, but I would say it must have moved up materially. But the other side of that is as all these jobs get created and people go back to work and unemployment is so low, I think you could, in principle, you could see it coming back down pretty significantly. And that would also, by the way, take pressure off of inflation, because it's that gap. It's the gap between actual unemployment and the natural rate that really is relevant for, the negative slack we have in the economy by the overtight labor market. So if you wouldn't observe this. It's an unobservable, but you could actually be seeing inflationary pressures coming down if that does happen. And we don't control that, but that's something that logically, if the pandemic and the disorder in the labor market cause the natural rate to move up, then as the labor market settles down, in principle, you should see it move back down.
Thank you, Chair Powell. Jeff Cox from CNBC.com. Just a question about, hate to keep banging the drum about recession, but most of the polls that we're seeing now from the public, people believe that we're already in a recession or heading for one. Economists pretty much the same thing. They're being told by folks like you and in the administration that we're not in a recession, we're not heading for a recession. Frankly, coming from the same people who told them that inflation was transitory, telling them now that we're not heading for a recession. So what would you tell the public to reassure them now that you feel confident in your forecast going forward and the Fed is ready to respond to a potential downturn in the economy?
No, all I've really said is I don't think it's likely that the U.S. economy is in a recession now, and I've explained why that is the case. It's because you do see a very strong labor market, and I think the public will see that as well. Going forward, what we've seen is a slowing in spending, as I mentioned. We've seen the very beginnings of perhaps a slight lessening in the tightness of the labor market, but it would only be the beginnings. So, and I mentioned that I also said that our goal is to bring inflation down and have a so-called soft landing, by which I mean landing that doesn't require a significant increase, a really significant increase in unemployment. We're trying to achieve that. I've said on many occasions that we understand that's going to be quite challenging and that it's gotten more challenging over recent months.
Thanks, Chair Powell. Kyle Campbell with American Banker. The FOMC has historically tried to avoid the kind of rapid monetary policy tightening that has happened so far this year. How concerned are you that the rate hikes that we've seen thus far might increase risks to financial stability, not just domestically, but globally?
I mean, there are precedents for the FOMC moving very quickly. For example, 1994, 1980, even more so. So we've been known to do that when it's the appropriate thing to do, and this year it clearly is. I would say that given how quickly we've moved, I'm gratified that while that basically markets have been working, they've been orderly. There's been some volatility, but that's only to be expected. From a financial stability perspective, asset values are down, which in some sense lowers vulnerabilities. It's when they're really high that you would worry that they're vulnerable to a fall. Actually, many asset values have come down. I think you've got a well-capitalized banking system. I think you have households are generally in about as strong financial shape as they've been in a very long time, or perhaps ever, given what the money that's on people's balance sheets, and so you have a pretty, from a financial stability standpoint, you have a pretty decent picture. Now, the macroeconomic, there are plenty of macroeconomic issues that don't rise to the level of financial stability concerns. By financial stability, we think of that as things that might undermine the working of the financial system, so big, serious things. That's not to say that people at the lower end of the income spectrum aren't suffering, because they are. They're suffering from high inflation. They're going to the grocery store and finding that in many cases their paycheck doesn't cover the food they're accustomed to buying. We're seeing actual real declines in food consumption, and it's very concerning. It's very unfortunate, and that's why we're really committed to bringing down inflation. One of the reasons.
Go to Mark for the last question.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. I can remember when you held your first news conference and you vowed to be a very plain-spoken chairman, and we're thinking today about the impacts of Fed policy on individuals as well. What would you say to individuals or households who may yet lose their jobs in this tightening cycle in the fight against inflation as they try to translate what Fed policy means to them in this complicated economic landscape?
Yeah.
Thank you.
So I guess the first thing I would say to every household is that we know that inflation is too high. We understand how painful it is, particularly for people who are living paycheck to paycheck and spend most of that paycheck on necessities such as food and gas and heating their homes and clothing and things like that. We do understand that those people suffer the most. Middle class and better off people have some resources where they can absorb these things, but many people don't have those resources. So, it is our job, it is our institutional role. We are assigned uniquely and unconditionally the obligation of providing price stability to the American people, and we're going to use our tools to do that. As I mentioned, there will be in all likelihood, some softening in labor market conditions. We need growth to slow to below potential growth. We don't want to, we don't want this to be bigger than it needs to be. But ultimately, if you think about the medium and longer term, price stability is the thing that makes the whole economy work. It's what can give us a strong labor market and wages that aren't being eaten up by high inflation. If you talk to people, again, people who are making wages, relatively low wages, they're the ones who are suffering the most from inflation. So it's all the more reason why we need to move on this. Thank you very much.
Jerome Powell, ladies and gentlemen. So Market immediately bullish. I mean, we talked about it in the beginning. Most of this was expected, but every time he was asked about September, he literally said the Fed isn't going to have guidance. And I think that this is why the market took it positive, because simply he left it on the table. He said they could do an extraordinarily or an unusually large rate hike, but he said it's all going to be data dependent. They won't want to give it. And then initially, he didn't want to respond to inflation or recession. And then you'll notice he started using the word a little bit more. But then anytime he would say it, he was pretty much saying, it's not going to happen. I don't think it's likely. I don't think it's likely. Even when the guy asked him, how can we trust you with that? But for the most part, it's kind of bullish. And I'm going to tell you something right now, just right off the bat. This is what we were talking about before the meeting. If this gets taken bullish, he found a way to navigate this September. If those Meta earnings are good tomorrow, we should be able to go up. But as some of you have pointed out, the bond market move is a little bit weird. And, I mean, here's to tell you, this is why it's bullish, Chattadonia. Again, if you're not understanding it, I know his words were a little bit confusing, but just take note right now, the September rate hike odds on the Fed futures, they are at 90%, 50 basis points. So remember, we talked about that being very, very bullish, and that is really it changed a little bit from the day and from yesterday. It got cut in half. So that's a little bit a part of it. He gave guidance by saying we're not going to give guidance and leaving him open to it, and I think that's what the market liked. They asked him about the balance sheet reduction, and pretty much after even today, if we haven't gotten the message from the last couple months, pretty much you are not going to watch that balance sheet reduce up until a couple of years. But pretty much I'm not really getting in a weird way, I'm not getting too much of a false bull reaction. Pretty much if Meta earnings are good and you get follow through with Apple and Amazon tomorrow, I think this is going to be pretty bullish. Again, I wanted that call. I thought we would have got a bigger dip. That was the dip I was talking about. Then they went nuts. But pretty much. And then a GDP also. I forgot about that. So are you ready for this? Some people are thinking GDP might come in positive tomorrow, believe it or not. Maybe they just wanted to confuse everybody, get people talking, maybe get ahead of it. But some people are, again, the GDP is probably going to be the most hyped GDP that you've gotten in decades. But Goldman has already upped their forecast to 1% increase. So keep that in mind. But he left the table open till September. I think all the data is going to be there. So as long as there's no bad data, pretty much your big points on Friday, you're going to get the PCE, and then you're going to get consumer sentiment. Those things Friday might stop any rally, assuming that Amazon, Apple, and Meta all do good today. But wow, we have gapped down every day after the rate hikes. It's usually been the last 3 rate hikes of this size have been a 1% to 2% positive move, and then the market did come down. But now we're going to get a little bit more defense out of Meta and the rest of it. But pretty much nothing changed from last meeting. He acknowledged the economy slowing down, did not acknowledge recession, and vehemently denied it as long as employment was up. He gave no guidance till September, and the market, that was good enough for them because he pretty much put on the table. He said if the data's bad, we could go higher. If not, a lot of people are assuming he's going to go to 50 basis points. I could give you another theory alongside of it, actually. I don't know if you want it. How many likes we got? If y'all could give me like 50 likes, I got another theory for you. Tomorrow will be an interesting GDP, but I think more so the earnings and then Friday's data will have a bigger one. But this one's interesting. This one's interesting. Not blackmailed. I feel like I have an idea. And that's why I think the Fed futures are pricing that. But we got to hear. There you go. I got my 50 likes. All right, I'll give you the tinfoil theory. Here it is. Yeah, it is tin. Full tin, 100% tin. But kind of makes sense with everything going on. You might be able to vibe with it. But here it is. Pretty much the data has been coming down. You saw commodities drop. You've seen demand in terms of how people are spending. He even acknowledged food demand dropping. So just imagine this. What if Powell already knows the next data points are going to come lower, and instead of actually saying that and putting him in a box, I think they kind of understand the data will come in a little lower, and I think he's just going to use that to his advantage to leave everything on the table. But pretty much, if after this meeting, now that they've said what they've said, if those CPIs start to show any slowdown or the PCE, that's it. It's going to be very, very bullish, especially if none of the earnings have been bad. And then I'll tell you this right now, if your GDP comes in positive tomorrow, every single thing is looking way better than expected. You got to just keep that in mind, because then if the CPIs come down, Powell puts all this on the table, GDP does not give you a reason to talk about recession tomorrow. It's just like we'll be at 415 sooner than we think. And then assuming Apple, Amazon, and everybody else, if the earnings haven't been that bad, we'll find out. So Meta earnings is going to be key. Again, Friday data will also be key. Consumer sentiment as well as PCE, and then now wherever the earnings go. But this has been on par with any of the rate hikes we've gotten this year of this size. The market has initially gone up, but this meeting, there was really not much change from last time, and now we got like two months to wait in between. So that data point, I mean, a lot of people are looking at that now. Very, very interesting. Powell found a way to do it. Again, here's Chris Ansley from Bloomberg. He says, ultimately, data will determine the outcome. That may be enough for investors who are confident that the data is indeed turning. Powell has made clear that they'll go where the data takes them. While stocks have clearly taken great at heart by the Fed's move, more than ever, to data dependence and by comments about some point slowing the pace of tightening, it seems that Powell's got a pretty hawkish read on the situation. He didn't appear much moved by the signs and turn of economy, saying that job market remains tight, and that turn means solid demand. So literally, a lot of analysts, they're saying this doesn't seem less hawkish, but if you are banking on Powell pulling back, he's giving you a little clover pretty much or a carrot to follow after. If you really believe the data will slow down in 2 months, then it's going to be bullish. But any data surprises, we're going to go right back to volatility and bearishness. But literally, I've read like 10 analyst comments while it was happening. A lot of people think this could be a false bull, but what they're saying is that Powell seems hawkish as ever, but he did kind of crack the door a little bit to pulling back if the data is actually going to get a little bit better here. Jerome Brady, I doubted him. I was expecting more neutral again. I was more bullish at the beginning of the week. Data got me a little bit more cautious, and then now here's the bullish response. But I think we got to pair all of this with Meta, Amazon, Apple, and then the data on Friday. It's going to be big. I think we might start to see volume pick up, and maybe volume gets, or volatility could increase a little bit more on any of the data releases from here. So S&P is now 3% up off of that. NASDAQ 4.4 and Dow Jones 1.6. With every industry green now. Utilities is the worst, but they're up almost 0.25%. Consumer staples went green. Healthcare went green 1%. Materials, financials up almost 2%. Energy 2.5%. And then 4.25% and 4.5% on discretionaries and tech. And then communications are up 5.6%. You think FOMO will start to drive it higher? No, good earnings. That's it. If Meta does not shake everybody up, if Apple comes in strong, if Amazon comes in strong, and that PCE drops and consumer sentiment increases, you're going to 415. I could say that pretty confidently, just because it's like you got to notice the turn. Is that right now it's just like if everything comes in lower and the market priced in so aggressive to the downside, it's like, and then look at this rally. At least this isn't one of these where it's like you're hitting a low and then jump up in 3 days and then it reverses. We've kind of been, building some steam into this. So we'll see, but you need that data there tomorrow and then Friday. And then, again, we're going to have 2 CPIs by the time we get Powell. Again, the only thing I don't like about today, which makes me more bearish than not, is the bond reaction. Bonds should be going up because you'll notice the first reaction, bonds were going up with the SPY, but now it's turning. So this is showing you market is less worried about recession, but now that doesn't really bode too well for what the data is going to show. So that's the part I don't like. The dollar is bullish. Literally, the only thing that makes me bearish about today now is simply, one, there's a level of uncertainty, and then we got to see it, but bonds, that's it. The bonds are the only thing right now that are not really vibing too well with what we got right now. So we'll see. And then William Dudley, former Fed president, on Bloomberg, he says this is just a relief rally because the risk event is over, but he said he did not really hear his comments as dovish. So again, a lot of people are taking Powell as hawkish, but they're hanging on to that little idea where if the data is good enough, he could actually start to go back to 50 basis points, which would be some level of slowing down. But again, everything he said about the jobs market is bearish because he's saying it's tight. So that means he could do a lot more. I don't think anybody asked him about the yield curve, which was odd. The balance sheet reduction too. You're honestly, you may not really see anything happen for another 12 months. I know that may sound crazy to some of you, but it's crazy to me. But that's what I got after this meeting is that the balance sheet reduction, we're not going to really. That's going to be a non-factor for 12 months unless literally something breaks. But bonds are dropping. SPY's hitting 402.50. Premiums have jacked up on the call side, not necessarily for other assets. So, like, you'll notice your Google calls didn't go up too much. The Facebook plays, surprisingly, they did not go up that much. I guess they were down a little bit lower, but premiums haven't gone too crazy. But this is we'll see if we get our first pullback from here. Yeah, the reaction is normal. This was just like last meeting, but with a little bit more certainty. But now I just think people are aiming on that Powell pivot. And then the fact that he's just not really... He's not changing too much. I think that is it, but more or less the pivot opportunity is still in play despite everything else he said. But he did acknowledge the economy slowing down. And again, if he acknowledged that and then the data comes in and reflects that, it's more or less Powell saying, hey, this is what could happen, but he's not putting himself in a corner this time. So we'll see. That data, though, is more important. But honestly, I would argue a lot of this is not really new. Again, we got that from the first impact. I mean, people grilled him on recession. He wouldn't say recession unless he said it's not going to happen. And he didn't talk about how they would respond to a recession. So maybe that says something. But we'll see. GDP tomorrow. Again, I honestly hate to. Are you guys going to get mad at me? If unpopular opinion, I think GDP comes in positive tomorrow. That's it. I think the White House just played everybody, got everybody focusing on one part, focusing on worst case scenario. And then again, Goldman and Morgan Stanley, or at least Goldman, has already updated their guidance to 1% positive GDP tomorrow. So I don't know. At this point, it could really, like if they sandbag it, get everybody worried about this. And then now when you talk about it 3-6 months from now, it's just going to hit different. And then as we could bet on it, I'd be kind of down. Bonds are weird right now, man. That's the only thing I don't like about this rally is bonds are not playing along. But technically, this is what you'd want to see: big bond rally or big stock rally, and then bonds sell off. But it's just still a little odd given the first couple reactions and then the yield curve and everything else. But again, to just give you a small recap and to understand a lot of this simply, if you want to understand why the market is going up and if we are going to continue any bullishness, we are going to need the data and earnings to give it back up. But a lot of people are just looking at the Fed futures for September now because that is as chilled out. Pretty much people are still betting that Powell will slow down, even though you didn't really get that from anything he said. And the only way you could argue that opinion is that if you really believe the data is going to come out a lot lower in the next coming weeks. Man, oh man. Ford, they got earnings today, so whatever play, finalize it. GLW, remember that was a ripper from earlier. It changed again. Let's see. Yeah, it's back to 16. It was at 10. 10 came back to 16. Not bad. Again, I didn't know they even had charts of this. So again, this is the more rate hikes in June or September. So you can see how that's changed over the last couple weeks. And then now the probability of 50, it's a little bit lower than earlier, but it is managing to stay up here. And then more aggressive rate hikes, those probabilities drop dramatically. But that's like a fundamental bullish thing that you could watch right now. It's like, why is the market going up? Those Fed futures, that's that September thing we've been talking about. And even though he didn't necessarily give guidance, the effect on the money, the effect on the Fed futures, it's giving that bullish reaction to it. So we'll see. CPI is going to be in a couple weeks here, I think. But on Friday, you get the PCE, which he mentioned as their big indicator there. My, oh my. I think Powell is right when he says we aren't in a recession, even though dictionary definition of the recession is 2 quarters. I agree with him. It doesn't feel. I don't believe in 2 quarters recession GDP. I just think that's like if you want to make, I think that's like 30-second economics. You know what I'm saying? Or that's like McDonald's economics. If you want to believe that and then ignore everything and then put it on that. So I do agree with him. And hopefully you guys could understand that. Like, one, I always said inflation was going to go up. I've been literally saying that since 2020, but I've stand pretty firm on this stance where I haven't really changed it. Yeah, it's part of the definition, but I'm just not a fan of it, and I unfortunately I agree with the White House on that one, and I do think Powell is correct that it's not, we don't see the signs of it yet that make you freak out and where you're like, oh my gosh, wow. The fact that we have to debate it today, I think that right there shows you're not in a recession. Again, and even then, on top of it, just understand if we did hit a recession tomorrow, if we woke up and everything beyond GDP said, okay, yeah, there's a recession, this would be the most forecasted recession in history. So, and that's what I'm saying. Until it becomes very obvious, at this point, everybody's like going into it, but it's not broad-based. I mean, if people aren't losing their jobs and people are not dumping items they don't need, and you're watching supply across every asset increase, whether it's a good or service, and people trying to actually get money, in that sense, I don't think we got the recession just yet. But 6 months, is it 6 months away, 12 months away? I'm more in that camp, but I don't see it right now. Why am I so goddamn smart? Were you an econ major? I was not, and I'm not goddamn smart. Pretty much any economist, anybody who talks about money isn't smart. We just get lucky from time to time. So I wouldn't do that. It's just a matter of just playing along with what's going on. But I will humbly reject that title. Thank you. Thank you. That's it. That's what Powell, I think that's what even Powell kind of took that attitude. But, bro, he was defending. Bro, he was defending it this time. He was even like, yo, he was like, honestly, 3 to 6. He's like, would 3 months have really mattered? Because last month when they asked him that question, he was like, yeah, we were wrong. Like, yeah, we were, like, he was trying to, like, double down on being wrong. But, bro, today, he was like, honestly, would it really have made a difference? Like, go look around. Everybody else was raising before us. It didn't change anything. Like, bro, he that was different. That was, like, Powell, like, he flipped the script on that, man. It was crazy. 96%, yeah. Updated, though, it has been moving around a little bit, but again, that is like a fundamental bullish reaction. The bonds are wicked today. Fed futures and then overall government bonds, how they're trading, it's just, that's the only X factor I'd say on today that has not been resolved. Everything else seemed kind of in line. Again, there's just nothing new. Everybody, you did not get shocked by anything today unless you were shocked that Powell said there wasn't a recession. So that's why I just watch in line with the data here. The bond markets, these are the things that we got to look at in the next couple of days because that is the thing that will really start to move stuff. Mm-hmm. 10-year up, 2-year down. So that's a little bit of a steepening of the curve. That's why the yield curve has steepened almost double today. You don't really realize it, and it doesn't seem like that, but it really has. Like literally, we were down at 0.31, and now you're just under 0.5. This is a huge move on the yield curve. That's what I'm saying. Those Fed futures and some, if the yield curve resolves itself without Fed intervention, my yield curve thesis goes out the window, Chattadonia. So keep that in mind. That's why it's like these moves are bigger than what I'm seeing on the stock market. That's why I'm like, all right, watch the bond market to see where this really ends up in the next week. But that data, that is what's going to really get us moving. That is bullish. The curve, the yield curve steepening instead of inverting is naturally bullish. So that's and again, that goes hand in hand with all the bond stuff we're seeing, except for government treasuries. That's the part. The 10-year is the part, but the 2-year calming down makes a little bit more sense. So that's why you see SHI's up, TLT's down. That's a little of the steepening. So as long as SHI doesn't come down, then maybe you could justify this move here. But we'll see. What you're saying is invest in bag hold. I think we've been saying that. I mean, some people call it bag hold, some people call it long term, but it's just nobody gets the last laugh till 10 years go by. So, but that has not really changed. This is short term. Everything is short term. Again, all the analysts today, and everyone's just talking about how short term this is. So just be careful, because at the end of the day, this is just about today, maybe a little bit about tomorrow, but this is, you have so many more weeks of data and little from Powell that just be careful. Anything could really develop at this point, and that's where a lot of people are keeping that on deck. August, September, October, November. I think we have, because again, I think Powell will chill out by November because of the midterms, but it's interesting the path they're taking. But still, I mean, the rates are moving. You're at 2.25 now. 2.25. What it costs you to borrow money for 3 months is how much it cost you to get a 30-year mortgage about a year and a half ago. Fun fact. So the cost to borrow for 3 months is the same as what it cost you to borrow for 30 years a year and a half ago. Wild. That's the current 3-month rate, 2.25 to 2.5. Again, and like I said earlier before any of this happened, though, just don't underestimate earnings, man. Because again, all of them, every action this week, all occurred after hours. That's it. Everything occurred after hours. So if Meta flunks, just don't watch the conversation change pretty quickly, because again, you could brush off Powell pretty easily today with what he said. So if there's any other news or fear or positivity that can outweigh it, do not underestimate that impact right there. So that's why I'm saying we're going to see. You got a friend request from the fake you. Yeah, watch out. If you follow me on Instagram, you will get followed by a lot of fake Joshes. And they're like, give me crypto. How's your trading going? Where I'll just say, I'll just tell you, get the long term and get some merchandise that's heavily breathable. And God bless you. Watch the Fed futures. Watch the yield curve. Amen. And I love you. So, Dad, don't fall for it. Just report them. Yeah, the fake ones don't sell merch. So Microsoft's going. Meta's kind of chilling out. Again, the Meta options really did not gain too much. They're at break even now from earlier. So just imagine that not all of your plays and premiums really move like that. I have one Meta call. I have this call. We bought it before the run up. We bought it at $2. I bought it for $200. I sold one out at $600, made a free play and got it for free. Then it dropped, and then even after today, it's at break even, believe it or not. And then my puts are still down. So Meta's option chain is mangled right now, so be careful with it. I'm the Egyptian Jim Cramer. Honestly, I don't know how to take that, because some of y'all say Jim Cramer with love, and some of y'all say Jim Cramer like he is stock market kryptonite. So I mean, I did learn from a Jim Cramer book when I was young. That sparked my interest, but I'll just take it. I'll take it. I will take it, and I love you, regardless of if it's negative or positive. I still got love, baby. It's okay. It's okay. Yeah, check your scanners. Go check your scanners on anything. If there is a what's it called? If there is any big sweeps by the end of the day, just keep that in mind. Meta is selling off a little. SPY's even coming down, or it's chilling out. Again, I'd watch the industries, XLF, XLV. Both of those have a lot of important implications, and those were actually able to go green. But every industry is green right now. You saw a Meta put sweep. VI, I saw Meta put sweep. Halliburton, 819. You said what are those? July 29th, 169 puts, 169.50. Having insurance while it's cheap isn't a bad idea. It's not. That's what I learned from Snapchat, because the Snapchat options were so cheap. So honestly, if you really don't believe in Meta and you think that's going to sour the mood, you're getting a discount on all the premiums. You're getting $10 closer to the money for the price of the options that were up 100% yesterday. So at least they are cheap. I think the same thing with a lot of, even Amazon too. Those got clapped. All I know is Tesla. So here's the recap. Fed raised by 75. They said Powell suggested it could decide to implement another unusually large move on the next meeting, though it would depend on data and that they would not provide any guidance. Powell took several questions whether the U.S. is in a recession and repeatedly shot down the idea that it is. When asked the Fed would tolerate a recession to bring down inflation, he danced around the answer. He said the Fed is not trying to cause one and doesn't think it will need to cause one, but also emphasized that the central bank has to focus on bringing inflation down. Fed chair suggested guidance for upcoming meetings would be less clear than the last few. In June, he said the Fed would probably hike 50 or 75. This month, he suggested unusually large, but says that it could all be different and that it's less clear right now. Powell's comment about slower pace of hikes likely becoming appropriate at some point suggests Fed officials see smaller moves in the offing at coming meetings. That's the bullish part. Both of the statement and press conference contained acknowledgments that the reports are beginning to show signs of a slowdown in the economy, though importantly, that is not evident in the labor market yet. The Fed is going to be watching carefully to determine the trajectory for rates over the next few months. Next up on that front, Powell suggested is the employment cost index report on Friday, and of course the monthly jobs report following on the next Friday. Stocks rallied on Powell's comments. The Fed will slow the pace of increases at some point, and that officials would set policy at meeting-by-meeting basis rather than offering clear-cut guidance on their next move. The S&P is up nearly 3%, and the NASDAQ is touched as high as 4.5. The 10-year Treasuries hovered around 2.7, while Beancoin surged around 10% at one point to trade above 22,800. 1.2 billion on the buy side as we are selling off into it. Wow. Very interesting. So who's this? Scott Miniard, Guggenheim? I'm going to go pee. Maybe we could listen to this.
Is really
Follow me on
related to the
Instagram,
fact
at the Trading Fraternity.
They
I love you.
believe that the Fed is not going to be as hawkish as has been advertised, and that's going to be in the near term good for rates and therefore, good for, in particular, tech stocks.
Yeah. Scott, do you agree with the Fed chair that we're not in a recession at the moment?
No, Caroline, no, I don't agree at all. I think that it is really hard to argue that we're not in a recession, given the fact that, for instance, just one indicator, the leading economic indicators have had 4 down prints in a row on a monthly basis. Every time that's ever happened, that is essentially a signal that we are in or we are about to enter a recession. I think the chair is hanging his hat on the idea that, we could very well have 2 negative quarters of growth. We could continue to have a contraction in growth, but until it spills over into the labor market, we shouldn't call it a recession. And so I guess it's a semantics game after that as to whether we're in a recession or not, but I would say a contraction in economic activity is a recession.
It is a pretty academic discussion, but I do want to get your thoughts on a headline, one of the many that caught my eye. Powell saying that the Fed is going to offer
They say it's an academic discussion. Don't fall for 30 seconds.
And I'm curious where that leaves the state of forward guidance.
I want to listen to this, though. He's good.
Well, first off, let me just respond to that comment and go hallelujah. I think I have often told a number of the Fed presidents that I think forward guidance was created in hell. And I would blame forward guidance for the market instability that we've had over the last 6 months, because it was the abrupt change in forward guidance on the part of the Fed that led market participants to be caught offside in their expectations.
He said it was made in hell.
So, I think retiring forward guidance as quickly as possible would be in everybody's best interest.
Powell cutting guidance in bullish form.
Forward guidance was created at the height of the financial crisis because the Fed wanted people to believe that they were actually serious about keeping rates at the zero bound. I think it's long outlived its usefulness, and I think they're trying to retire it.
Scott, let's talk a little bit about Fed credibility
that's a
here.
hot take.
You said that forward guidance, hallelujah.
I like that. That's
gone.
actually a very good take.
But on the other hand, there's this comment
talk
here,
about
for
that
example,
after.
by Bill Ackman earlier today on Twitter about how the Fed has not shown serious resolve in addressing inflation. Do you feel that way? And do you think that the Fed's credibility with the market has eroded at all? And does that create any issues?
Well, I think
Scott
that
Minier or
start down the
Guggenheim?
list. The first thing is, did the action today raise questions about the Fed's credibility in fighting inflation? And I think ultimately, Sonali, after this run-up we're getting in the stock market and the bond market right now, that by next week we're going to be sitting around and questioning, are they really being credible, especially when they're talking about, a rate in December of somewhere between 3.25% and 3.5%, when we're still going to see headline CPI probably running at somewhere between 5% and 6%. And maybe optimistically even 4%.
Keep that in mind, because
if you
him
look
saying
at
that
people
means
who
a
are
lot of
adherents
people
to, like,
think
the
by
Taylor
December
rule,
CPI
right,
will drop to 5.
need
Keep this in
to
mind
get
as we
the
move
Fed
forward over
funds
the next
rate
coming
to
months.
Somewhere around 6%.
That's where people are talking about the
to be
end of the year
restrictive.
and all that. So that tells you
with all
something about
due
some of the
respect, John
upcoming
Taylor's
data
a friend of mine,
expectations.
but I think that's misguided. I think that inflation is like a wildfire. And if you take away the fuel, which is essentially money printing, which we are doing with QT, eventually the wildfire will burn itself out. And I think we just have to have a longer horizon in terms of our inflation expectations and burning it out. Yeah. But having said that, that's not where the market's head is. The market's head is in a different place. And I think that
we're going to stay around for Meta. Oh, dude, we only got like 3 minutes.
And the Fed.
Wow, I really like it. That was good. Again, that's Scott Minier, Guggenheim Global CIO. Very, very. You probably heard the name. Very good guy. I like what he said, bro, about retiring forward guidance. No, that was on there, but. Yeah, if you want to make your meta plays, we're going to be hanging out here afterwards. We'll have all the earnings. You do have a couple of others after hour, like Qualcomm. I believe that is the next biggest one, but let me get you your recap. I think you have Ford after hours, too. Today is Wednesday. So after market, you're going to be getting O'Reilly, Ford, Teladoc, NCR, Qualcomm, Meta, AMED, Flex, HP, ServiceNow, TYL, CHRW, Equinox, EQT, United Rentals, Qscaler, Etsy, and that's it. There's a bunch of other ones. I'm going over there. I just wanted to pick out the bigger ones. I don't know. Is IBM today? I think IBM already reported. That was last week. I have Meta both ways, so I got to put that I was up 100% on yesterday. After today, I'm like, I'm down 30% on it. Puts are down 30%. And then I have a call that's break even, but I already made it free. And then I have a very old leap put that I made for free. So I have more money on the downside, but it's old money. It's money I placed last year and have already made free. And then I'm pretty much split 50-50 call and put pretty much between like 130 to 200. Pretty much I think if they do bad, they crater below 130, or 130 will be one of the big levels. And then anything good, I think it rockets it up to 200. So that's kind of where my mindset is at on that. But all right, ladies and gentlemen, we're making our final approaches. We make our final approach. If you guys are holding on to any bags, please throw them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisle with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in the description. That's going to be your nightly watch list and main channel layover around 4:30 p.m. Pacific time. And then we're going to be taking out promptly around 6 a.m., 6:10 out of sunny San Diego, California. So we make this final approach in the San Diego International Airport. It's about 74 degrees, partly sunny there, kind of like the market till Powell spoke, but hopefully you get a good vacation and good follow-through with Meta, Apple, and Amazon, and you should have a good weekend. But we are no longer under COVID guidelines, so no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Cole Rapid Rewards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully you have a wonderful evening. Let's go, baby. Meta after hours. We just went over the list. It is speak now or forever hold your peace. You are either going to get a crazy rally continuation or Meta is going to drop cold water on all of it, and then you're going to get all the analysts in the morning, but you better decide. Again, you got a couple of earnings in the morning too, so maybe you want to play Altria, Overstock, TMO, MasterCard, Arch Coal, ALNY. All of those are before the market, even the airlines too. I forgot. You got Hershey's and Southwest, so whatever you want to do. Oh, did I miss it? 1 minute! I forgot it. I was just getting into it, baby. It's earnings. Let's go. Meta after the bell. If you're going to stick around, you want to see it. The puts are cheap. The calls are even cheap, right? I'm telling you, that chain is jacked up right now. So you better decide. Oh, there it is. There it is. Ding, 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 ding. Oh, let's go, baby. Oh. We did it. We made it. We did it. We made it. Ladies and gentlemen, before the earnings comes out, I have to tell you how thankful I am for you being here. Thank you for liking the video. Thank you for holding it down. But I need a GG right now. I need my GG. Let's go. Bring that good sportsmanship back. Come on. Don't matter if you made money or lost money. At least you learned something. At least you got to live through history. Let's go. If you're playing with real money, I need a GG. Good game, bro. You know, a lot of things were said throughout the day. GG, bro. GG. My laggers, my lurkers, my lovers. I need my GG. Let's go, baby. Did it, we made. There it is. God bless you. God bless you. Amen. Amen. Let's go, baby. Let's go. Where you at, Chris? Let's go. All my real money traders. Come on, GG. You were really in the game, bro. Good game. Honestly, good game. That was a good game. There's a lot to deal with, a lot to interpret. GG, baby. GG. Good game, baby. Let's go. Let's go. Get ready. Earnings on. Qualcomm. Qualcomm dropping. There it is. Hold on. We got one coming in. Okay, Chad, let's go. Cut it. All right, here it is. Oh, Qualcomm guided down by $1 billion almost, or they widened the range. So Qualcomm revenue, 11 billion, 11.8. Estimate was 11.29. They guided down EPS to $3 to $3.30. Estimate was $3.26. Revenue this quarter was 10.93. Estimate was 10.8. They see fourth quarter revenue, 11 billion, 11.8. Estimate was 11.92. Adjusted EPS, 2.96. Estimate was 2.86. So, yeah, it was guidance there, but you're getting big pops and drops off that one. Let's see what happened. Revenue misses. Fourth quarter revenue. Let's see. They said Samsung to extend patent licensing by 7 years. That's good news. So Qualcomm and Samsung, they have a partnership. So no Meta earnings just yet. No Meta earnings just yet, Chad. But God bless you. And thank you for being here. Shout out if you liked the video. We love you, Chad. I'm so excited. All these earnings. Look at them. Save. Oh, they had the vote. Isn't the vote delayed till 4:15? So keep that in mind. They're popping a little bit there. But Qualcomm went from negative, going positive. It looks like we'll get Meta here in 3 minutes. Yeah, EPS beat on Qualcomm by almost 10 cents. Revenue was $10.9 billion. Again, their guidance number is what people are worried about right here. Yeah, Qualcomm has contracts with Samsung, and that's good news. Again, I mean, that's why I've always liked Qualcomm on there. Again, we haven't heard about the dollar effect. Teladoc, Save is going up. I think Save has something separate going on that is not earnings. Ford is on the high now, but Teladoc, they're already up 13%. They're ripping there. Is Ford going up? Man, bro, everybody getting active right now. Everybody getting active right now, man. This is insane. Any other sympathies? No. Let's see. Ford, Teladoc. I don't know if Ford came out. Spirit Air agreed to terminate merger with Save. Uh-oh. Or with JetBlue? So that means they're going to get a higher price, but that sucks. Wait. I don't know. This one's going to be... Hopefully you've been following along with that one. And then Qualcomm, again, guidance lowered. Revenue came in a little bit above on everything. I think they did good, but guidance is the bad part for Qualcomm. They announced a deal with Samsung now for a 7-year pact with them. Meta, let's go. We haven't got Meta yet. Meta comes out in like 2 minutes. But right now, Qualcomm, they did decent, but guidance was had a very big range, $1 billion range. And then Save is related to that. I think Teladoc had good earnings. JetBlue getting clapped. Oh, $6 stock. Oh, no. Is that Micron? No, that's MJ. But let's see what happens with Qualcomm. Where's TXN too? Get F Qual. Well, Qualcomm's still fighting. Qualcomm is still fighting, but that initial couple candles, the wide range of guidance, I don't know how people are going to like that, but if they get on the conference call and they drive home that Samsung partnership, just like they did with Apple a couple of quarters ago, it might end up being very positive, but we'll see. Otherwise, guidance range that big is not good. 30 seconds to Meta, Chattadonia. I hope you're locked in. I hope you like the video. And get ready. This is it. Are they going to pour cold water on Powell? This is it. Is Powell's party going to get raided by a lizard? That's the question. Find out in like 5 seconds. Qualcomm record QCT and IoT revenues. Oh, there it is. Earning. Wait. No meta yet. There it is. Revenue 2.46, estimate 2.5, or that's for EPS. Revenue missed. Platform, they did good on the Reality Labs. They beat on that. Operating loss 2.81 billion on the Reality Labs. They missed on monthly users. Average price per ad dropped 14% instead of 9%, and then ad impressions increased 15% instead of 9%. I don't have the numbers yet, but that's bad. Right out there, that means Snapchat wasn't just Snapchat. It looks like, yeah, revenue. They guided down $2 to $4 billion guide down in revenue. So as a reference, that's a 10% guide down minimum. So they've guided down about 10% what was expected. I mean, market's kind of fighting for it right now, but initially that's not looking good. Like I said, market could brush off Facebook because it's dropped a lot. So just understand Amazon and Apple tomorrow, but right now it's not good. They assume Forex will be about 6% headwind. Meta falls 5% following that. And here it is. Yeah, revenue 2.82, estimate was 2.89, and then they guided down 2 to 4 billion, 26 billion to 28.5, estimate was 30, and then EPS was 246, estimate was 254, and they have an operating loss of $2 billion on their headsets. VP of Finance Susan Lee will serve as CEO or CFO, excuse me. But yeah, it's already, they missed on everything pretty much. They missed top, bottom line, and guidance. And then we'll see if we get anything else. But they don't really, I mean, they're holding up very well, to be honest with you. Again, because I thought a big miss would drop it even more. Now Qualcomm's dropping. Again, Susan Lee will serve as CFO to replace Sheryl Sandberg. And that's not looking good. I mean, the SPY's holding up. Again, the fact that Meta's still a big company, but, I mean, it has dropped a lot already. So, and we've seen the market be able to go up while Meta gets dumped on. So, tomorrow will have a little bit more implications, but all the earnings are flipping now. Teladoc has gone negative. They were up 14%. Oh, wow, bro, that's a 21% shift. Oof. Dude, they went up 15 to down 10. Ay, that one's ugly. Ford is popping. Meta names Lee as CFO and David Weiner as Chief Strategy Officer. Again, top and bottom line missed on there. Ford is popping. Let me get you Ford numbers. Ford EPS beat by 50%. Adjusted EPS 68 cents instead of 45. And then they kept guidance for free cash flow the same. And then they see full year EBITDA a little bit higher. They raised the range, but everything was in line. Ford did good, actually. I don't have revenue numbers, or I'm missing it. Revenue, $37.9 billion. Estimate was $34 billion. Yeah, Ford killed it, top and bottom line, and no changes to guidance and free cash flow. Still in a couple $1 billion, which is good. And then here's another one for you. Are you ready? Are you ready for this one? This one's a good one. Revenue on Facebook, it was a miss, $28 billion for the quarter, which was shy of the $28.9 billion estimate. But this marks the first quarter ever that Meta has had a year-over-year revenue decline. So there it is, right there. Facebook has never had a decline in revenue year-over-year, and that is now the first quarter this has happened, or the first year that has happened. Yeah, it's declined. By missing that estimate, that, again, remember how I keep showing you those numbers and I keep and I bring up like that right there just off the bat. That's not a good look right there for them. Again, granted, they're coming off of the COVID boom, but from 2021 to 2022, they have now made less revenue, and that's the first time ever that has happened for Facebook. I don't think we're in a recession. I don't. Again, they're still making $28 billion, but what that means about Facebook for 12 months from now, it doesn't mean they're doing bad today, but it does mean you got a problem 12 months if those trends continue at this rate. Can we compare to 2019? It's still probably double than 2019, but this is just the first time their growth has gone year over year negative, but I'm pretty sure they are double 2019, or at least up 30-40% in revenue, but that's definitely a shocker. And then Ford killed it. Ford top bottom line, they kept guidance the same, if not raised it on EBITDA. They widened the range to the upside, so that's good, but Ford absolutely killed it. Yeah, then we have 9% inflation. They also Meta factor 6% loss from currency, and then they lost $2 billion operating margin on anything related to the actual metaverse, or the Reality Labs is what they call it. Yeah, and then they guided down over 10% for the end of the year, or for next quarter. It's honestly holding up extremely well, though. I don't think y'all feel me on this one. I'm surprised it's not at 130 right now. So Meta, you had a lot of cushion today, but they are holding. Again, Teladoc, 25% shift top to bottom. That one was a major pop, lock, and drop right there. Market is, it is, but that I don't know what's up with the Meta there. ServiceNow, they're turning negative. They were up 4 or 5%. It could be because it has been beaten down, but honestly, I think people are waiting for this conference call. Just don't forget what Microsoft and Google did on their conference calls yesterday. That brought everything up. Again, they missed on users too, bro. Facebook missed on daily active users. So they were able to show more ads, but they didn't make as much money. And then they have daily active users declining, and then now their first ever year-over-year revenue decline in the company's history. Yeah, Teladoc shift is wicked. Our users were up 3%. No, I saw a daily. It could have been an increase, but it was a miss on expectations. So yeah, if you're looking for a bright spot, user growth was a slight beat. They had 1.97 for the quarter, better than 1.95. So maybe I read it the other way. But I think it was daily active users and then user growth. Those are two things we're going to be looking at. And then people are saying the big issue with Facebook is guidance. User growth was decent. Revenue was a decline, but a small miss. It's Q3 revenue forecast that seems to be the anchor. And yeah, they're saying definitely weak guidance. They say that's a pretty big shocker to go to 26 billion from 30. And that's the low end. If they miss the low end like Snapchat, that'll be bad. But maybe this might be how's even Snapchat doing? I feel like this is a little bit better for Snap in that sense. But honestly, they're holding up great. I don't know how to describe it. And then Ford, their earnings were absolutely killer. They said they reduced hiring and overall expenses to account for challenging operating environment. They said total expenses for the year expected to be in the range of 85 to 88 billion. Ford increased divvy. They did a lot. Ford top and bottom line was solid, actually solid. Up 12. I dumped Meta in the after hours long term. Meta advertising revenue 28 billion. Again, they miss estimates, decline on year over year for the first time. So again, here are all the numbers. Ad revenue came in line, but it was a little bit below 28 billion, estimate 28.5. Family apps revenue, $28.37 billion. Estimate was $28.45. Reality Labs, $452 million. Estimate $451. Reality Labs operating loss, $2.8 billion. Second quarter ad impressions, 15%. Estimate was 9.8. Average price per ad is down 14%. Estimate was negative 9.6. Monthly active users, 2.93. Estimate was 2.95. So that's the one I was saying. So I think user growth increased, but it's monthly active users, 2.93, estimate 2.95. And then daily active users beat at 1.97 instead of 1.95. So pretty much daily active was better than monthly active, which I don't know how to interpret that one there. Meta is coming back. It's still holding a positive 3, but it did shave off 5% there. But man, I'd wait till the conference call, but surprisingly, it's holding up a lot better, even though it has some of the traits of Snapchat. GDP, I actually think we might get a positive GDP. Meta, FTC's attempt to block within deal, wrong on facts and law, they said. So at first they were expecting 87 to 92 billion in expenses. Now they're expecting 85 to 88 billion, which is good. So even though their guidance has dropped, their spending costs. So I think that's why they're popping on this one right now, as that number came out. So even though the guidance was bad, they're saying they have a way to save a couple $1 billion here by the end of the year. They could save like 4 to 10 billion if they could pull it off right. GG, 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 GG. Implied move. Etsy, I think, was 15%. I forgot. Etsy still comes out. That could be a good consumer one. And then where's Quali World? Did Quali flip? Nah, Quali World's still struggling. They just gave off the gains. We did not get clapped. No, bro, Facebook is up 3.6 on the day still. It's down still after the earnings, but it is suspiciously strong right now. It's like it's really, really up there. Bloomberg. Here's an analyst comment. They said they're really trying to play catch up on TikTok. They're pivoting to TikTok stock-based AI recommendations, and there's no guarantee they'll be able to come up with a better AI, given that TikTok has had such a head start. And then they say they expect third quarter Reality Labs to be lower than second quarter revenue, so they're going to lose more money on Metaverse. Guidance assumes Forex will be a 6% headwind, and Meta reduced hiring and expenses. And that's the bullish part, is that they found a way that they might be able to slash expenses by like $2 to $8 billion by end of the year. Yeah, I know, man. Lizard Man. It's hard. I heard that if you cut the tail off a lizard, it regrows, and that's all I could see when I look at this chart right now. You know, I'm telling you, Nigel would agree. That's all I see. I saw them cut the tail off, and then it just grew back, and he's like, I'm gonna fire them. Don't worry, but save our money. Then it just grows back, and I'm like, what? It's creepy as hell, bro. It's creepy as hell. Etsy killed it. Ford killed it. That's the bet. That's the only earnings where I'm like, damn, that one's like fire on all ends. On all ends. Oh, yes, baby. We got Cole Real Estate, too. Today, email corealestate@gmail.com. Only if you could hang. Only if you could hang. You know what I'm saying? You remember that? I say, like, can you hang? I don't know if they can hang, so don't let it. Like, you know what I'm saying? You can send an email. It's at 6 p.m. Pacific time. Free 99. Get to kick it with the real estate guys. You know, listen in. Be surrounded with someone. You know, eventually it's going to be the biggest real estate network in the world. But I'm just saying, say what's up, corealestate@gmail.com. 6 p.m. today. This lizard stock, man. This is crazy. Teladoc, I'm assuming it sucked. I did not even look at it. All I was like, wow. I was like, dude, it's up 15%. And then I was like, it's down 5% now. That's a big change. Well, here, let me get you some numbers, my friend. Did you like the video? Because I know you didn't like the video. I know you asking me for Teladoc, but I know you ain't like the video, man. Look at. I just watched the light counter go up by 1. It was you. Oh, I just caught you red-handed. Caught you red-handed, bro. Caught you red-handed. Oh my gosh. Huh? Am I reading this right? Are you ready? Teladoc EPS, a loss of $19.22 a share. Consensus was for a loss of 64 cents. Well, that makes a lot of sense, but guidance or sales, they did good, or at least there was a miss, but it was only by $1 million. They did $582 million in revenue. Estimate was $583. EPS was a loss of $19.22. Estimate was 64-cent loss. So you're off about roughly 2,000%, give or take. Yeah, about actually 20,000%. Now that I think about it, that's actually wicked. And then they missed on third quarter view. They guided lower as well too. Where's the third quarter? Yeah, they see full year adjusted EBITDA down by about 10-20%, $240 million to $260 from $247. They raised the top end, which is good, but then they see revenue. No, they raised revenue the same, and then they cut adjusted EBITDA guidance in half. That's the killer right there. Adjusted EBITDA guidance, 35 to 45 million. Estimate was 64. So even if they make the same amount of money, they're expecting to spend a lot more. Well, even then, though, interest, that means they're spending a ton. And then they kept revenue. They just widened the range but lowered it by 20 million. So that was just shit. They're going to spend a lot more money. They spent a lot this quarter, and it's not looking pretty. Yeah, Meta is coming back up. I don't know. Like, bro, like, this is, have you ever heard the term, like, put your, like, you better, like, beat it when it's down, you know what I'm saying? Like, just, like, dude, this is weird, bro. He's alive. Like, he's alive, bro. Like, you ever see those videos from China where, like, they have, like, pieces of meat and then the meat will start moving around? That's what Facebook look like right now. I know I gave you the lizard one, but now this is just like, bro, this is like a, you know what I'm talking about? Have you guys ever seen that? I don't know if I should give you the visual. It's kind of disturbing, but it's like, it looked like just meat just moving around. You know what I'm saying? It's like a piece of chicken like that you would have on a cutting board, and it's just like flopping around. It's like, this is amazing. I think it's the guidance on spending. I think it's the spending cuts that the market's liking. Everything else was bad. It could have been worse, but I'm sure you heard that this quarter. So Meta's headcount, they added 5,000 more people last quarter, but they're still projecting a slowdown. Jeez. Buy the drip or cut it quick. Metaverse is going to launch publicly soon. We'll see. Dude, bro, they just literally reported a Snapchat-esque earnings, and they are still maintaining a 5% gain. Now, granted, they are at the low, they're down 70% or some shit. So, I mean, I don't know how I feel about it. I'm more shocked than anything, and I want to wait till this conference call now. It could have been worse. Market to the moon. Honestly, it could have been worse is almost as equivalent to my fault. Oh, sorry about that. My fault. Okay, we're back. Fool me once. Can't get earnings bad again because could have been worse. So God bless America and God bless Texas. Amen. Amen. Wow. He's like, sorry about that. My fault. It's a little bit of a guidance cut. That's my fault. Don't worry. And they're like, okay. It's going, bro. Oh, my gosh. Wow. Cutting spending. Well, cutting spending is bullish because, I mean, here's how you could try to understand it. They said, hey, we're expecting to make about $6 billion less at the end of the year. They just say, hey, next quarter, we're about to do $6 billion less than any of you expected, right? And then they were like, well, we are also probably going to cut our full year expenses by $6 billion. Again, $6 billion is no small amount of money. So that's when we started to pop. It popped once the guidance numbers for spending came out, but everything else was dog shit. Again, it could have been worse, though. I mean, as much as I want to say it's Snapchat-esque, and I do believe that, their ad revenue did not decline too much relative to expectations, but neither did Snapchat's. But Snapchat, they were already on a downward slope, but so is Meta. This was literally their first ever year-over-year revenue decline in the history of the company, literally since the day I've even owned it, which is wild to think about, but... I think the guidance on spending is helping, but it was a bad report. I'm shocked. I would just wait till the conference call comes in. Oh, my goodness. Otherwise, it could go to 200, but it didn't go to 130. This is an amazing lizard. And then Ford is killing it, you guys. Ford is back up to the 14s. This is a big level, but Ford's earnings, top, bottom line beat, raised guidance, everything. Everything about Ford was good. So Ford had zero issues in sight. So this is the only earnings I could justify out of the last couple of days where I'm like, all right, top, bottom, everything beat on every end. You ready to fight someone? Listen, man, just don't get into a fight with the lizard. He will win. As Exhibit A in the top right, we proceeded to cut his tail off about 12 minutes ago, and it has proceeded to regrow back to original length. So just don't, pick a fight with Kathy Woods and Teladoc, but not on Meta, man. Just don't pick the fight with Meta. I'm scared, bro. I'm like, what is this? This one's crazy. I'm a little bit scareder on that one. I'm like, what? Etsy 104 now. Yeah, your 100 calls are very safe. Etsy's killing it now, 13%. They did good. They're getting favorable treatment from the algos. Well, again, if I could argue anything, that's okay, they're still doing $28 billion in revenue. You see what I'm saying? So it's look at Teladoc. They're only doing $400 million, and then they're even yeah, we got to cut that number in half for how much we're actually going to make. So as long as it's big numbers, if you're a big boy and you're not plummeting, that is where I could see the benefit, but I don't know. It's crazy. It's a little crazy. Then where's Qualcomm? Etsy's killing it. Qualcomm now dropping, though. Qualcomm might recover by the morning, though. As much as I have the puts and I think it could come down, don't let Qualcomm fool you because it should be down a little bit more here. But they cut guidance by a pretty big margin. Man, how to join the real estate, email quoterealestate@gmail.com and 6 p.m. Pacific time. Don't miss it. Bro, Etsy's stupid now. Etsy's bro, that's big money. I assume, let's see how much the option premiums are scamming. I say big money? Oh, that was not even big money. Never mind. You mean to tell me that 105 was still going for $5? Oh, man. So that means if it doesn't, bro, this play will probably go up maybe 100%, maybe. We're going to see depending on how people take it, but that's actually shit. These were still $2, and then tomorrow these will be up what? 200% maybe? You're going to make $100. You'll have $2 of value. You bought it for $100. Yeah, that's actually, the premiums are nutty. But that looks big, though. That looks like that. These are the ones, if you have calls, you're like, that's big money tomorrow. Everybody in the UNG. You said it yourself, Meta is still down a lot. Path of least resistance is up. I could agree with that. I think that's the only thing. And then, I'm pretty bullish on cutting spending by $8 billion. I like that. Or $6 billion. I really, really like it. You see the Twitch say, yeah, the comment I just read was straight from the Twitch, my friend. What's up, baby? At the money, Etsy will be $3. So it just all depends on how much you paid for it. I'm confused by Meta. It's not, man. Honestly, Meta is just... I just wait till the conference call, but nah, that one was... I could see why cutting spending is bullish, but very surprising. Again, this was their first year-over-year revenue decline ever since the company was founded. You just got to say they'll save money or increase cash flow. And they still have good cash flow, or even just free cash on hand, which is good. But still, Is it the same thing Microsoft? Well, Microsoft factored more growth. That's the difference. They guided lower. That's the only difference between them and Microsoft. Microsoft did not guide down by $5 billion for the next quarter. Microsoft did not do that. But Facebook did. But then Facebook said, hey, we're going to cut expenses by end of the year by a higher clip. So that's the big part right there. The guidance was shit on Meta. There's no way, like, literally, to give you a reference, Meta guided down next quarter 5 times or like 10 times as much as Snapchat will even make in a quarter. So they guided $5 billion is a lot, and they guided down, and that is the bad part. And then again, first revenue miss year over year in a year, or in its history. That's not good. But the cost cutting, again, saving $5-6 billion, that's 30% of Snapchat's market cap, right? So it's just a little bit confusing, more or less. The market will react tomorrow, and well, you still got Apple. Bro, you still have Apple, Amazon, and a post-Powell. You don't think Powell's trying to come to the after party tomorrow? No, don't get it twisted. Look at how this market looks today. You have a NASDAQ 4% print. I'm telling you, there is an after party tomorrow. I'll see you here, 6 a.m., bro. See, I'm telling you, it's an after party, and then Apple and Amazon. Oh, my gosh. So we still got to, there's still going to be a little bit more of uncertainty. Oh, man. Josh is like a lizard reading the Twitch and YouTube chat at the same time, and news not. They've discovered. Mark, where are you? They figured me out. Sorry. I just felt that was appropriate. Friday, bro, everything. You got Friday, employment data. But we have back-to-back, like, just straight-up one event risk after the next. So it's like we're reacting to events, and whatever happens, then people chill out, and that's it. But it's like you have event after event after event right now. Again, Powell post tomorrow, Apple, Amazon, then you have all the data. We even have more data tomorrow as well, too. Man. Please don't make those noises. My spine just crawled. What do you think happens every time you check your Instagram? I do this. I go. I could be a good lizard, honestly. I would love to. Maybe, kind of. Etsy 112. Jeez, man. Can you briefly explain inflation affecting personal finances? Unfortunately, that's just not a brief one. Right? Actually, I was asked this question the other day. You might see it somewhere, but I don't know if it's a good response, but like, do you like Chinese food? Because inflation is like sweet and sour sauce. It's initially very sweet, but then it starts to hit very sour. So as far as markets and personal finance, that's what you see happen. It goes in bits and pieces. At first, it's sweet. Again, we were like, get rich off inflation. It went up. It was good. There was a price impact that it had. People were expecting more revenue, more profit. The money was still cheap. While expecting more money, it was good. That's the sweet effect. Things were going up. But then those same prices going up quickly turned into margin pressures, and then guidance slowdowns. And then you saw the back end as things started to play. So, yeah, it's kind of like alcohol, too. You know, first you get a little bit of a buzz, and then you feel it in your finances, and markets seem to not really care, and you're like, ooh, I'm feeling good. But then before you know it, like you're throwing up in the back seat of a Uber, and then you're like, how come Uber charges $2,000 to clean up throw up? You're like, did I even throw up? How did I even get home? And then you find out your car's parked, so you're like, wait, what Uber did I throw up in if my car was still there? And then you go and look, and then your car only has 2 tires remaining, because then that means you hit something, and then you're like, wait, what did I hit? That means that wasn't just transitory. I hit something, and then you start looking, but you're like, nah, man, I still got my job. The job market is good. I still got a job, even though I just took out 18 trees and a light post. And then you're like, hold up, this makes no sense. And then you start looking into it, but then you're like, wow, my head hurts a little bit. And then you're like, do I got COVID? And then boom, you got COVID. How did inflation lead to COVID? Exactly. It hits you out of nowhere. Like I'm saying, it's the hangover effect. So pretty much you do that, and then after you get over your hangover, you're going to be like, oh, I feel good. Like a year or two later, you're going to be like, oh, I feel great right now. I feel great. And then boom, it hits you again. Because then you're like, oh, I could drink. That's fine. I could drink Fireballs. Fireballs, chill. But what happened last time you drank Fireball? Yeah, exactly. You came home with 2 tires and thought you threw up in an Uber. So you see and then that's why inflation comes in waves. And throughout the 70s and 80s, there was actually 2 spikes of inflation. So from 1969 to 1970, like 475, you went from 2% inflation to 12.9% inflation, but then it went from 12.9% back down to 3%. But then by the later end of the 70s, by 77 to 79, inflation then hit 15% again before normalizing for the next couple decades, and then the bond market broke and everything else in there. So yeah, I told you I couldn't keep it small or simple, but like sweet and sour sauce, like drinking and then hangover, hopefully that gives you the idea. You know what I'm saying? And that's what it is. That's what it is. But yeah, it feels real. I mean, listen, it may be based off a true story. I don't know. I'm just saying, but I don't drink Fireball anymore. If you would want any added facts to that, I don't touch Fireball nor Jack Daniels, because I have lived through these inflationary moments, and then I seek the Lord and change my ways. I ain't going back to that. You see what I'm saying? And that's why Powell is like, yo, I ain't going back to that taper tantrum. We trying to avoid this at all costs, bro. Exactly. Okay, I feel you, man. Yeah, that's it. Those 2. Yeah, he was young though. I did it with I have a funny story actually, or maybe I'll tell you that it remind me about the Jack Daniels story on Friday. I'll tell you that one, and then you'll see how bad of a child I was. We were getting lit off that. I don't even think I could drive at that point. It was bad, bro. It was bad. I needed Jesus. Amen. 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 Defense saved my camel. I was trying to read that. I was like, what does the camel emoji mean? I was like, nah, man. Nah, I was like, defense saved my camel. I feel it saved my camel too. I don't know. Yuri will do it tomorrow. Just wait in the morning. They're more of a slow mover. Can you explain how we pump with inflation high? We're just not pumping. You know what I'm saying? It's like when things were pumping, everybody was rich. You felt it. It's just like now there's no such thing as a pump right now. Is there a pump in the short term? Maybe. Again, we've been stringing together a lot of moves, but I mean, the NASDAQ is still near 20 to 30% decline. Nobody likes to look at that. Again, crypto is still down 60% from its highs. You know what I'm saying? It's like bonds are still down 60% from the beginning of the year after dropping literally and moving another 10, 20% the year before that. So nothing is pumping right now, but could this be the start of it? Maybe, and that is what we got today with Powell, because everybody, if you wanted to be bullish, you reached for it, and everybody just jumped after Powell saying, yeah, maybe we could slow down. The possibility alone could get people very bullish, so we'll see what happens. Let's see what happens. But, ladies and gentlemen, boys and girls, I hope you had a wonderful day. I hope you enjoyed it, but that is the day, okay? So I love you. I hope you're blessed. Do I have anything? I don't know if I have the screen up here. Check out the links. Oh, hold on. How many likes? How many likes, Chad? I know we delivered you some bread. Oh! Almost 3,000. Oh, are you kidding me? Look at the chat, baby. Well, I'm glad to see that you are not whack. Okay, because some of y'all failed the vibe check. That's it. It's very simple. Like the video if you're not whack. Some of y'all whack. I hate to break it to you, but listen, thank you for liking the video. Oh, 3K, baby. Horn, hit it. We did it. We made it. Amen. God bless the call. But for real, man, thank you guys for liking the video. Thanks for holding it down. Again, every time you guys share. Oh, what? I hit another button. Every time you share this stream and like it, I mean, you see what we do. I show up every single day, put 7 hours into it. We're going to get you news. We're going to get you high-quality news and information from all across the world. We'll give you a translation. We can break it down in a simple language. All of it's for free, and we want everybody to always have it for free. So hopefully you know that if you shared the video, if you liked it, and you contributed in here in a positive way, you helped me accomplish that. So thank you, and God bless you, my friend. Amen, amen, amen. And shout out to the members, baby. They hold it down, members. We wouldn't be here without y'all. Again, you guys have helped me over the years, and it's quite humbling. Again, a lot of people have been here for years. They've seen the good, the bad, and ugly, and I think it's just a testament. They know why we're here, why we work hard, and it's awesome to be able to share these moments and have people still by your side and watching everybody grow amazingly. But again, if you help contribute in a way where you kept it positive, good questions, all of that, man, thank you, thank you, thank you, members. God bless you. It's very humbling. We love you. And last but definitely not least, first link for the stream alerts. Stream alerts, we love y'all. It's free $99. Again, like I said, you guys help spread the message. You see what we do. We do this every day. No exaggeration for years. That's why we're saying we don't expect anything from anybody. Free $99. But that's why it's so amazing, man. I know the stream alerts, they didn't miss anything today, any of the plays, but they've been holding it down. But that's what we offer you. If you're here every day, it's free. If you miss anything, we got the stream alerts. But stream alerts, I'm here to just say thank you to you guys. And I hope that you haven't missed a piece of anything going on. And we're going to keep you in the game, baby. And last but not least, definitely not least, everybody. We don't care if you got a membership badge. We don't care what you buy. Like we said, free $99. All that matters is if you show up here with the right attitude, ready to actually play, you genuinely want to learn. Your conversations aren't about, you could criticize and you could disagree, but if you're actually having conversations where you're willing to learn and you're trying to walk away with the right answer, man, that's what we stand for. That's what we're about, free thinkers. If you came in here and did not litter and made it a better place, God bless you. I salute you and you respect you, baby. Amen. That's what makes community. It's everybody. Oh, they don't feel me. Horn. Oh, yes. Yes. Amen. God bless the Cole, baby. God bless Chattadonia. But, ladies and gentlemen, that's the day. Okay, so go check out the links. Go fill out everything. Fill out that prayer request wall and pray for all your Chads in here, man. If it can't flow through you, it won't flow to you. And we praying for you, baby. Pray for me. If you ever want to get me a gift, you can pray for me. Trust me, it goes a long way, man. But we love you. God bless you. Check out all the other links. Better see you on the watch list, or that's on you, man. But that's it. Go read the books, Richest Man of Babylon, Proverbs New Living Translation, and The Strangest Secret in the World. And before we go anywhere, you get one more uncle. Amen. Hey, Chad, that's the day. That's the day. I hope you're ready to go, man. I hope you bring any energy, man. Bring it into the rest of the day. I'm telling you, you better be jacked up off of all. But we're gonna have event after event after event after event, and then the data is going. I'm just telling you though. But the next 4 or 5 days, we only got 2 more left of the week. But even coming into Monday, Tuesday, man, very critical moments. We got stuff today. Let it marinate for a little bit. Let people digest. But stay in the game and get ready, ladies and gentlemen. But Chattadonia, I love you. I hope you have a wonderful day. And that's pretty much it. But just don't ever forget why we're here, man, and why we keep going every single day, every single hour. We don't expect anything, and we keep that glory, that focus on the glory in the future, for we know it's there, baby, and we know the discipline is good for us. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. 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 Let's go, bro. Let's go. All right, man. But that's it. I love you. I'll see you tonight, and I'll see you tomorrow morning. Get ready. Oh, hey, wait, Josh. Hold on. I can't do it. I want a pony. And that's okay. You're not going to get a pony. Look at this guy, Jerome Powell, raising rates. Remember what I told him in 2019? He's a schmuck. Why do you keep raising rates? This guy doesn't know anything. He's a schmuck. He's dumb. I told you I could run the Fed better. I ran the Fed. I am the Fed. I'm better than the Fed. What are these guys doing over here? I'm telling you. They don't have truth Fed. They don't have truth rate kites. What am I? I don't know. Why am I stumbling? I feel like I'm Biden. Am I Biden? Where's my ice cream? Tell you where your ice cream is, punk. Come here, say it to my face. I'll send Hunter on you. He's like a hyena. He'll come after you. What? What'd you do, huh? You know what I did to the deficit? I brought it down, up, higher, lower. Huh? Why? Wait till you see the GDP. I fucked with all of you. They thought it's going to be negative. I'm kidding. I'm not joking. Hey. I'm not joking here. Come on. I tell you what. Listen, we were at the table. We talk about GDP. But I said, I'm down with OPPP. And then I started playing the Run DMX. And it was great. And I said, I'm always OPP GDP till I die. Hunter has it tatted on his back. I'm kidding. But listen. Repeat line. Listen. I see you in the morning. I'm feeling better. And take your take your Scantron, okay? All right. Have a wonderful Passover, Chad. And good morning.